balancing the accounts. Okay. So Jana's business has opening balances and 1st October $1,000 cash and 2,500 in the bank account. There are no balances on any other accounts. Okay, there are no balances on any other. She has the following transactions for the first week of October 1st. Jana put her own money into the business bank account, 8,000. Bought goods for resale on credit from Dev. Paid rent by debit card 1,000. Sales on credit to Yash. Cash sales 700. Paid cash into bank account 500. Paid Dev money owed by check after deducting a 5% cash discount. Paid stationery by cash, $30. So prepare the necessary accounts and cash book to record the transactions. Balance the accounts at 7th October and bring down the balances. So first let us make out list of ledger accounts. Okay. So first let us prepare a list of ledger accounts. So Jana put her cash account. So obviously opening balance, cash account, bank account, or cash book we can say. So this will come in cash book. Okay. So this is cash book. So even discount will come in this. But discount account also we have to prepare. Okay, then Jana put her own money into the business bank account, capital. Bought goods for resale on credit from their purchases and their paid rent by debit card, rent account. Sales on credit to Yash, sales and Yash. Sales and Yash. Put cash into bank account contrast so that we go to cash book itself. Paid Dev money owed by check after deducting 5% cash discount. So you have paid, so you have received cash. So cash discount received. What is discount? Received account. So they went bank, that is already paid for stationery by cash. Stationery. So how many accounts we need to prepare? 1, 2, 3, 4, 5, 6, 7, 8, and 1 cash book. So cash book, this is ledger account as well as book of prime entry. So this is one. So first we'll prepare cash and bank account. So then we'll prepare all these accounts. Simultaneously we'll prepare everything. Okay. So this is a comprehensive problem. So if you have not attended any of the earlier classes, which is based on posting of ledger, preparing ledger, posting of ledger, and all those things. So you can focus on this and you can get a clear picture of what has been done till now. So let us start. First October cash 1,000, 2,500. Bank 2,500. First October 1, cash 1,000 cash, 2,500 in the bank. 1,000 cash, 2,500 in the bank. So it is balance brought down. Balance. Jana put her own money into the business bank account. Own money. Okay, own money is nothing but capital. Own money is nothing but capital. So Jana has put her own money into the bank account. So read from there. So money is coming in back. So money is coming in back. So and what date this is first. So it is on first itself. Okay, on first. So money is coming in back, debit bank account, and who is the given? Who is giving it? So it is capital. So complete the entry. We have right here October 1, 8,000. So it is bank by bank. We have received through bank. Next, bought goods for resale on credit from the 5,000. Purchases and 5,000. Purchases 5,000. So what date? Date is on 2nd, October 2nd. October 2nd. So purchases account debit, their account credit, their account credit. October 2nd. So again this you have to write bill. Again this you have to write purchases. So the entry is complete. Next, paid rent by debit card. So debit card is obviously money will go from bank. So debit card is linked to bank account. So that's why money will go from bank. So we consider it as bank payments. Rent 1,000, debit card, bank, rent and bank 1,000. What date it is? 2nd. Second, rent 1,000. Money has gone out from bank. Okay, so rent amount, money has gone out from bank. So it will come here. So next, so we have to record in the opposite side in rent account. So rent account, so 1,000. So October 2nd. So through bank we have paid. So rent account is an expense. Nominal account always debited. Next, sales are credit to Yash. Sales and Yash. Sales are credit to Yash. Sales. What date? 4th. Sales are credit to Yash. Sales are credit to Yash. What is the amount? 3,000. Credit. Sales is always credited. So Yash. So opposite side. Yash account will be debited. Why are we debiting him? Because we have sold goods to him. Because Yash is the receiver, account that receives. Yash account receives. So debit the account that receives. Next. So cash sales 700. So what is happening? Sales is happening and cash is coming. What date? 4th. cash sales 700. Fourth, cash sales. Cash sales means money will come in cash account. Sales. So we are receiving money in cash through sales. So sales account will be credited on the opposite side. Sales account. So cash. How much? 700. What did? 400. Paid cash into bank account 500. Paid cash into bank account 500. What date? 5th. Paid cash into bank. So cash into bank. Cash is coming in bank. Paid cash into bank. So money is coming in bank. What date? 5th. Cash is coming. Paid cash into bank means money is coming in bank, but going out from cash. So here it will come. So it is cash payment and bank receipt. So October 5th. Same date, same line. So against this, so money is going out from cash and coming in bank. So against this, your trade bank. So against this, your trade cash. Next. Paid the money owed by check after deducting 5% cash discount. So whatever money we have to pay to them. So we have bought 5,000 goods worth 5,000, and we have to pay after deducting a discount of 5% on 6th. We have to pay. So how much we have to pay? 5,000, 5% is 250. 4,750 we have to pay on 6th. So we have paid 4,750. Discount is 250. We have received discount of 250 on 6th. On 6th, we have paid there 250. Discount received is 250, and money is going from bank 4,007. So to whom we have paid? We have paid to them. So to them, when we have paid on October 6th. How we have paid? We have paid bank 4,750 and discount received this we have to transfer to discount received account. Yeah, it is discount received. What date? Only amount on 6th. October 6th. So we will write it. So next, paid for stationery by cash 30. Paid for stationery by cash 30. So what date? It is on 6th. Paid for stationery by cash. cash. So money will go out. 30. Stationery. Stationery. Money will go out. So what you have to do? You have to write in stationery here, October 6th. So through cash, we have paid stationery. Stationery account is always debit, and we have to credit cash. So because cash is going out, debit stationery with 30, cash. Now we have to balance. How do we balance? So what is the most important account here is the cash. So basically what you have to do, you add all this. So 2500 plus 8000 plus 500 is 9.5 plus 10,000, and this side it is 1,000 or 4,750. It is 5,750. 10,000 minus 5,750. So what you have to do? You write down in pencil here. Write down. You write down in pencil here. You write down in pencil. Here also you write down in pencil. So if you write down, you will get 5,750. Here you will get 10,000. So 10,000 minus 5,750. You have to subtract 1 from the other. So 10,000 minus 5,750 is 1,000 minus 5,750 is 4,250. So what you have to do? 4,250 you have to write here. 4,250 you have to write here. So that total on both the sides becomes same. So this side is also 10,000. This side is also 10,000. And this is called balance carried on. So balance carried on. So this side also it is 1,700. Here it is 530. So 1,700. This side is heavier. You write down here 1,700. So here it is 530. 1,700 minus 530. 1,700 minus 530. 1,170. So you write down 1,170 here. Okay. You write down 1,170. So that the total on both the sides become equal. So this side is also same. This is how balancing is done. Okay. So now we remember we have to do balancing only for capital accounts and real accounts, because they will be carried forward for the next accounting period. So cash capital account is 8,000. Balance carried down is 8,000. So this will be carried down to balance carried down. So will become by balance brought down. By balance brought down 8. So only the dates will change. So here it will be October 7th. Here it will be October 8th or October 7th. So balance brought down 8. So then. So purchases account 5,000. So there is no need to balance. This is 5,000 itself. You have to just, this will directly go to the trial balance. So they will account. Here also 5,000. Here also 5,000. So there is no question of balancing here, because the total on both the sides are same. Rent account. This will straight away go to trial balance. You have to write this as it is. Sales 3,700. This will go to sales account directly to trial balance. want, you can just write the total. So this will go to trial balance. Yes, account. So balance carried on. Balance carried on is 3,000. So this will be brought down again. Balance brought down 3,000. So discount received is 250. This will straight away go to trial balance. Stationery is 330. 30 is will straight away go to trial balance. So this is the end. This is over. What else we need to do in this? So balance the accounts at first and bring down the balances. Okay. Bring down the balances. This is how we have to do this balancing. Yes. So okay. So we'll catch up in the next class. dear friends, let's continue with activity 1.2. So this is David Hopkins' latest book. This is from David Hopkins' latest book. Yes. David Hopkins' latest book. So complete the entries for the following table with information taken from the accounts of a trader. So name of accounts to debit, name of accounts to credit. So what you do basically, you start with your own. You see the question and answer yourself. Then you can compare with the answers you understood. Okay, paid rent by check. So what is happening? Paid rent by check. Money is going out. So money is going out means credit what goes out. So credit what is given away. So it is bank. So money is given. So bank account. So bank. So we have to write here bank. Paid rent. So rent is an expense, right? So rent is an expense. Debit all expenses versus rent account. So postage and stationery paid by check. Again, money is going out of bank. So postage and stationery is an expense. So debit. Postage and stationery only you can use. Postage. So here, why? Because money is given. Paid what percent. Telephone bill paid from the bank account by standing order. So whatever it is, whether it is standing order or whether it is given whatever. So money will go out from the bank. So bank account. So here it will be telephone. So heating and lighting bill paid from the bank account by standing order. So heating and lighting bill, heating and lighting. So heating and lighting expense. Right. Paid wages by check. So what is happening? Wages. Wages account by bank. Why? Because money is going out to the bank. Rent received directly into the bank account. So what is happening? Your money is being received. So bank account will be debited because money is being received. Bank account will be debited. Rent received. So rent received. So you specify because rent can be paid. See here rent is paid. So here the rent is received. So or you can write rent expense account or rental income account you can write. So rent received also you can write or rent paid account also you can write. But you have to specify because rent paid is separate and rent received is different. So this is an expense. Rent paid rent is an expense. Okay, whereas this is a revenue. So always we have to specify because we cannot mess up. So that is what is disclosure concept, which says that we have to disclose everything in detail. So paid bank interest received into the bank account. So what is happening? We are receiving money in bank and we are receiving interest. So interest received we can interest received. So again interest can be received also and paid also. So that is why we have to receive specify whether it is received or paid. Okay, so that's why we have to specify whether it is received or paid. So business owner takes money out of the bank account for personal expenses. So what is happening? Drawings is happening. Drawings. So money is going out from bank, right? But out of bank account. So bank. Loan received from a friend. B. So what is happening? You are receiving loan from a friend. So all the transactions are assumed they are to bank. So you write money is being received in bank account. So, but who is giving it? It is Lee who is giving. So, credit the giver, credit the account that gives. So, it is the Lee who is giving. So, Lee account. Bank account, Lee account. So, money is coming in bank and Lee is the person. Lee is the account that is giving. Loan repayment made on loan from Lee. So, what is happening? Lee, money is going out from bank and who is receiving? Lee. Lee is receiving or giving. So, Lee is receiving. When Lee pay, the loan Lee will receive. So Lee account will be debited because debit the account that receives. Okay. So be specific, be clear which account will be debited, which account will be paid. You have to be very clear. So then purchases paid by debit card. So whether it is debit card or a check or whatever, always it is money will go out from bank. So purchases upon debit to bank. Bank account because money will go out when you pay out from bank. Debit card obviously money will go out from bank only because unless you have money in bank, money cannot be debited by bank. Sold goods and bank the take. So what is happening here? Money is coming in bank. And what is happening? Sales. Sales is a revenue. Sales is a revenue. Sales is a credit. So credit on incomes and gains. Revenue. Return goods to supplier and bank the refund. So you are returning the goods to supplier. So supplier is receiving. So you will debit supplier. And money will go out from bank because money is given away to bank account. So refund money to customer by check. Oh, sorry. So see, return goods to supplier and bank the refund. Return goods to supplier means what is happening? You are giving away the goods to supplier. Return goods to supplier. So you have purchased the goods and you are giving it away. So credit the receiver, debit the receiver, credit the receiver. Debit no. Yes, but return goods to supplier and bank the refund. And bank the refund. You are receiving the refund. So what we have to do? We have to receive. We are receiving. So bank account will be debited. Bank account will be debited. And we are returning goods to supplier. We have returned goods to supplier. So it is called purchase returns. It is called purchase returns. Correct? No, it is purchase returns, not supplier. Okay, so this is not relevant. It is purchase returns. Purchase returns. So refund money to customer by check for goods return. So this is sales. So when we have sold the goods, but we have received back. So it is exactly reverse of sales. Sales return. Sales return, and we will credit bank because money will go. So carriage inward paid by check, whether it is carriage inward or carriage account, money always go from bank account. So carriage inward, we have to specify whether it is carriage inward or not. Carriage. So carriage outward. So carriage outward is also an expense. Whether it is carriage inward or outward, it is always an expense. So money will always go from bank. So here it will be refunded goods to supplier and bank the goods. So you have received the money bank account. Will be debited and purchase returns will be credited. Purchase returns are opposite of purchase. Purchases are debit, right? Purchase returns are always credit. Okay, purchase returns. So this is how it is. So this is activity 1.2. So we'll continue in the next class. Students, welcome. So today we'll discuss practice questions from
David Hopkins latest book. So before seeing this complete, what you can do is you can just have a look at. You can try solving this question on your own. So which of the following financial transactions is most likely to require a debit entry? What is debit entry in the bank book? What is being received? So what you'll receive when you purchase, you'll not receive. When you rent receivable, obviously you'll receive. So it will be debited. Sales returns you don't receive. Wages you don't receive. So this is the thing you receive. So this is the answer. Amir bought goods for resale and paid for the goods to be delivered. Which entries in Amir's books record the delivery cost? Amir bought goods for resale and paid for the goods to be delivered. Which entries in Amir's books record the delivery cost? So money will go out. Obviously, money will go out. Create a bank account will be created. Money will not come in. So money will go out. So then, when you are selling, Amir bought goods. When you buy, you pay carriage goods. So this is the, so see the, a trader takes money from the business bank account for personal use. Which entries record this in his books? So money from business bank account for personal use. Which entries record this in his books? So for personal use drawings. So money will go out. So it cannot be we receive. When we receive, you do it back. When we receive, you do it back. So obviously, when, this cannot be the entry. So drawings will be the correct entry. So these are practice questions for David Hopkins latest. So what you can do is you can just have a look at the next problem. So below are the financial transactions for Villas the business opening necessary ledger accounts and post the following financial transaction to them. All transactions use the web account. Here are coming business the paying 20,000 into a bank account. Here are the non-important financial transactions. Purchase machinery, paid rent, bought goods, so paid carriage inwards, sold goods, paid for heating and lighting, received rent, bought more machinery, bought more goods. So what you can do is you can try working out this question on your own. And suppose you have any doubt or if you are unable to do it, so you can leave a comment in the description in the comment section of the video. So you can I will just help you out. So I will work out the problem and so till then have a good day. Bye.
Dear friends, welcome to Shasha's virtual classroom. So today we'll discuss TT 2.1. So this is David Hopkins' latest book, the latest book. So we'll start. So below are the financial transactions for Max Business, personal transactions to the ledger accounts. All goods are bought and sold on credit. Okay, so all goods are bought and sold on credit. So basically, so no bank account is involved here. So other than other than cash, cash transactions. How to record credit transactions? This is credit transactions. So where no money is being received or paid. So it was easier there to find out So it would have on one part, the other part would have been easy, but here it looks somewhat somewhat complicated. So, but it's easy if you understand the main concept here. What is the main concept? So basically, we need to know the personal account. The personal accounting. So whether this account is receiving or giving. So we need to know this. So purchase goods from Tina that cost 2000. So when we purchase goods from Tina, Tina is the account that gives, right? Tina is the account that gives. Tina is the account that gives. Tina gives. Okay, when we purchase, obviously Tina gives. So what you can do is you can try working out this question on your own. So then you can compare with the answer here. So first let us make a list of accounts that are necessary. So we need to prepare Tina's account. So we need to prepare Tina's account. We need to prepare purchase account. Because goods are purchased from Tina, right? So purchase account, Tina account. So then sold goods to Ali. So sales account, Ali account, return goods to Tina. So return goods to Tina means we return only those goods which we have purchased. So it is purchase returns. Purchase returns. Then purchase goods from Lim. So Lim account. Purchase account is already there. So Lim account. Sold goods to Omar account. Because sales account is already there. Omar account. Return goods to Tina. Return goods to Tina. Purchase returns again. So Ali sold. Ali, all goods sold to Ali have been returned. So have been returned means we have received back. So it is sales returns. Sales. So basically we need to prepare 1, 2, 3, 4, 5, 6, 7, 8 ledger accounts. Basically we need to prepare 8 ledger accounts. So let us proceed. So let us start with purchase account. So purchase account. So always the ledger should be so always date should come. Always date. Don't miss to put the date and the currency. Date and the currency. Always. Okay, write always the heading. So which account you are preparing. So purchase account. Purchase account is always an expense. So purchase account is always an expense. Always it will be debited. So see, this is how you have to remember. So that the logistics will be clear. So how much, what is the worth of goods you have purchased, and it is on October 1st, 2000. October 1st, 2000. So purchases. So purchases account debited with 2000. This is what it means. So a lot of students, what they get confused. So they write something here, no? So they think that if they have debited, no, it is not like that. Purchase account debit means purchase account is debited. With whom? From whom you have purchased? You have purchased from Tina. So Tina account. So Tina. So your purchase from Tina. See, purchase account has been debited and Tina's account has been credited. So this is the completion of the entry. So we have to prepare Tina account. So how do you prepare Tina account? So this side is always debit, this side is always credit, always date. You have to write always date, always currency. So what is the amount? So Tina account will be credited. Tina account will be credited means you have to write here. So Tina account is credited. See, this is what. So a lot of students they get confused again here. So Tina account credited means Tina account is credited with what? It is credited on October 1st because of purchase. So this is known as completion of double entry. This is known as completion of double entry. So here you written 2000, here also you written 2000. See, debit 2000, credit 2000. Obviously, debit is equal to credit, and one account is debited, other account is credited. So this is what is the first thing you learn in accounts, like what one should be debited, the other account will be credited. So this is very important. So next, coming to the next, sold goods to Ali for $300. So sale sold goods to Ali. So now we have to prepare sales account and Ali account. Sales account and Ali account. Sales account. Ali account. So how much? What is the value? What is the date? Always remember to put the date. October 2nd. Date. October 2nd. It is always credit. This side is always debit. How much? 300. See, sales is a revenue. Sales is always credited. Credit all incomes and gains. Sale is always credited. Sale account is credited by Ali's account. So with a debit to Ali account. With a debit to Ali account. So this is what it means. So now Ali account will be debited. So what date? October 2nd. Ali account will be debited. So Ali account will be debited. So first sales. So now one more thing. What is it? So now here we have to see what is Ali doing here. So what is Ali? When we sell goods to Ali, Ali is the account that receives. Ali receives, right? Ali receives. Ali receives. Debit the account that receives. That is what we learned in goods accounts. So Ali receives. So that is why we have to debit. So debit the account that receives, credit the account that gives. So this is the main thing you should understand. So very important. Yeah, very important. So a lot of students they get confused with personal accounts. Rest of the accounts they do easily. Say nominal accounts expenses they write off as an expense. Income account they write off. Revenue account they also write. Assets account debit what comes in, credit what goes out, that also they write. But in personal account they mess up. They get confused. They think from the point of view of max business, but they try to think what max is doing, whether max is giving, max is receiving, or something like that. No, actually, you have to see what Tina, what position is in Tina. So Tina gives, Ali receives. So this is very, very important. Okay, now it has been clear to you. So now everything is easy. So then the entry is complete. Next. sales account is done, Ali's account is done. Now come to the next one. What is the next entry? Return goods to Tina that had cost improvement. So now you have returned goods to Tina. So here what is happening to Tina? Tina is receiving. Here Tina receives. So Tina account will be debited. Debited to 200. Tina account will be debited. Tina account will be debited with 200. On what date? Tina account will be debited with 200 with on what date? On 4th October. October 4th. So October 4th, Tina account is debited with 400. So, but why are we debiting Tina? Because we have returned the goods to her. So, purchase returns. Purchase returns. So, purchase returns. We have to open one account called purchase returns. This is always debit. This is always credit. Always in dollars. This in dollars. So purchase returns. So purchases is always a debit. So purchase returns is exactly reverse of that. It is always a credit. So what is the amount? 200, right? 200. We have to credit. This is how we have to remove. There are so many ways of removing things. So why? Because it is on October 4th and Tina's account. Tina's account. We have to credit purchase returns with 200 with a debit to Tina. This is how you have to read and you have to understand. You have to understand accounts. Very important, so that the logical flow of concepts is very clear. Okay, so very clear. Logical flow of concepts is very clear. Now next, purchase goods from Lim that cost 2400. So Lim is another person. So again, what is Lim doing? When we purchase from Lim, obviously Lim gives. When we purchase from Lim gives. So that's why we have to credit Lim. We have to credit Lim. And purchases is an expense. We have to debit purchases. Purchases account is already there. So we have to just write there. Purchases account is already there. We have to write there 2400. What date? Date is very important. 8th. No, 8th. From whom? From Lim, isn't it? Yes, Lim. So you are right, Lim. So purchase account is debited with Lim. Purchase account is debited with credit to Lim, and Lim account will be credited. It is Lim account. You have to prepare Lim account. Lim account. You have to. It's October. So why are we creating Lim? Because we purchased from him. Understood? This is how it is. This is how you have to understand the concepts. Very clear, very clear. Now it should be crystal clear. Now let us move forward. So then, sold goods to Homer for 1100. Sold goods to Homer. So when we sell, obviously Homer will receive. So Homer is the receiver. Account Homer receives. Homer receives. So Homer receives. So Homer account will be debited. Debit the account that receives, right? So Homer account will be debited and sales account will be credited. Sales account is already there, so we have to prepare owner account and we have to write in sales account. So owner account and sales account. Owner account. Owner account. So owner account will be debited. Why? Because he is receiving 1100. What date? 9th. October 9th. 1100. October 9th. 1100. Owner account is debited. Why? Because we have sold in sales. Sales. Owner account is debited with sales 1100. So now owner account is debited. Sales account is already there. So a sales account we have to write now. We have to write it in sales. Owner account. October 8th. Owner account. 1100. Is it clear? So this is how it is. Okay. So next. Return goods to Tina that had cost 100. So we have returned goods to Tina. Okay, we have returned goods to Tina. So return goods to Tina means Tina will receive. Account Tina receives. So when she receives, her account will be debited. So Tina receives. Return goods to Tina. So it is again we have to return. So it is purchase returns. Purchase returns to Tina 100. So and it is on 10. Purchase returns Tina 100. Purchase returns Tina. Purchase returns Tina. Tina. Where is Tina? Purchase returns Tina. Why we have debited? Purchase returns. So next. All goods sold to Ali have been returned. So all goods sold to Ali have been returned. So we have sold to him. So when we get back, so it is known as sales returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali has returned. So we have sold to Ali, Ali has returned. Ali is the giver here. So credit the giver. So we have to Ali gives us back. Ali gives us back. We had sold him. At that time we had given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali, 11 sales returns and Ali. Sales returns and Ali. So we have to credit him. So we have to credit Ali because he is the giver. He is the giver. Credit the giver. He is the giver of the goods. So October 11th. Why are we crediting? Because of sales returns. So now sales returns. One more account, sales returns. Sales returns. So sales returns. Sales is always a credit. Sales returns is exactly reverse of that. It is always a debit. So here the amount should be here and it is on 11th, October 11th. And what is the amount? Sold to Ali 300. So you have to write 300. Ali 300. sales returns 300. So there is no more. So he has returned everything. So sales returns account 300. We have to debit. Sales return account will be debited with his account 300. So this is how it is. Okay. So next, this is activity 2.1. So now what you can do, you can try working out activity 2.2. So below all the financial transactions for Penn's business, post the transactions to the ledger account. All goods are bought and sold on credit. Bought goods from Ting that cost 5,000 less trade discount of 15%. So sold goods to Lee for 1,000. So return goods costing 500 less discount to Ting. So purchase from V that cost 4,800 from trade discount before trade discount of 20%. Paid Ting all money owed. Paid V for goods bought on 15 November. Received full payment from V. So what you can do, you can try working out this question on your own. And in the next class, you can cross check with the solution. So we will discuss this again in the next class. So till then, have a good day.
Dear students, welcome back to Shasha's virtual classroom. So this is activity 2.2, credit transactions, from credit transactions, and this is David Hopkins' latest book. So below are the financial transactions for Peng's business. So these are the books of Peng's business. Penge or Peng or whatever. So business, post the transactions to the ledger accounts. Okay, so post the transaction to the ledger accounts. All goods are bought and sold on credit. So no cash payments, no bank payments again. So all goods are bought and sold on credit. So date is number first. So let us make the list of ledger accounts that we may have to create. So bought goods from Ting. So purchases account and Ting account. Purchases account, Tinge account, Tinge account. So cost 5,000 less trade discount. So should we create trade discount? Should we create trade discount? No, never. Okay. So we should never create trade discount, and because trade discount is never shown, but the transaction is shown at the net of trade discount. So 5,000 minus 15%, 5,000 15% of 5,000 is 750. So 4,250. The transaction will be shown at 4,250. So purchases account, Tinge account, sold goods to Lee for 1,000. So sales account, Lee account. So then sales account, Lee account, 1,000. So return goods costing 500 less trade discount to Tinge. So again you are returning the goods. This is return goods. So you are returning to Tinge. So who is Tinge? So it is he is a supplier. So we are returning goods. So returning means those goods only which we have purchased will be returned. So these are purchase returns. So purchase returns. So purchase returns. So should be less 5% trade discount. So 515 is a 45. So 45. 515 is a 45 means 15% of this. So 4 and then 65. 65 or 55? 55. Correct now? 5, 15 the 45, so 55. 55. Okay. So purchase goods from V. So again purchases, purchase account is already there. So V. So cost 4800 less trade discount of 20%. So this should be recorded at 4800 minus 20%. So 4800 minus 20% is so 48. 3840. So 3840. So you have to record it at 3840. So then, so paying all money owed. So whatever money you are owed, you have to pay to, you have paid to Tinge. So paid way for goods bought on 15th November. So you already paid way also. So which account will be there? Bank account. We have to write bank account. We have to open bank account also. Received full payment from lay. So that will also be recorded in bank account. So how many accounts should we open? One, 2, 3, 4, 5, 6, 7. We have to open 7 accounts. So first you bought goods from Tinge that cost 5,000. So first you prepare purchases account. Purchases account. So purchases account. So this side is always debit. This side is always credit. So purchases account will be debited with 4,250, 4,250. Because purchases is an expense. So expense account is always debited 4,250. So date always you write the dollars. Amount you have to always write. Don't forget to write the dollars. And what is the date? November 1. And it is sold to, it is bought from Tinge. So November 1. So see purchases account debit to Tinge. Okay, so we have to complete the entry by writing it to Tinge account. Tinge account. So Tinge account will be credited. Why? Because he is the giver. When you purchase, Tinge gives. So his account will be credited. Why? Because we have purchased from him. Okay, so this is how we have to write. Next. The entry is complete. So the entry is complete. Purchases account will be debited with Tinge. Tinge account will be credited with purchases. So next. Sold goods to Lee for 1,000. Sold goods to Lee. Sales and Lee. Sales account. Lee account. Sales account and Lee account. So how much is sales sold goods to Lee for? 1000 and November 5th. November 5th. 1000. November 5th. 1000 credit to sales because sales is an income. So credit all incomes and gains. So 5th. So Lee, because Lee is the receiver of goods. So this side is always debit. This side is always credit by default. This is always debit. This side is always debit. This side is always credit by default. So dollar November 5th. So 1000. Why are we debiting Lee? Lee because we have sold him sales. So we have sold him. So debit credit. Sales account will be credited because it's an income. Lee account will be debited because he is the receiver of the goods. Okay. Then comes next. Next. Return goods costing 500 less discount to tinge. So we are returning the goods worth 500, but after discount it is 455. So return the goods means these are purchase returns. Tinge account is already there. Purchase returns, tinge. So purchase returns. So purchase returns account. Purchase returns account. So what is the value? 455. So purchase returns. Purchases is a debit. So it is always debit balance. Purchase returns is reverse of purchases. So it's a credit. So 455. So what date? When we have returned? We have returned on 10th. November 10. November 10 we have returned. November 10. So why? To whom we have returned? We have returned to Tinge. We have returned to Tinge. So Tinge. So what we have to do? We have to debit tinge. Now we have credited purchase returns. Now we have to debit tinge. Tinge we have to debit. So purchase returns. So November 10. November 10. November 10. Purchase returns. We have to debit tinge. 400. Always write the dollars. Don't forget. So purchase returns. So purchase goods from V that cost 4800. So 3840. So purchase and V. And it is on 15th. 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 November 15th. Purchases account will be debited 3840. 3840. So purchase account will be debited 3840. We have purchased from way. V. Okay. So that's why we have to write V here. So we have purchased from V. So purchases account will be debited. Now we have to write it to V account. We have to open, if it is not there, we have to open V account. So when we purchase we would have given us the goods. So November 15th, November 15th. So 3,840. So why we are creating V? Because we have purchased. Because we have purchased. Purchases account. We have to credit V with purchases 3,840. So now coming back again, next entry. So always write the dates. Next entry. Paid tinge all money owed. Paid V for goods bought on 15th November. So we have bought only once. So we have to pay tinge. We have to pay V, and we have to receive from Lee. So received. 20th we have paid to tinge and V. 20th we have to pay. We have to pay to tinge and V. So bank account. Bank account. Assume that all entries are made in bank, or you can write cash account also. So we have to pay to tinge and V. Tinge. How much we have to pay to tinge? Obviously the balance. When we have paid on November 20. November 20. So November 20 we have paid. So bank. So we have paid how much? 4250 minus 455. 4250 minus 455. So it is 3795. So we have to pay 3795 to tinge. So we have paid 3795 to tinge. Complete the entry. Complete the entry. How we complete the entry? So we have to write in bank account. Bank account. So November 20. So we have paid to tinge. We have paid 3,795. So we have to pay to another person. We have to pay to V. We have to pay to V. So let us see. We have to pay to V. V, how much we have purchased? We have purchased 3,840. So obviously we have to pay him 3,840, and it is on November 20th. November 20th, we have to pay him. So 3,840 we have to pay. So what account will be debited? Bank account will be credited. V account will be debited. Why? Because V is the receiver. When we pay, he receives. So now bank account will be credited. Why? Because money is going out. So V given away. Cash is given away. Money is given away 3,840. So next, what is there? Next, received full payment from Lee. Received full payment from Lee. So we have received full payment from Lee. So let us see how much we have to receive from Lee. So we have to receive 1,000 from Lee. So we have received, what date we have received? We have received on November 25th. November 25th. We have received 1,000. So obviously we would have received from bank account. So you can write bank or cash also. So by default we are assuming that we have received through bank. So that is assumption. So bank. So November 25. So from Lee, right? Lee 1,000. 1,000 from Lee we have received. Over. That's all. So we have finished. What else is required? Below are the financial transactions for Penn's business. Post the transactions to the ledger accounts. All goods are bought and sold on credit. So we have finished. So this is the answer. So you can, so basically what you can do is you can try answering yourself. Then you can compare checking with the answer here, so that you are confident that everything is right. So purchases account will be debited. So these are the amount of purchases. So tinge account, we have paid everything, so there is no amount left over. Sales account is credited. So then Lee account is debited and credited because we have sold and we have received also. Next, purchase returns 455. Way account, we have purchased, we have paid. So bank account, we have paid, we have received. So that is the end. So activity 2.2 is done. So dear friends, welcome back to Shasha's virtual classroom. So this is activity 2.3. So let us discuss this problem. So complete the entries for the following table. What you can do, you can just try answering yourself and then you can compare with the solution here. Sold goods to Dia on credit. So complete the entries for the following table. Name of account to debit, name of account to credit. So sell goods to Dia on credit. So sale account will be credited. Sale account will be credited, Dia account will be debited. Why? Because sale is an income, credit all incomes and gains, and Dia is the receiver of the goods. When we sell, Dia has received the goods. So Dia is the receiver of the goods, Dia account will be debited. Buy machinery for use by business on credit from Joints Limited. So since you are buying business machinery for use by the business, so machinery account, machine is coming in asset account. So real account, debit what comes in. So machine account, machine is coming in. And who is the giver? Who is the giver of the machine? Joint Limited is the giver of the machine. Joint Limited. So then purchase goods on credit from Allen Trade, discount received. So we have purchased goods on credit from Alan. So whether it is cash purchase or credit purchase, purchases are always purchases. So you can write purchases, and we have taken Alan is the giver of the goods. Alan, that's all. So discount received will never be recorded because this is trade discount. Trade discount is never recorded. So net of amount will be recording. Return goods bought on credit to Alan. Return goods bought on credit to Alan. So whatever goods we had purchased, we are returning it back. So these are called purchase returns. So purchase returns are exactly reverse of purchases. So exactly reverse of purchases means purchase returns. So when we return the goods, Alan will receive. So debit the receiver. Debit the account that receives, Alan receives. So bought goods on credit returned by Dia. So goods bought on credit returned by Dia. So what has happened? We have sold goods to Dia on credit. So we are receiving that. So sales, opposite of that is sales return. So we have to credit Dia because Dia is the giver of the goods. Dia has returned the goods. Returned goods to a supplier and bank refund. So what has happened? We have returned the goods and we have received the money. So bank money will come in bank account. So bank account. So return goods to supplier. So some supplier, so they have not mentioned the name. So we can just write return goods to a supplier. So it is purchase returns. Exactly reverse of purchases. So purchase returns. So because of purchase returns, we have received money. We have deposited in bank. So refund money to customer by check for goods returned. So now we have to give the money back. Some customer has given us money, so he has given us back the goods. So it is sales returns. Sales returns. So now pay joint limited for goods bought. So money will go out, bank account. Money will go out. So who will receive? Joint limited will receive. receive full payment from DIA less cash discount. So we have received payment from DIA, receive full payment from DIA. So we have received money in bank, and we have given discount also. Discount allowed also will come because we have allowed discount. Discount allowed is a loss. So even that. So and we have to credit DIA because she is the giver of money. So pay Alan for good spot less cash discount. So here we have to pay Alan. Alan is the receiver of money, so Alan account will be debited. So we are paying. So money will go from bank, and discount received is again discount received. So the amount we are not going to pay because of discount. So that is gain. So discount received is a gain. So these are the entries. So what you can do normally. So this is activity 2.3 David Hopkins, the latest book. So, okay. Dear friends, welcome back to Shasha's virtual classroom. This is practical practice questions from David Hopkins, lesson number 2, credit transactions. So which of the following transactions? So before attempting this, before having a look at these answers, you can try answering yourself, and you can just cross check with our solutions with the discussion. So always get back to me in case you have any doubts by way of comment in the below the. So which of the following transactions is most likely to require a credit entry in the bank account? So credit entry in the bank account is nothing but payment. Okay. So which of the following transactions is most likely to require a credit entry in the bank account? Cash discount. Cash discount will not come because money doesn't go or come in. Cash sales, money doesn't go or come in. Payment to a customer. So when we pay, obviously money is paid, this money is credited. So bank account is credited because payment by a customer. Sorry, see, this is payment by a customer. Payment by a customer means we will receive, will not pay. So payment to a supplier. Yes, payment to a supplier is something we pay, so money goes out. This is the answer. So Joe's bought goods on credit from Maria for rupees 200 less trade discount of 30. So Maria bought goods on credit from Maria. So Joe's bought goods on credit from Maria. So Joe's bought goods. Okay, Joe's bought goods on credit from Maria for 200 less trade discount of 30. So 170. So transaction will be recorded at 170. Which entries record this transaction in the Joe's books? So for Joe's has bought, right? So it is a purchase for Joe's. It is a purchase. So we have to be careful in seeing, analyzing. So what Joe's bought, no? So it's a purchase. It is a purchase for Joe's, and it is Joe's books means it is purchase. In Maria's books it's a sale, but in Joe's books it's a purchase. So be careful. So purchases. So purchases will be debited 170. So Maria will be credited 170. So discount is never recorded. This will never come. It will never be recorded at cross 200. Never at 200. Never at 200. Never at 200. So this is the only correct entry. So purchases account 170, Maria account 170. This is the right answer. Okay. So next. So next, Myra sold goods on credit to Zara on 1st July. Myra sold goods. Okay, Myra sold goods to Zara on credit to Zara on 1st July. The goods are priced at 1000, but Myra allowed Zara a trade discount of 10%. So they will be recorded at 900. Okay, and offer a cash discount of 2%. So will be recorded at 900. So cash discount of 2% is nothing but 18 bucks. So this will be recorded, this will be recorded. She pays within 7 days. So now which entries record his transaction in Myra's books? So Myra has sold, so sales entry will be recorded. Myra has sold, sales entry will be recorded. Sales entry will be recorded. Okay. So it will be recorded at 900. Yes. Zara will receive. Zara will pay 882 and discount allowed is 18. So this is the entry. So it cannot be this, it cannot be this, it cannot be this. So this is the entry. So three things will be affected. So 882. So this is the entry, not this, not this, not this, not this. These are exam style questions, and this type of questions will come in AS level. Okay, so be careful. So try to understand, be clear in analyzing the question and write the correct answer. So below are financial transactions for Rachel's business. Post all the transactions to the ledger accounts. All goods were purchased on credit. So this is a ledger book. So you can try answering this. Suppose you have any doubts, you can get back to me. So as a comment in the below this video. So we'll catch up in the next class with a new lesson. So till then, have a good day. Dear friends, welcome back to Shasha's virtual classroom. This is activity 3.1 from subsidiary books. So books of prime entry. Okay. So subsidiary books are books of prime entry. So these are known as books of prime entry. So books of prime entry. So Junior had the following credit purchases. Junior is the name of the trader. So Junior had the following credit purchases and purchase returns. Credit purchases, purchase returns during the first 10 days of November. So first November purchase goods from Cora for 10,000 trade discount. Okay. So purchase goods from Cora for 10,000 less trade discount of 20%. So this will be recorded at 8,000. So this will be recorded at 8,000. So Cora allowed a 5% cash discount for payment within 10 days. So 5% cash discount means, so 5% of this is 400. So then purchase goods from Prem 14,000 allowed 2% cash discount. So there is no trade discount, only cash discount is there. So it will be recorded at 14,000. And cash discount will be allowed at the time of making payment. So 2% of this is 280. Return goods to Cora cost 400 less 10% less trade discount. So Cora, so you are sold to Cora at a discount of 20%. So you are receiving back 400. So 400 minus 20% is 4 to the 8. So 80, 320. So it will be recorded at 320. Purchase goods from Cora for 16,000 less trade discount of 20%. So this will be recorded at 16,000 minus 20%. 12,800. It will be recorded 12,800. So cash discount is 5%. 640. Send checks in full settlement of their accounts to Cora and Prem. So payment has been made. So enter the transactions of for November in Junior's books of prime entry. So what are the books of prime entry in this instant case? The books of prime entry are purchase, journal, record all purchases, individual purchases, and purchase returns journal, purchase returns journal, record all purchase returns, and cash book, to record cash payments and discount. So cash book for payments and discount, cash discount. So 3 books we have to write: purchase journal, purchase returns journal, cash book. So these are the books of prime entry, 3 books of prime entry, and post them to the ledger accounts. So how many ledger accounts are there? So purchase account. Remember, purchase account is different, purchase journal is different. So purchase return journal, purchase returns account. So then Cora account, Prem account, discount received account, so these are the ledger accounts we need to prepare: 1, 2, 3, 4, 5, 6. So we have to prepare 6 ledger accounts. So the problem looks very small, but these are all procedural things which you need to know. So to learn comprehensive accounting practices so that everything is clear. So because see, future problems, I mean future lessons will be based out of this. So unless the understanding is clear on this, you will not understand the future concepts. So that is why you should never sort to shortcuts in. So what most of the students they try to adopt shortcuts. They try to score very high only by practicing near the exams. So which happens very rarely, and it is not advisable to do that. So it is always advisable for you to learn from day one, so that you are perfect in everything. Every understanding, each and every understanding should be clear. It should be very clear. Okay. So now we will start with this. So if you have already learned in school, you can try working out this question on your own, and then you can cross check with the solution here. So this is how we are going to proceed. Okay. So first we need to prepare purchase journal, purchase returns journal. Okay. So let us first prepare purchase journal. Purchase journal. So what all will come? Date will come. Name of the supplier, because we purchase from supplier. Name of the supplier. Invoice number. Amount. Dollars. Okay. So first, what is the date? So we have purchased on 1st November. November 1 we have purchased. So we have purchased from Cora. We have purchased from Cora. Invoice number is given. Invoice number is not given, so don't worry. So it should be recorded at 8,000. See, remember always, trade discount is never recorded, never shown anywhere. So it will always be recorded at net amount. So 8,000. It will be recorded at 8,000. Invoice number is not given, so it will be recorded at 8,000. Next, purchase goods from. So again, goods from payment, that is on 2nd November. So 2nd November from trade. So the amount is 14,000. Amount is 14,000. Next, again you have purchased goods from Cora for 16,000. So at a trade discount of 20%. Again from Cora, what date? It is on 5th November. You have purchased on 5th November from Cora. So how much? What is the amount? 12,800. So what is the total purchases? So 8 plus 14, 22, 22, 34,800. So these are the total purchases. This is purchase journal. Now we need to prepare purchase returns journal. Purchase returns journal. So what is the date again here? You have to write the date. You have to write name of the supplier. So and so what date? Return goods on 4th November. So November 4. So what is the amount? 320. So from to whom we have returned? Cora. Cora 320. And we have received credit note. See, remember one thing. So when we are writing the purchase journal, we are recording individual. Okay, so we are recording individual entries. See, very important. Okay, so this way you will remember this again. When you will remember when you are preparing control accounts, when you are reconciling control accounts, at this time, at that time you may need this knowledge. So at that time you may need this knowledge because this is the logistics you have to understand. This is the logistics you have to understand, and this thing you have to keep in mind when you are doing control accounts, lesson of control accounts. So these are all interrelated. Okay, so this is how it is. Then next, what is the next prime entry? Book of prime entry, cash book. So cash book. So we have to prepare cash book. So cash book what all will come? Discount column will come. Since we'll be paying So this side is always credit, this side is always debit. And so this is discount column. This is discount. This is cash column. So it is in dollars. So this is also in dollars. So here, next, first, what is happening here? So we have purchased no cash transaction, no cash transaction, no cash transaction, no cash transaction. Check, send checks in full settlement of their account to Cora and Frame. So we have paid to Cora and Frame. So we have paid to Cora and Frame. But here we need to calculate. So we need to calculate because Cora, what are the transactions you have done with Cora? Cora you have purchased, you have returned, again you have purchased, returned. Purchased, returned. So 8,000 plus 12,800 minus how much you have returned? You have returned 320 worth 320. So this gives 8,000 less 12,800 minus 320. You have to pay 20,480. You have to pay 20,480. But what is the discount? So discount. So discount 400. But you already you have returned goods worth 320. So what is the discount you will receive here in this case? In this case, the discount is cash discount is on the net purchases. So 8,000 is the purchase. 8,000 is the first purchase. Then second purchase is 12,800 and there is a return of 320. So purchase, return. So net purchase is 20,480 and discount is 5%. So be careful, you have to see sometimes the rate of cash discount will be different. So in this case, here also it's 5% cash discount, here also it's 5% cash discount. So there is no variance and it is the same. That's why you can take 5% cash discount on this. So you will have to pay 20,480. On that 5% will be 1024. 1024. So how much you have to pay? You have to pay 19,456. 19,456. So to Prem, how much you have to pay? Prem, so the entire amount you have to pay. So Prem is 14,000. Discount is 280. Discount is 280. 14,000. Prem 14,000. Minus 280. 13,720. So you have to pay 13,700. So this is the amount you have paid to Prem. So what date you have paid? So date is very important. Don't forget to write the date. The payment is made on 9th November. So November 9th. So you have made the payment on November 9th. So this is the cashback. This is how you have to receive record. So discount column 1024 Prem 280. So cash and this. So this is done. So cash account is done. So now we have to prepare the ledger accounts. Okay. So now we have to prepare the ledger accounts. So what are the various ledger accounts we need to prepare? Okay. So now we have to prepare ledger accounts. So purchase account is the first. So first we prepare purchase account. So we have to post all the transactions at 10th November. So what we have to do 10th November. So November 10. So what is the date? What is the amount of purchases? Total purchases? We have already done purchases, right? So what is the total purchase? We have already prepared purchase register. Purchase journal we have prepared. So 34,800. So we have to prepare 34,800. So you have to write 34,800. 34,800. So purchase journal. See, this logistics is very important. So when you're doing control accounts at this time, you will come to know. So you may have to reconcile so many. It's very important topic, often asked in the exam. So you have to be very careful. You have to be 100% clear on this concept. So when we prepare purchase journal, we record individual entries, but we enter it in purchases account. We record the total of that. Okay. Similarly, purchase returns. Purchase returns is exactly reverse of that. So November 10, purchase returns, journal. So what is it? 320. So now we have to prepare other accounts, the Cora account. So we have purchased from Cora, so Cora account will be credited. So always write the amount. Always write the amount. Cora account. So Cora account will be credited. So what date when we have purchased? So you can see from here itself. Cora we have purchased on 1st and 5th. 1st and 5th. 1st and 5th. So on 1st it is 8,000. On 5th it is 12,800. 12,800. So this is purchases. Purchase. This is purchase. Remember, you are writing purchase here, not purchase journal. Okay. Purchase. 8,000. Purchase 12,800. So here this side. So it will be. So this is number 1. Because purchase journal, it is a journal. Okay. So purchase journal. So this is Cora ledger account. So now next, what is it? So what did you return? You returned on 4th November. So how much? 320. Yes, 320. So next, frame account. So how much is frame account? So frame account is 14,000. So frame account is 14,000. So this is on what date? This is on 2nd November. Purchases 14,000. Okay. So now come to discount received. So again, discount received is again. So discount received is again. So it will be credited. So individually you have to write, or you can write the total. So so discount received is 1304, 13,004. So we have to record that discount received 13,004. So November 10th. So cash book. Good. So we are right here. That's all. So 13,304, not 13,004, 1,304. So that's also discount received. So what else is there? So I told 6 ledger accounts. So the last ledger account is cash book. So remember, cash book is book of both the book of prime entry and the book ledger also. So cash book is both book of prime entry and ledger. So no more, it is not required since we have already prepared. So that's all. So that's the end of this particular question. See, such a small question, but it took considerable amount of time for you to understand. So prepare, post it to the ledger, understand the various concepts. So understanding various concepts is very, very important prerequisite for you to score good marks. So welcome back, dear friends. Welcome back to Shasha's virtual classroom. So today we'll discuss exercise activity 3.2. So enter the following transaction in the books of in lease cash book. So we'll learn how to prepare cash book. So I think you might have understood this. This is very easy topic, but some students may be confused, a bit confused. So let us discuss. So what you can do is before trying having a look at my looking at this particular session, you can just try working out a problem on your own so that your understanding is clear. So always try to work out on your own and then compare the answers so that the understanding is clear. Okay. So basically, I would like to let you know that this is a format. Particular, you have to write this in a particular format or particular what do you say in a particular style. So you cannot write it as however you want. So that style is this. So you have to write it in this way. So cash book. So this side is debit and this side is credit. So this side you have to write date, whatever and details are there. Then discount. This is one column. So this is one column. So this is another column, and this is another column, and between, so there should be one line. So again, similarly, this side also there is one column, another column, date, one column. So this is date, one column, date. So details, particulars, then discount received, one column, cash, one column, bank, one column, and the currency, of course, whether dollars or pounds or whatever. So we have to write here. Okay. So this is how it is. So we have to write this in this particular format. First you write the format. So this side cash book. So this side is debit. This side is credit. So the date, whatever your particulars. So first you write this till here. So copy, you have to write as it is. This way you have to write. Then we will start working out this question. Okay. So this is the question. So enter the following transaction in lease cash book. April 1st, cash sales 1000. April 1st. April 1st. Okay. So one more thing. So whatever we receive, we have to write here. So all that is received, we have to write here. And whatever we pay, we have to write here. Okay, so in other words, if it is debit, so cash book is a real account, cash account is a real account, debit what comes in. So when we sell, cash comes in. When we sell, cash comes in and it is cash. And it is cash. Cash sales 1000, cash is coming in. So cash column 1000, cash is coming in, debit cash. This is cash account. Okay, so cash book, this is cash account, this is bank account, this is discount account. So this is discount account, so this is discount allowed. So this is discount allowed discount. So this is discount received. Sorry, this is received. So it's a credit. No, it is received. So this is discount allowed discount. So allowed discount. So remember this is allowed. Okay. So this side, because when we pay at the time we receive discount. No, we receive. So it's a credit. So but when we receive at that time we allow discount. So it's a loss. So we write here. So cash account sales 1000. Sales account 1000. So we write here. So we receive cash upon sale, we write here. So all whatever we receive, we have to write here. Whatever we pay, you have to write here. This is just for you to remember. This is just for you to remember. So don't write like this. So let us see if they are writing this way. No, see, they are not writing whether it is received or paid. So here they are also discount received, they are written. Okay, so discount allowed. So here they are not written whether it is received. So this is just for you to remember. So just for you, so that you understand, it is easy for you. Okay, so don't write this. So don't write. This is for you, just for you to remember. So don't write. Okay, so don't write. So receive cash. When we sell, we receive. So then what is the next one? So electricity charges, electricity paid in cash, payment. So we are paying. So credit what goes out. So credit what goes out. Cash account is a, so cash account credit what goes out. So what date? So it is on second, April 2nd. So second. So credit what goes out. Electricity. How much? 100. Cash. Credit what goes out. Cash has gone out. Credit what goes out. So next. So we received, we have paid 100. So credit cash account will be credited and electricity charges will be debited. So next, cash sales 800. So we are receiving cash again. So what date it is? It is on third, 800. On third, sales. we are receiving. When we sell, we receive, no? So receive. So 800. Next, banked cash. So what do you mean by banked cash? We are taking out cash and putting into bank. So what is the entry when we bank cash? So very important. Okay, so this students often get confused with this entry. Students often get confused with this entry. For that, what you do, you just remember the entry first. Okay, so this is the easy way. Bank cash. Banked cash means you are depositing money in bank. So bank account will be debited. Bank account will be debited. Cash account will be credited. Cash account will be credited. So banked cash means we are depositing cash into bank. Cash is going out. Cash is going out, and money is coming in bank. Banked cash. So money is coming in bank. Banked. Okay. So money is coming in bank. Money is coming in bank. So this is bank. So money is coming in here. So how much? 1400. 1400. So money is coming in bank. Banked cash. So but cash is going out. Cash will go out. So cash will go out. What date? 4th. 4th. Banked cash. So remember, always you have to write like this. Okay. So my banked cash. So remember, don't get confused. So bank account will be debited. Bank account will be debited. Banked cash and cash account will be credited because cash is going out, money is coming in bank. So against this, what you have to do here, you have to write bank. Against this, you have to write bank, and against this, you have to write cash. And this is called contra. So you have to write it as C here, contra. Contra means it is affecting both the cash account and bank account on the opposite sides. So this entry will go where nowhere but only affected in the cash book and bank book. So the cash account and bank account, that's why it's called contra entry. Contra entry means money is going out from cash and coming into bank. So remember, when you're writing in bank column, here it should be cash. So see here, bank column, here it is cash. So similarly here also, here it is cash column, but here it is bank. So be careful. Okay, so a lot of students, they commit mistake, they get confused with this. So the concept should be clear. So understand this. So what is happening? So cash is going out and money is coming in bank. Simple, that's all. Okay, so then stationery paid in cash. So stationery paid in cash means you are making the payment stationery. What date? It is on 5th. 5th. Stationery. How much? 20 bucks. So 20. So we drew 900 from bank for cash float. So we are taking out money from bank. Okay, we drew 900 from bank. Be careful. So now money is going out from bank and money is coming in cash. This is exactly opposite of this. So we drew 900 from bank. So money is going out from bank and coming in cash. So the entry is exactly reverse of this. So what is happening? Money is going out from bank and coming in cash. Cash. Cash is increasing, money is decreasing in bank account. So remember, okay, cash account will be debited. Cash account will be debited and bank account will be credited. So understand, this is very important. Lot of students commit mistake here also. So they get confused. Understand this. This is very, very important. Withdrew 900 from bank for cash float. Cash float means to keep in office. To keep in office for cash expenses. So that is the meaning. Okay, to keep in office for cash expenses. So we have to record rupees withdrew 900 from bank for cash. So money will go out from bank and come in cash. So money will go out from bank. Okay, how much? 900. What date? 6th. On 6th, what is happening? Money is coming in cash and going out from bank. First you write in bank column, okay, then you write in cash column, or you write in cash column and then you write in bank column. First you write this, then you write the date. Date is very important. So then against this, so what is happening? Money has gone out from bank. So this is payment, right? So money has gone out from bank. So against this, here you have to write cash, and this is called contra again. So against this, this is value here. Here you have written in cash column. So here you have to write bank. So this is in cash column. In cash column. But you are here against this you have to write bank. So be careful. So against this you have to write again contra. Why? Because it is hitting cash on one account and bank on the one another account. Same. So very careful. Okay. So lot of students commit mistake here. So this is very important. So this is very important. This is very important. Contra entries are very important because lot of students commit mistake here. And cash book problem is very important in AS level. So because it's very important, often asked. Okay. So very important. So at least in tests, internal tests and all, it is often asked. So a lot of questions are based out of this. So even bank reconciliation statement is based on this. So that's why the concept should be very crystal clear for you. Okay. So the concept should be very clear. So this is the end. So they are not asked to balance. So if you want to balance, how you balance? So you add here. So we are total here. So we total here. So whatever balance is there, balance carry down. So this side here cash bank. So balance carry down. So what is the balance? So here this side 1400. Here it is 900. So 1400 minus 900 is 500. So we write here 500. So here 1800. 1800 plus 900. So 19 plus 8, 27. 27 minus 27 minus 1520. 2700 minus 1520. Okay, so this will be 1800. So it will be 1180. So here it will be 118. So now the total on this side, total this side, total this side, total this side, total this side should be same. So here it is 1400. So here it is 2700. This is 1180. 2700. So here it is 1400. So here it is 2700. So crystal clear. Okay. So this is how it is. So 118 0. If you add all this should be times by 700. So in other words, when you are balancing, so both the sides should be same. Okay, so here balance brought down. So balance brought down. Whatever is carried down here, it will be brought down here. So 1180. So this will be 500. So this is how it is. So end. So this is the end of this activity 3.2. Okay. So let's catch up in the next class. Till then, have a good day. So dear friends, welcome back to Shasha's virtual classroom, activity 3.3. So let's discuss activity 3.3. Prepare journal entries for each of the following items. Okay. So what you can do is you can before having a look at this solution, you can just try working out the question on your own, and then you can compare with the solution. So if you have any doubts, if you have any concerns, you can just leave a message in the comment section. So I will be glad to help you. Okay. So prepare journal entries for each of the following items. So first one, purchase motor vehicle for use in the business from Paul, which cost 14,000. This is very simple journal entry. So what is there in this? So first one, so we'll just write here. So first one. So what is happening here? We are purchasing motor vehicle for use in the business. Okay, so very important thing, we are purchasing motor vehicle for use. Suppose we purchase motor vehicle for sale, for use as merchandise in the business, then it becomes purchases. But when we use motor vehicle, it will be recorded as an asset. So why it has come in journal entries here? Because this entry will not go to any of the subsidiary books, or books of prime entry. So these entries, either of these entries will not go to books of prime entry. It will not go to books of prime entry. So they will not go to books of prime entry. Why? Purchase motor vehicle for use in the business. Suppose if it was purchased motor vehicle for as a merchandise, as a merchandise means for sale, then this would have gone to purchase book. It would have gone to purchase register or purchase journal. Okay, it would have gone to purchase journal. But since it is motor vehicle for use in the business, okay, for use in the business, it will be recorded in general journal. So it will be recorded in general journal. So what are the various journals? Purchase journal, sales journal, purchase return journal, sales return journal. So those are all different journals. So whatever doesn't come there will come in general journal. So what is the entry here? So motor vehicle account debit to Paul account. So we will debit motor vehicle and credit Paul. Why? Because debit, what comes in debit, asset is coming in, So Paul is the giver. So Paul is the giver of motor vehicle. So that is why this will be debit and this will be credit. Next. So they are not mentioned about narratives. So if you want, you can write the narrative. So you can write the narrative being purchase of motor vehicle for use in the business. Okay. Next. Purchase of office furniture for business costing. Purchase of office furniture for the business. Okay. Office furniture for the business costing had been debited to purchases account. So office furniture you normally purchase to keep it in the office. So, but it has been debited to purchases account. So what to do? We have to reverse the entry. We have to pass the rectification entry instead of furniture account in error. Instead of furniture account. So what is the right entry? What is the wrong entry? So what is the right entry? First, to understand this, you should know what is the right entry and what is the wrong entry. Then we have to understand what is the rectification entry. So, okay. So what is the right entry? What is the right entry? Right entry is debit furniture. Should be debit furniture. What is the wrong entry? Wrong entry is debit purchase. Debit purchase. So the right entry is debit furniture and wrong entry is debit purchase. So what? How to do it? What to do? We have to cancel out this and we have to bring in this. So we have to cancel this and we have to bring this. So we have to cancel this. We have to credit, and to bring this we have to debit. So what is the entry? Furniture account debit. Debit furniture. Debit furniture account. Credit purchase account. So what happens when we credit purchase? The purchase which has been debited will cancel out, so it will go off. So there should be a debit for credit. So when we have to debit furniture because that is the right entry. So we have to debit furniture and credit purchase. So the entry will be rectified automatically. So okay, this is the entry. So next, third one. A new business opens with 6,000 of equipment, 3,000 of furniture, 1,000 of stationery. It is paid for with 10,000 capital. So 6,000 equipment, 3,000 furniture, stationery. Equipment, furniture, stationery. Debit. Equipment. Debit. Furniture. Debit. Stationery. How much? So this is 6,000, 3,000, 1,000. 6,000, 3,000, 1,000. So we have to credit what? Credit capital. Credit capital 10,000. So because owner is the giver of all these things, so we have to credit the capital. Debit because these are things are coming into the business. These are the things that are coming into the business. And who is the giver? Owner is the giver. So capital is the giver. So capital, this is the investment, 10,000. So that is why this will be credited. Next. Credit note number 34 for 170 received from B Jones, a supplier, has been posted to C Jones account in error. So what is the right entry? Received from B Jones. So we have received credit note. So we have to debit B Jones, a supplier. Okay. So we have to debit B Jones. So what is the right entry? We have to debit B Jones. So to understand this again, you have to analyze the transaction properly. What is the wrong entry? What is the right entry? Then what is the rectification entry? So what is the wrong entry? Wrong entry is received from B Jones. Okay, received from B Jones. So we have to credit B Jones. Credit note. We have to credit B Jones or debit B Jones. We have received, no. So we have received means we have to debit B Jones. We have to debit B Jones. Debit B Jones. So this is the right entry. See, understand the thing. Credit note number 24 for 170 received from B Jones. You have received from B Jones. So you have received a credit note. So credit note means you are getting credit means you have to debit B Jones. Understood? You are getting credit. So you have to give, you have to debit B Jones. So what is the right entry? You have to debit B Jones. So that is the right entry. So what is the wrong entry? What you have done? Instead of debiting B Jones, you have debited C Jones. You have debited C Jones. So how do you rectify this? Obviously, you have to cancel this and you have to bring in this. So what you have to do? You have to debit B Jones. So the entry has come in. So to cancel this out, you have to credit. So credit C Jones. So when you pass this entry will be offset. We already debited C Jones as wrong entry. So when we credit C Jones, this entry will offset. And to give credit, you have to debit. So we have to debit from B Jones. So this is actually transfer entry, we can say. Okay, transfer entry. We are transferring from C to B. That's all simple. Okay. So this is also transfer. Which one? This is also transfer entry. So this is also transfer entry only. Because we are transferring from furniture purchases to furniture. Okay, that's all. So this is first one is error of principle. Second one is also error of principle. So this one is opening journal entry, and this is again error of principle. Instead of debiting one person, we have debited some other person. That's all. So this is activity 3.4. This is the end. So it looks very simple, but understanding should be very clear, very important. So similar questions can come in the examination. So be careful, try to understand. So you need to take a lot of time to understand the concepts. Then only your concept will be clear. Then only you can score better marks. Okay. So don't adopt for shortcut. Please practice, understand, remember, apply, do a lot of hard work. So never try to resort for any shortcuts. Never do that. So dear friends, welcome back. So this is practice questions from books of prime entry. So the books of prime entry, okay. So books of prime entry, practice questions. So this is David Hopkins' latest book. So then we can just discuss this. So practice questions. So before having a look at this, you can try working out the problems, questions on your own, and then you can just cross check with this, and you can compare, you can confirm yourself whether you understood the concept or not. If you have any doubts, you can please let me know as a comment in the comment section. So if you have any doubts, please let me know. We can discuss it. So and we can try to sort it out. Okay. So practice questions. Gina sold goods on credit for 950 less 20% trade discount. So we know we have to record always at a net of. So 950 minus 20% trade discount is 760. So this is the amount we have to record. She allowed a cash discount of 2%. That will be recorded only upon the payment. not in the time of sales. So what amount should be entered in her sales journal? So our sales journal will not be recording this. We will be recording net of trade discount 950 minus 20%. So 950 minus 20%. So 950 minus 20% is 760. So this is the answer. Okay. Then Sai received an invoice from Jaya for 2000 less 10% trade discount. So we have to record this transaction at 1800. So what will be debited? Sai received an invoice means Sai has purchased. So Sai has purchased. Okay. So Sai has purchased goods from Jaya. So Sai has forgotten to enter the invoice in her purchase journal. See, purchase journal. So what effect will it have on Sai's accounts? So what is the entry? What is the entry for purchase? Purchase account debit to Sai account. Purchase account debit. Purchase account debit to Jaya's account. Purchase account debit to Jaya's account. So you have to debit purchase and credit Jaya. Why? Because purchases is an expense. So Jaya is creditor. So supplier. So should be credited. So we have not done this. So it is under added. So this is the correct answer. So simple it is. So if you understood the concept, it's very simple. Otherwise, it's complicated. So don't try to mess up. Take some time to understand the question. So then very concept is very clear. Then let us have a look. What is this? Deepak's transactions for May were as follows: bought goods, sold goods, bought goods, purchase, return goods, purchase. So basically, this is a books of question on books of prime entry. So you have to write various books of prime entry like purchase journal, sales journal, purchase return journal, sales return journal, and you have to write cash book also. Then you have to do the posting. So it will take considerable amount of time. So you can try working out this problem on your own. So if you have any doubts, you please let me know in the comment section. So I will definitely discuss this question once you let me know. Okay. So till then, have a good day. Good night.
Dear friends, welcome back to Shasha's virtual classroom. So this is the practice questions from balancing accounts. So we will discuss this. So before this, you can just try answering yourself and you can cross check with answer. Which of the following account is most likely to have a credit balance? So a capital account will have a credit balance. Obviously, it is capital. Discount allowed is always a debit balance because it is an expense. Office equipment is an asset, so it is a debit balance. Rent is also an expense. So again, the question is whether the rent is payable or receivable. Since here it is not mentioned anything, on assumption that this is rent receivable, if it is assumed that rent receivable, then it is a credit balance. If it is assumed as payable, then it is debit balance. So since it is not clear, we will assume. So we have to choose between these two, capital and rent. So mostly it will be capital, which is always normally likely to be a credit balance. So when must the balance of each account be known? Each day, each week, when a bookkeeper is available, when a trial balance is prepared. So obviously when a trial balance is prepared. So balance the following account at the end of September. So this is a nominal account, discount allowed. So discount allowed. So balance. So we have to add it 200 234. So that is balance. See, balance is 234. So it will be carried down, but it will be carried forward straight away. It can be straight away carried forward to trial balance. So here we just put the total and carry forward to trial balance. Discount received. Discount received account. So 110 plus 120, 130. So balance carried down. So this also can be straight away carried forward to trial balance. So next one, JNP limited accounts. JNP limited account, purchase returns, bank. So this side there is total of 1340, and this side there is total of 740. So what we have to do? So 1340. So this side, to make it 1340, so it is 740. So 700. So if we put 700 here, so that will be balance carried out. Balance carried out. So 700. So both the sides, the always total should match. So 1340. So if we write 700 here, so this will match. So it will become 700. So it will be 1340. Next, A and B limited. A and B limited account sales. So total sales. So we have sold to A and B limited, and we have not received any money from them. So just so 700 plus 450 is 1150. So 1150. So it will be balance carried on. So 1150 will be the balance carried on. So both the sides it should be 1150, 1150. So then this one, George account. So what is George account? So George account, we have sold for 2300 and we have received it. We have settled. So he has paid. So everything is clear. So 2300 this side, 2300 this side. So there is no question of balancing at all. Motor vehicle. So balance carried on, same amount. So that both the sides it's the same. Cash account. So normally it will have debit balance. Debit balance means debit side will be heavier. So 800 plus 100 is 900. So 900. This side it is 200, 20, 45, 265. So 900 minus 265. 635. So balance carried out is 635. So the total, if you put balance, it will be so to actually practically do the problem how to balance, you can see cash book problem. So the previous question 4.1, activity 4.1, there I have clearly discussed how to balance, how to write the total, everything I have discussed. So here bank account again. So here credit balance is heavier. Since credit balance is heavier, see 5,300 and this side it is 3,500. So since it is credit balance is heavier, so it will be here this side balance carried down will be this side. So 5,300 minus 3,500. So 1,800. So balance carried down will be 1,800. So this side total it is 5,300. So this side also it becomes 5,300. So explain why trade receivables account have debit balances while trade payables have credit balances. So trade receivables is normally an asset, so from which accounts are receivable. So they are always show debit balances because they have received, they owe us money, so owe business money. So whereas trade payable are liabilities. Dear friends, welcome back to Shastra's Workshop class. Today we will discuss activity 5.1. So before having a look at this solution, you can try working out the solution on your own and you can cross check with the solution here so that you are confident whether you understood the concept or not. Complete the table ticking the boxes that describe the given accounts and of the business. The first one is completed for you. Daily vehicles is an asset. So what is before this? Let us discuss what is liability, what is revenue, what is expense. So asset is something we have. So it is a resource controlled by an enterprise from which future benefits are expected to grow. Something you own and you something that is owed to you is an asset. Okay. So what is liability? Liability is something you owe to some other person. So you have to pay to some other person. So that is known as liability. Revenue or other income is that part of those items which you keep getting and which you can use for your business, running the business operation. So it is income for you. So you can it is generated regularly, or it is the main source of your operations. So expenses the expenses which you incur like salary, rent, all those things. Okay. So rent is normally rent is let's assume it's an expense because since they are not specified. So if you see other line item here, rent receivable. Here rent receivable is there, so this is income. So let us assume and presume things. So this is the rent paid or payable. So this is an expense. Since nothing is specified, you see the amount here. So if this was not specified, you would have written it as expense also and income also. So it is doesn't make any difference. But normally it is taken as expense. So when nothing is specified, when it says rent, it is expense. Yeah. So loan is a liability, something which you have to pay back. So loan you have taken from someone, you have to pay back. So interest received is something which you get on your deposit. So you have got some money in bank, so you have earned interest on that, so that you can use it for your purpose. It is interest received. Interest paid is an expense, so it is an expense. So we write here. So trade receivable is an asset. Why? Because we have sold on credit and that person has to pay. So these are customers' accounts. So trade receivables is also known as debtors, trade debtors, receivables, bills receivables. All together is known as trade receivables. Trade receivables is something which is owed to you. So which is owed to you. Okay, so it is an asset. So inventory is also an asset because it is something you have held in your hand. So it has got value, you can sell and you can get money. So it is an asset again. So discount allowed is an expense because it's a loss. So once you allow a discount, you know you have to your money will be waived off. You will not be getting anything. So that is allowed. It is an expense. Postage is also an expense because postage is the money spent on sending postage to courier or all those things, So then next, postage is done. Bank account is an asset. So normally bank means it is bank balance. So normally bank means it is bank balance. So it is an asset. So rent receivable. So what is rent receivable? Rent receivable is a revenue. So it is an income which you keep getting. Trade payables. So trade payable is a liability because it has to be paid. So trade payables are liabilities. So they include trade creditors. They include bills payable. So all those money which are owed by you. So you have got on credit, you have to pay them back. So that is liability. Computers is an asset because it is something you have which you can use in business, which you are using in business. Wages is an expense. Discount received is a revenue or other income. So interest received is normally other income. So discount allowed in discount received is also other income because interest received is not main revenue from operations. Whatever is not from main revenue operations, it's considered as other income. Okay. So rent receivable also can be considered as other income. So all these are other income. So what are revenue, main revenue? So if it is a finance company, then interest is a revenue. So if it is a trading company, then sales, whatever sales you are making. So that is all revenue. So you have to be very careful with the revenue or other income. So that is the end of this is the exercise 5.1. Activity 5.1. I hope you have understood the concepts, so we can proceed further. So welcome back, dear friends. Let us discuss activity 5.2. So and we can okay. So activity 5.2. In which ledger would you expect the following accounts? The first one is completed to you. So in which ledger? Okay. So which ledger? So what are the different ledgers? So there is general ledger. So there is a customer's ledger. There is supplier's ledger. So okay. So those are the various ledgers. So let us have a look at the various ledgers that are possible. So see here, these are the list of ledgers, division of the ledgers. Ledgers can be divided into sales ledger, purchase ledger, general for nominal ledger, private ledger for confidential amounts which are personal in nature and all are recorded there, and cash book for the bank and cash accounts. We use cash. So sales ledger to record sales, purchase ledger to record purchases, general, other items other than cash and bank. So private ledger, so other than which is not recorded normally, which is a confidential nature, and cash book. Cash book is for the bank and cash accounts, that is whatever is received, whatever is paid, all those are bank accounts. Okay, so capital is general ledger again. So customer who buys goods on credit, customer who buys goods on credit. So it is we are selling and who is you are buying. So customer who buys goods on credit. So when you are selling, the other person is buying. So these are credit sales ledger. Supplier of office equipment. So whatever it is, whether he is a supplier of goods or supplier of office equipment, whoever it is purchase ledger. So but since it is not merchandise, okay, so it is office equipment, it is asset. So we have to be careful. You have to ask yourself whether it is asset or merchandise. So what is merchandise? Merchandise is those things which you buy to resell. So when you are purchasing office equipment, you are it is not a merchandise. It is not a merchandise. You are buying it as an asset. So it will be recorded in general ledger itself. So it will not be recorded in purchases ledger because it is not purchase of merchandise. Be careful. Okay. So bank account will be recorded in bank ledger itself. Bank or cash book we can say. Okay. So bank or cash book. So wages is in general ledger because it is an expense. Sales will be recorded ledger. So guys, okay, once again, sales ledger for the accounts of customers that buy on credit. Only credit customers. These are accounts. Receivables. So these are customers that buy for the accounts of customers. Okay, it is not for sale. Sales, even though it mentions sales ledger, it is not for sale, but it is for the accounts of customers that buy on credit, because customers and sales are related. So purchase ledger. So even though it is purchase ledger, is for the accounts of suppliers. It is not for the account of purchasers. It is for suppliers. So general or nominal ledger for assets, liabilities, revenue, other incomes. So revenue. Revenue is what? Sales, right? Sales. Revenue is nothing but sales. So sales are recorded here. Other income. So other income is like interest, all those things, and other expenses. Expenses again purchases. Okay, so all these things are recorded here. Private, so that is nothing to cash book for the bank and cash accounts. So cash book for bank and cash accounts. So very important. So again, often asked in MCQs and all. So keep a note of this. So very important. Okay, so sales is general ledger. Okay, so general or nominal. It's for nominal also. Nominal. So general or nominal. Why? Because it is revenue. Wages is an expense. Okay, so be careful. So this is how we have to understand the concepts, so that the concepts accuracy as you proceed for A levels. If the concepts are not very clear, you will get hiccups. So you will struggle. So you will struggle in A levels to secure very good marks. So there is no shortcut. Please remember, there is no shortcut for success. You have to put in a lot of efforts. So you have to practice a lot. Try to understand the concept. It's very important. Understanding the concept is very, very important. So this is the end of activity 5.2. So now let us continue with activity 5.3. So activity 5.3. So activity 5.3, complete the following sentences by inserting the correct word from the following list. So simple it is. So dash ledger contains the accounts of suppliers from whom the business buys on credit. So dash ledger contains the accounts of suppliers. Suppliers. Purchase ledger. Purchase ledger, no? Purchase ledger. Purchase is related to suppliers. Suppliers means those who supply material to you. Suppliers means those who supply material or goods or merchandise. Those who supply, okay, those who give on credit, okay, so on credit. So very important. So don't get confused with suppliers. Suppliers means whom you purchase, from whom you purchase, from whom you purchase. Purchase on credit. From whom you purchase on credit. Okay. So the heating and lighting account is stored in the dash ledger and is an example of dash account. So heating and account is stored in the general ledger. General ledger or nominal ledger, and is an example of nominal account. expense account. Okay, so expense account is in so expense. So goods bought on credit are recorded in the goods bought on credit. Goods bought on credit are recorded in the again where we record. It is non-current expense, purchase, general, sales. So we have to choose from this, right? So purchases ledger contain the accounts of surplus from whom the business buys paid, correct? So the heating and lighting account is stored in general ledger, correct? Example of expense account. This is also correct. This is lower. This is over. Then again here, what else is there? Sales. Is there anything related to sales? Good bought on credit or recorded in the? No, it's not in sales, not a sales. Non-current, no, non-current. So only three types of ledger are there. So only three ledgers. Okay, so when they say ledger, okay. So then goods bought on credit are recorded in the so then a dash is a set bought used in the business for a long period, so non-current. So we have chosen this, nothing is related to sales. Just see, the dash ledger contains the accounts of suppliers from whom the business buys on credit. So purchase ledger. The heating and lighting account is stored in the general ledger and is an example of expense account. So goods bought on credit are recorded in the general ledger. Okay. So then dash a non-current. So this is again purchase ledger, whatever. So general ledger. So a non-current asset is bought for use in the business for a long period of time. So it is non-current asset. So this is the end of activity 5.3. So very simple thing. So if you get confused, see again the concept should be very clear. Okay. So dear friends, welcome back to Shasha's virtual class. So classification and division of ledger. So let us have a look at the practice questions today. So which account is most likely to be kept in private ledger? So drawings, interest received, rents, what is very private? So obviously drawings is very private. So how should the cash discounts be classified? So how should cash discounts be classified? Discount allowed is an asset. No, it is not an asset, it is an expense. So it is income, no, it is liability, no. Discount received is a liability, no. Discount received is an income, yes. Expense, no. Asset, no. So B. Explain why it can be useful to group accounts into different categories for the purpose of classification and presentation, and the account becomes easier. So discuss why a business may use more than one ledger. So again, for specialization, so we can have a group of people maintaining a specialized in particular group, and it will become easier also to verify and cross check and to keep mathematical accuracy. So this is the end of practical questions. So let us continue in the next class. Dear friends, welcome back to Shasha's virtual class. So today we'll be discussing activity 6.1. So prepare a trial balance from the following balances that have been extracted from the books of small online retailer at 31st December. So they are given assets, liabilities, expenses, all these things. So based on this, we have to prepare trial balance. So before having a look at this session, I request you to try this problem on your own. So basically, it's very easy and very simple topic. So I think you will be able to do it. So you can then cross check with the solution. So prepare a trial balance from the following balances. Okay. So how do we do it? Trial balance extracted from small online retailer as on 31st December. Small online retailer as 31st December. As on alright 31st December. So we have to write it in a specific format. So basically we will have to write particulars or names of accounts. So here to the ledger folio. So debit. Credit. So we will have two columns. Debit column, credit column. So let us start. So before starting, so property, what is property? Property is an asset. Asset always show debit balance. Property always show debit balance. Motor vehicles. Motor vehicles is an asset. Always it shows debit balance. So office furniture. So remember one thing. What is that? So when you are learning trial balance at that time, you have to remember assets and expenses have debit balances. Normally have debit balances. Assets and expenses normally have debit balances. Similarly, liabilities and income or revenue have credit balances. By default, okay, by default, they are always assets and expenses. Assets and expenses are always debit balances. Liabilities and incomes are always credit balance by default. Okay. So office furniture is an asset debit balance. So computer is an asset debit balance. Sales is a revenue income credit balance. Sales written exactly reverse of sales, it is debit balance. Purchases is an expense debit balance. Purchase returns is exactly reverse of purchase returns, it is credit balance. Motor vehicle expense is debit balance because it is an expense. Advertising is an expense debit balance. Office expenses is an expense debit balance. Stationery is an expense debit balance. Cash is an asset debit balance. Bank credit. So it means it's a liability. So credit balance. So capital always a credit balance because it's a liability to the business. So drawings always debit balance because it is exactly reverse of capital. So now we can prepare the trial balance. So write down all the names of the accounts: property, motor vehicle, office furniture. Property, office furniture. Property 100,000. So motor vehicle 18,000. Office furniture 14,000. Office furniture 14,000. Computer 2,000. Sales 40,000. Computer 2,000. Sales 40,000. Sales return 600. Purchases 6,000. Returns 500. Purchases 6,000. Return 500. Motor vehicle expenses 4,000. Advertising 1,600. Advertising 1,600. Office expenses 1,000. Office expenses 1,000. Stationery 400. Stationery 400. Cash 200. Cash 200. Bank 300 credit. Capital 110,000. Capital 110,000. Drawings 3,000. Drawings 3,000. So the total is, if you add both the sides, it is 150,800, 150,800. So it will match. So this is activity 6.1. So this is done. Okay, so this is over. So let's catch up in the next class. Till then, have a good day. Dear friends, welcome back to Shasha's virtual classroom. So let us discuss activity 6.2 today. State which of the type of errors each of the following represents. A customer's invoice has been omitted from the sales journal. So we need to mention the type of error. So we need to write the type of error here. So before this, let us have a recap of what type of errors and what are the different types of errors. So basically there are 6 types of errors that occur when debit and credit totals in the trial balance agree. They are as follows. So type of error. Error of omission. What is error of omission? A financial transaction omitted completely from the books of omit. Okay, omission is nothing but omit. Omission is nothing but omit. So the name itself suggests, okay, so omit. So omit. So omission. So omitting means leaving out. So financial transaction omitted completely from the books results in there being neither a debit nor a credit entry for the transaction. This could happen if a transaction is not entered, not at all entered. Okay? So not entered in the book of prime entry. So the entry itself is not recorded. You have purchased, but you are not recorded. You have sold, you are not recorded. So expense you incurred, we are not recorded. So that is what example is $100 of equipment is bought for cash. The transaction is forgotten and not entered in the equipment or the cash account. It is not recorded at all. So there is no debit and there is no credit. Okay. So the next one. Error of commission. Error of commission means you are giving something more. So commit. Okay, you are giving something extra. So here it is omit. You are leaving out. Leaving out or skipping. So here it is. You are giving some extra. A financial transaction is posted with the correct amount to the correct side of the wrong account. Okay. So what you have done, you have posted, but you have corrected. You have posted it to the correct side of the wrong account. Account is wrong, but the account is in the same class. Account is in the same class. So the payment for stationery is posted to the advertising account. Instead of treating it as a stationery expense, you have treated it as advertising. So both are expenses. Stationery and advertising are both class-based expenses. So same class. Okay, so this is very important. Same class. So expense or revenue or asset or liability, whatever. So it is the same class, but instead of posting to one account, you have posted to some other account. So that is extra you have put in some other account. Error of principle. What is error of principle? So you can so you don't know the accounts. Suppose someone doesn't know the accounting principles. Doesn't know the accounting principles. Ignore it. Ignore it. He doesn't know the accounting principles. So what he does, instead of recording it as an expense, he may record it as an asset or something like that. For example, a financial transaction is posted with the correct amount to the correct side of a wrong class. It is wrong class. For example, they have told, see, payment for fuel for a vehicle has been debited to the motor vehicle. So fuel for vehicle is a nominal account, debited to the motor vehicles account. So it is an asset account. So basically, revenue has been treated as capital expenditure, and capital expenditure might have been treated as revenue expenditure. Instead of the motor vehicles running expense account, motor vehicle expenses are classed as expenses when the motor vehicles are non-current assets. Okay, so it is wrong class, ignore it. So what has happened? The person doesn't know where to record. Instead of recording in fuel for vehicle, he has recorded as motor vehicle itself. So that is wrong. So ignore it. Means he is not followed the accounting principle. He has not followed the accounting rules. Rules are not followed. This is same class. Okay, next. Error of original entry. So what is error of original entry? Original entry. So at the time of recording, the first time, so wrong amount is entered in the book of prime entry. So what is book of prime entry? You record it for the first time. So there itself you have written it wrong. So wrong amount is entered in the book of prime entry for a financial transaction. The purchase invoice is entered on the purchase journal as 10. See, it has been entered, but the amount itself is wrong. At the time of entering the amount is wrong. So original entry means book of prime entry. So first recording, first time recording itself is wrong. So next, complete reversal of entries. Complete reversal means instead of debiting, they have credited. Instead of crediting, they have debited, something like that. Okay. An account that should have been debited has been created, and the account that should have been credited has been debited. So a payment made to Sam is debited to bank account and credited to Sam's account. So a payment made to Sam is debited. Actually, it should be credited to the bank account and credited to Sam account. It should have been debited to Sam account because it is paid. See here the accounting principle. So whatever we have learned in first lesson, so cash transactions and credit transactions, you have to apply here. So if you are not understood there, here also you will not understand. So be careful. Okay, so your concept should be logical flow of concepts. It should be logical flow of concepts. So if you understood everything before this, then even this you will understand. Otherwise, you will not understand this. So please don't try to try shortcuts in learning. Never learn shortcuts. So the payment made to Sam is debited to the bank account and exactly reverse, complete reversal. It is complete reversal. Yeah, it is complete reversal. Instead of debiting, you have credited. Instead of crediting, you have debited. So compensating errors. So what happens sometimes? Errors will offset. So and then net off. So the compensating errors. So compensating means one will offset the other so that there is no proof at all. So compensate. They compensate one another. So two or more accounts that cancel each other out. An invoice of 1200 in sales journal is posted to the customer account as 1000, and the same amount, the sales journal is added to low by 200. The debit balance on the customer's account and the credit balance on sales account will both be added by 200. See what has happened? 1000, instead of adding 1000, instead of writing 1200, they have written as 1000. And what has happened? One place they have written as 200 and the other place they have not written. So because of that, they cancel out and the net effect is nil. So the debit will be equal to credit. So ultimately, what they're trying, what it is told here is they cancel out. Simply they cancel out. Okay, so they cancel out and the error is not at all evident. Okay, error is not disclosed. Error not disclosed. In trial balance. They offset each other. One error offsets another. One error offsets another. So two or more errors that cancel each other out. Okay. So this is what you need to know. So first you need to understand this. Then only you should do that problem. So now having understood that, now we will discuss here. Okay, a customer's invoice has been omitted from the sales journal. Omitted. Error of omission. Simple. A purchase of goods for 100 has been entered in the purchase journal. So, purchase journal, original entry. Because first, as soon as we purchase, we are recording purchase journal. So, original entry. Purchase of goods has been entered in the purchase journal. So, it is error of original entry. Next, discount received from Mari has been debited to Maya's account. So what has happened? They have received the discount and it should be credited or debited. Yes, it should be debited. Discount received will be debited to one person. What has happened? Instead of debiting one person, it has been debited to another person. So it is error of commission. Because you have given credit, you have given debit to Maya instead of Mari. So you have debited. So it is correct. You have debited to, instead of one person, you have debited to another person. You have just given more, whatever, whether it is debit or credit, you have credited to one person instead of the other person. So it is error of commission. Payment or advertising added to the bank account and credited to the advertising account. So what will happen? Payment of advertisement account has been debited. So it should be debited or credited. It should be credited. It should not be debited. Correct, no? So because money will go from bank and credited to the advertising account. So it should be debited to advertising account. So it is complete reverse. Error of complete reverse. Entries were 100 too high overall on both the heating and lighting and the sales account. Okay, see, heating and lighting is expense. So expense has increased. Expense overadded means expense has increased. So sales account, income also sales account. So income also has increased, overadded. Okay, both are overadded. So expense is debit, sales is credit. So what will happen in this case? This is overadded, this is also. So debit is also increased, credit is also increased. So it will offset. So it is compensating error. Compensating error. So next, entries 250 were too high. Overadded on the heating and lighting. So expense. So overadded to the heating and lighting. So expense has increased, debit. And 52 low underadded. So expense, again it is expense. It has been underadded. So it has underadded and it is credit. And that is also debit. So that is also debit. So this is also debit, that is also debit. Instead of adding it to heating and lighting, it has been added to rent payable account. Both are expenses. So instead of adding one to another, it has added. So it is compensating because both are compensating. There is net effect is nil. Expense will increase, expense will come down. Instead of adding this account, it has been added to this account. That's all. So the purchase of office furniture has been debited. So error of principal. Okay, office expense. The purchase of office furniture has been debited to office expense account. So it should have been debited to office furniture, but has been debited to office expense. So principal, error of principal. So the rule has not been followed. The person is ignorant about the rule. So rule has not been followed. It is error of principle. That's all. So this is end of activity 6.2. So this is a very important topic. So you have to be very thorough in this concept, because this concept again we will discuss in suspense accounts. So where you will have to pass journal entries and suspense account to nullify, to rectify the suspense account and all those things. So this is very important lesson. It will actually break your head if you don't understand this concept. So try to understand this concept very clearly. Be thorough in this lesson. It's very important, particularly errors and how they are passed. So unless you know how to move forward, you don't know how to move back. So moving forward is first thing you have to know, then moving backward. So that is why a lot of students, they struggle near the exams. They struggle because nothing will enter into their head. So students should start learning from the day one, so that they don't struggle near the exams. They have to struggle from the beginning, not near the exams. So ultimately the end result will be zero. So never do that. Dear friends, let's continue with activity 6.3. See, an inexperienced bookkeeper has extracted the trial balance at 31st December 2021. It does not balance. Rewrite the trial balance, and correct the errors. So basically, we need to rewrite the trial balance. If there is any mistake, we have to do it. So you know, all expenses, all assets and expenses are debits. All incomes, all liabilities, and revenue or incomes are credits. So they are credit balances. Okay, remember. So this is the basic rule for trial balance. Remember this. All expenses and all assets and expenses are debits by default. All liabilities and revenue incomes are credit by default. Okay, by default. Normally by default. Very important rule. So before learn this, by heart this, whatever. So before starting this question, so try to answer yourself and then you can have it. So plant and machinery is a debit balance, so this is correct. Loan from David is a liability, so it is a liability. It should not come here. It should come here. So office equipment is an asset, so it is debit. Wages is an expense. It is debit. So rent and rates are expenses. If they are not credit, this is wrong. So 3,000 rent and rates, you are right here. So cash is normally a debit balance. It is an asset, so it is normally debit balance. It is never a credit balance, because cash can never be overdraft. So 200. General expenses, debit, because they are expenses. Normally they are debit balances. Sales, yes, they are always credit, because they are all revenue. Purchases, expenses, correct. Discount allowed is always a debit balance, because it is an expense, it's a loss. So not here, so it should come here. And discount received is a revenue, it is again other income. So it should not come here, it should come here. So bank, debit balance, normally. Trade receivables, asset, always debit balance. Trade payables, yes, credit balance, it's a liability. Purchase returns are exactly reverse of purchases. So purchases are debit, so purchase returns are always credits. So sales returns Sales is always a credit. Sales returns is exactly reverse of that. It is always a debit. So rent receivable. Rent receivable is an income. It is revenue. It's a gain. So it is always credit. It is not a debit. Put it. Capital. Capital is always a liability. Always it is correct. And drawings. Drawings is exactly reverse of capital. Exactly reverse of capital. Drawings will always come here. So now you redraw the trial balance, cross check, so it should be perfect and it should be matched. So that's all. So this is a very simple question. So unless you have understood the concepts, if you understood the concept, this is very simple, very simple, very simple. So just do it and enjoy. So let's. So this is activity 6.3. Let's continue in the next class. Till then, have a good day.
Dear friends, welcome back. So this is practical questions from trial balance, lesson of trial balance. So let us discuss. So before logging into this session, you can please try answering the questions on your own, and you can cross check with the solutions here. An invoice has been recorded in J. Smith's account instead of A. Smith's account. What type of error has occurred? So obviously it is commission, because instead of giving to one person, it has been given to another person. So it cannot be compensating error. So it cannot be original entry, error of principal. So it is commission, error of commission. So discounts received $100 for January has been posted to the debit of the discounts allowed account. Which effect this has on the trial balance? Discount received 100. Discount received has been posted to the discount allowed. Has been posted to the debit of the discount allowed account instead. So discount received is income. So discount received is income. But so it is credit balance. So what has happened? So it has been debited, has been posted to the debit of discounts allowed. Debit of discounts allowed. Discount allowed. So what effect has this on the trial balance? So too little debit. No, this is wrong. And 100 too much credit. This is wrong. 100 too much debit. Correct. So it can be 100 too much debit. Let us see, 100 too much debit and 100 too little credit. Correct. So this can be the effect. No effect on the trial balance. No, this is the right answer. Because a credit has been affected as debit, so it will have too much debit, because you are debited. Discount received is a credit, so you are debited. So it is debited, and you are not credited to discount received. So you have not done this. So it is too less credit. So this is correct. Next. Which of the following is not a reason to prepare a trial balance? To check that the total of debit balance is equal to total of credit balances. To help find errors in the accounts, which is not a reason. Okay. So this is the reason. This is the reason to increase the sales of a business. That's also, it's not a reason. Okay. To prepare monthly reports for managers. So this is not a reason to increase sales. That has nothing to do. Trial balance cannot help increase the sales of a business. So the following balances have been extracted from these books. So you can try working out this question on your own. So since you have learned all the lessons till now, so prepare trial balance. So capital is the balancing figure. So you have to put properly debit and credit, and then so let us just cross check once. So sales is the credit. so it will go to credit column. Sales return is debit because it is reverse of sales. Purchases is debit. Purchase returns is credit, exactly reverse of purchases. Wages and salaries is debit. Heating and lighting is debit because it is an expense. Rent payable is a debit because it is an expense. Rent receivable is a credit because it is revenue. Traveling expenses is debit. So telephone expenses is debit. Discount allowed is again debit. Discount received is credit. So plant and machinery is debit. Cash is debit. Bank is also debit. Anyways, it says debit balance itself, so it is debit. So trade receivables, again it is an asset debit. So trade payables, liability credit. Loan from Ting, liability credit. Drawings is a debit. So balancing figure is, so capital. So basically it should be credit, but it can be debit also. So cross check, just check and put the balancing figure. It should be the balancing figure or difference. Okay. So difference between debit and credit. So that's all. This is the end of accounting system itself. So we have to continue from the next lesson. From the next session, we have to continue with final accounts, financial accounting. Okay. Have a good day. Till then, bye.
Dear friends, welcome back to Shasha's virtual classroom. So today we'll be doing practice exercises from credit transactions. And this is from David Hopkins. Uh, Suppose the following transactions in the books of Gerard. Okay, so if it helps, write down the names of accounts. So if it helps, write down the names. These are tips. Okay, so these are the tips. So write down the names of accounts you should debit or credit before you start posting the transactions to them. Work out the amounts of trade and cash discounts before you post them to their correct accounts. So first, let us calculate the amounts. So trade discount, purchase goods from car which cost $3,000 less trade discount of 10%. So 3,000 minus 10% is $2,700. So then sold goods to lie $600, it will be like that only. So return goods which had cost the rod 200 less discount to car. So 200 less discount. So it was you had sold here, right? So car. So you had sold here. Now, so it is being returned. So 20,000 less, 200 less 10% is dollar 180. 200 minus 10% is 180. So purchase goods of which cost 200 before trade discount of 10%. So before trade discount of 10% means so again it will be dollar 2800 minus 10%. 2800 minus 10% is minus 280. 2800 minus 10%, 2520. So it's 2520. So trade discount is never recorded. Remember that. So trade discount is never recorded. So it is 2520. Sold goods switch in for 1300. So no discount here. Law return goods which had cost him $200 less. So this is lie. We are sold for 600. Lie return goods which cost him $200 less discount.
we didn't give lie any discount. So have we given any discount to lie? No. So then this will be as it is. So $200. So there is no discount. It was not given. So it will not be given again. So it will never be given. So even though the question says debit, but we are not supposed to go suppose because here they are not mentioned whether we have given them any discount. Or it may be that there is a mistake. There is a mistake, printing mistake. So if that is the case, then yes, because everywhere it's 10% discount. So let us consider it's 10% discount. It will be $540. So here it will be lie return which it costs 200. So minus 10% will be $180. Then Gerard paid car and linked the amount due to them after deducting 5% cash discount. See, so many big calculations are there. Lai and Chin paid Gerard the amount they owed him after deducting 5% cash discount. So again you have to calculate. So how do you calculate? So wait, let us see how to calculate. So there is space here, so we write down. So Gerard, okay, so Gerard. These are the books of Gerard only, right? These are the books of Gerard. Gerard paid Khor. So we are paying to Khor. So remember whose books? Gerard books. Gerard will never. So Khor and you. Okay, Khor. Khor, how much we have to pay? Khor we have sold 2700 minus we have returned. He has returned 27180. So 2700 minus 180 is equal to 2520 2520 minus 5% cash discount. So this will be recorded. So this is cash discount. Be recorded. So that will be how much? 239. What is cash discount? Cash discount is 2520 plus 186. 2520 minus 186. Now core is over. So now lie. Sold goods to lie 600. Sold goods to lie. Or and limb. So limb. Or and limb you are doing. So limb you right here. Lie you right here. 600. How much has been returned? 200. So 540 minus 180. Minus 360 minus 5%. 5% is cash discount again. Cash discount. So that is equal to 360 minus 18. 18 is cash discount. So the net amount payable will be 340. Okay, then core and lie and chin paid Garod. Lie and chin. Okay, so now lim. So lim. Where is lim? Core over, lie over, core over, lim. Lim is 2800. That is 2520. So are we returning anything? Rim. Is lim returning anything? Are we returning anything to lim? No, we are not returning. So 2520 minus 5%. So that is equal to 2520 into 5%. 126. 5 minus 126, which is cash discount again. Cash discount. So that is equal to 390. So now chin. Where is chin? Chin is here. Sold goods to chin. So chin has not returned any goods. Okay. Chin has not returned any goods. Only lie returned. Only there are purchase returns. We have returned to Mr. Gerard has returned to CA. Return goods. Okay, so you can see. Return goods which had cost Gerard rupees, Gerard dollar 200. Lie return goods which had cost 200. Lie. We are purchasing. Okay, so there is one sales return and one is purchase. Chin. There is no return by Chin. Sold goods to Chin. There is no return by Chin. So 1300 minus 5%. So that is nothing but 1300 minus 5%. 65. 1 2. See, these are the calculations. So that is why it is advised that first you work out the trade and cash discounts before you post them to their correct accounts. So first, these are so many calculations. See, so many different calculations were there. Though this looks simple, some students make mistakes in even in calculating this. So be careful. So then now we'll come to the main part. So which account will be debited by how much, and which account will be credited by how much. So debit. Okay, so purchase goods from car which cost 300 less trade discount 100. So we are purchasing from car. So Gerard is purchasing from car. So purchased. So purchases account will be debited. Account will be debited. Car account will be debited. Car account. So why car account will be credited? Because car is giving the goods. He is the person who is giving. Okay. So when we purchase, when Gerard purchased, car gave the goods. He is the person who is giving. This is the account that is giving the goods. Okay. So that's why his account will be credited. So amount will be 2700. Amount will be 2700. Same. Yes. So now sold goods to lie for $600 less 10% trade discount. So 540. So sold goods. So sales account. Sales is an income always. And who is receiving the goods? Lie is receiving the goods. So lie account because he is receiving. Lie account will be receiving. So that is why his account will be debited and sales account will be credited. Sales account will be credited. Return goods which had cost Gerard 200 less discount to her. So return goods which had cost Gerard. So this is who is returning? Gerard is returning. So it is purchase return. So obviously when he returns, it will be purchase returns. So purchase returns will be exactly reverse of purchases. So purchase returns. Purchase returns. So how much? It is returned to Khar. So Khar is receiving the goods. No? When you are returning back the goods, Khar is receiving the goods. So he is receiving Khar account. Khar account should be debited. So then purchase goods from Lim which had cost 2800 before trade discount of 10%. So purchase goods from Lim. So purchase goods from Lim means purchase again. Purchases is always purchases. Purchases account. Purchases are always purchases. So purchase account. Goods from Lim. So who is giving the goods? So Lim is giving the goods. So Lim account is created because Lim is giving the goods. Okay. Sold goods to Chin for $39. Sold goods to Chin for $39. Sold goods. Chin. So Chin is receiving the goods. Chin is receiving the goods. Chin account debited. Sales account credit. So Lai returned goods which had cost him $200 less discount. Lai returned means this is you have sold to Lai. No? Just see here you have sold to Lai and is returning the goods. Maybe they are defective. That's why Lai is returning. So Lai is giving. So you have to give, you have to credit whoever gives, right? So Lai account will be credited. And it is sales return. Sales return is reverse of sales, so it is debit. Sales return account. So then this is also done. Then now
So this is also over. So this is for this. Gerard paid Khor and Lim the amount due to them after deducting 5% cash discount. So when you are making when Gerard is making the payment, who will receive? Khor will receive. So Khor will receive Khor account, and Lim also will receive Lim account, Khor account, debit, and credit toward bank account. Bank account. But one more thing is there. What is that? Discount account is also there. Gerard paid Khor. So when Gerard is paying Khor, he is not paying certain amount. So which is cash discount. So it is discount received. So it's an income. So discount received will be credited. For Khor it will be 126. Okay. Khor it will be 126. And Lim it will be, again here also discount will come. Discount received. So here also it's 126. Both for Khor and Lim, discount received is 126. So bank account will be how much? Bank account will be 2394. What will be the amount? 2520. 2520 here also. 2520 here also. Khor and Lim. Khor. For how much you have to do? Or you have to debit 2700. What is the discount? No, no, correct. 2520. So this is straight discount. Straight discount is 900. Straight discount is 900, right? So it will be recorded in this. This will be recorded in this. Then Lai and Chin paid. So Lai and Chin paid means obviously money will come into bank. Bank account will be debited. Bank account will be debited. So Lai pays how much? Lai pays 342. Lai pays 342. We receive 342. So Lai. And when we are receiving lesser the amount. So here there is no discount for Lim. Lai returned which should cost 200 less. Lai 342 here is. So bank and discount receipt. Discount receipt is, it's not discount receipt, it's discount allowance expense. So when you pay short, it is expense. Discount allowed is 18. So here it is 360. Now So bank account. So here in this case it is 1, 2, 3, 5. So discount allowed is 65. So chin will be created with this plus this. So that is 13. So now you have to prepare ledger accounts and post the amounts. Prepare ledger accounts and post the amounts. So start doing this. So it's very simple. So we already done this. So you can do the rest of the part. So if required, we can do it in the next class. So dear friends, last class I had given this assignment to you. This is assignment from David Hopkins. So this is very challenging because in this your concept of books of accounts of particular person is very much important. So accounts of one particular person. Suppose the following transaction in the books of both Brian and Ken. See what is if for Brian the transactions will be different. For Ken the transactions will be different. Because if he is buyer, he is the seller, and if he is a seller, he is a buyer. So here it has been asked name of accounts to be debited, name of accounts to be credited. So you should not get confused. You should not get get it wrong. So you are not so see if you write so, but here the question is you have both the transactions in the books of both Brian and Ken. But here they have asked you to write name of account to be debited, name of account to be credited. But whose books? Is this are whatever you are writing here? Are these related to Brian, or are these related to Ken? So, what is the best remedy? Let us for the time being we will consider this as the books of Brian. And for Ken, we will write separately. Okay, books of Brian. So what is Brian doing? We have to see from the point of view. So Brian sold goods. He is selling the goods. So it is sales for him. For Brian it sales, and for Ken it is purchases. So when Brian sells, who will receive? Who is receiving? Ken is receiving. Ken is receiving. And when Ken is purchasing, who is giving? Brian is giving. So this concept should be very clear. Now, Ken sold goods to Brian. So sold goods to Brian. So sold goods to Brian means what is Brian doing? Brian is purchasing. Brian is purchasing. So it is purchases because these are the books of Brian, right? So you have to write it in the books of Brian. So it is purchases for. So if Brian is purchasing, who is giving the goods? Ken is giving. If for Brian if it is purchases, then for Ken it is sales, and the other side it is Brian. So the understanding should be very clear, crystal clear. So don't get confused. Don't get confused.
Brian sold goods to Ken. Again, sales. Sales. So again, it is Ken who is receiving. So if it is sales for him, it will purchases for this. So here then Ken sold goods to Brian means Brian has purchased. So then Ken. So if it is purchases for him it will be sales. So if it is sales this side, then who is receiving Brian? Ken paid Brian for the goods he bought on. Ken paid Brian. So Brian is receiving money. He's receiving cash. And he's allowing discount because it is a loss. He's receiving less. Then who is giving? So obviously Ken is giving. When Brian is receiving, Ken is giving. So now Ken paid, no, simply that's also cash. Cash is good. And he's paying less. So if he pays less, it is discounted received. So it is an income. And to whom? To Brian. Brian paid Ken for the goods he had bought on 2nd April, let's say cash. So now Ben is paying. Brian is paid. Brian has paid. Brian has paid. So cash. So he has paid less discount. So it is here. So here if it is here if it is discount received for it, here it will be cash and discount allowed. And here it will be. So after doing this, you have to prepare the ledger accounts. Ledger accounts of Brian separately and Ken separately. So purchase account, how many ledger accounts is there? Purchase account, sales account, Ken account, discount received, cash account. All these accounts will come in this, and in this, so many accounts. So we'll prepare the ledger accounts. Shall we prepare the ledger accounts? I will give it as an assignment to you, so you can try on your own. So let me see, and I will discuss this in the next class. Dear friends, last class we had discussed this problem. So you can see still on the screen. So it is as it is. So we will now enter the following, enter these, prepare ledger accounts for dispose the following transactions. So we'll post the entries to ledger accounts of Brian and Ken. So how to do? So we'll proceed. So books of Brian. Okay, so books of Brian. So first we'll complete books of Brian. So Ken will be debited with sales. First entry, Ken will be debited with sales. Ken will be debited with sales. Ken, Ken will be debited with sales. So sales. Ken will be debited with sales. So what is the amount Ken is here? So the amount is 50 and it is this. Next. Next one. Credit can with purchases. Credit can with purchases. Credit can. Credit can with purchases. So the amount is 500 less than this number. 500 less and what is the second? Purchases with where can debit can with sales. So 800 less than debit can with sales. Okay, next. Again, credit can be purchases. Again, credit can be purchases. Credit can be purchases. So what is the date? 920%. 60. 70. So, purchases, you know, debit again. So, kept it ran for the goods bought on first April less in cash discount of. So credit can with cash and discount. Credit can with cash and discount. Credit can cash discount. Cash and discount. So cash and discount. How much for goods you bought on first April? You bought for 1500. So we got a discount of 3%. So 53 to 45. So discount alone is 45 and rest is paid. The rest is paid. Rest is 125. So what it is it? Not 10. So cash is to come. Cash column is. So, advance paid. Can how much? Again, discount alone. Discount alone. Discount alone is loss. So what is it? 45. 45. The date. Brian paid Ken for the goods he had bought on second April. So debit Ken with cash and discount is debit Ken cash and discount. Ken cash and discount. Cash date, what date. So this one, well, so now we come out on this for the question not let's say cash discount on second 400 minus 5%, 20 discount received is 20, balance is cash. This balance is cash. This is how it is. So these are the mixer. This is how you have to record. Similarly, so now you can see how it looks. So you can just down. Now you can just have a look. So discount receipt, discount receipt, cash, cash also is good. So here we have to complete the everything. So if you do, so can complete the we all these completed. So date is same. That is also same. Okay, so I would like to mention that all these things are very simple, but very basic and very important. And plus, these concepts are clear. Going ahead, you will get confused in a lot of other concepts. Lot of students they ignore these topics. They take it for granted, like it just we can't we have understood something. But afterwards, they we get some concepts from. So teachers are not tools to teach you unnecessary things, redundant things. They are teaching with a purpose. The books are not written just to fill up the pages, but with a purpose. So please follow it strictly, do it sincerely, study sincerely. So now, Mr. Ken, I will leave it to you. If you want me to even that part, please make a comment in the comment section of the video. I will do it. Otherwise, I am not going to do that. It is assumed that you have understood it. So till then, bye bye. I will
Hello. Walaikum salam, dude. Okay, take out. Page number.
Dear friends, welcome to Shasha's virtual classroom. So today we will work out problems from books of primary.
13.13.
So in this lesson we will learn how we record books of primary, how to prepare books of primary. So
Okay,
this
what
is a
do we
problem
have?
from David Hopkins. So Mrugathayat has the following transactions all on credit March. So purchase goods from Piccolo for $10,000 less trade discount of 20%. Piccolo already 5% cash discount. Sold goods from Snyman for $1200 less trade discount of 10%. We allowed Snyman 4% cash discount. Purchase goods from Walters rupees 8,000
Duly
less
met
trade
means
discount of 10%.
uh,
Walters allowed
wait,
Mrugathayat 5% cash discount. Sold goods to Car for $1,000 less trade discount of 10%. We allowed Car 4% cash discount. Snyman return goods which are
see,
costing $200.
duly met,
Return
no
goods
entry
which are
will come for
costing
them because
400 to follow.
when
Purchase
we
goods
say
from
bill
Delco
sent bill
for
sent for collection, what happens
discount
is
of 25%.
you receive the bills of
We are allowing
exchange and
sales
you give it
discount
to the
of
banker.
4%.
Okay, so what the banker will do? The
Sold goods to
banker will
Colgate for
take the bill and he
less
will
trade
keep it
discount
with
of
him.
10%. We are
So on the due
allowing cash
date,
discount.
he will put money
Purchase
in
goods
your
from
bank.
Piccolo
So
for
the last entry,
$10,000
whatever
less
is
trade
there,
20%.
bills sent
Piccolo
it for
allowed
collection, bank account
Car
debit to bill
purchase
sent for
5%
collection.
cash
See page
discount
number
of 300.
13.14, next page.
Return to burger goods which are cost
So that is
dollar
the entry for that.
1,000. Sold goods to Simon for dollar 1,800 less trade
The
discount of
till due
10%.
date and on due
Mrugathayat
date
allowed
send the bill to banker for a
cash
collection.
discount.
In due course,
Sold
X
goods
receives the
from
information from the
car
bank that
purchase
the bill has been duly met.
to accounts.
Means
So
the person, I
I'm not
mean,
sure about that.
see what is the
And
logistics.
send check principal settlement of their account to
See in this, that's what I told you. The logistics should be very
then
clear.
enter the
Logistics should be
transactions
very
for
clear.
March in Mrugathayat books of payment and holding in good form to the proper account. The transactions should be dated, however, for the purpose of activity. Ignore the dates and post the transactions to the correct books, the correct journal, and the correct ledger accounts. So we should record this in the books of payment. So where should we record this? So what are the books of payment? Purchase goods, purchase register, sold goods, sales register, purchase goods, purchase register. Sold goods, we have to record in sales register. Snyman return goods, so Snyman, who is Snyman? Obviously customer. So sales return. Return goods which are cost to Piccolo. So return goods to Piccolo, purchase return. Purchase goods from this is purchases goods. Purchase register. Sold goods to Cordley, sales register. Purchase goods from Piccolo, purchase register. Car return goods which are costing 300. Car return. Who is car? Car is the
1 minute,
so
1 minute,
obviously it
1
will be
minute.
customer only. So sales return. Return to burger. So purchase return.
I
Sold
not shared
so
only
Simon
wait.
sales register.
So
So return received checks from Simon, Carg and purchase. So we have to record in file for the payments and for the amount received and for the amount we have paid. So now we have to record it. So how do we record it? The first entry. So we'll record entry wise. So first entry, purchase goods from Piccolo for 10,000 less trade discount of 20%. So we don't record trade discount. So we never record trade discount. we have to record the transaction at net amount, so that is at 80,000. So 10,000, 10,000, 20% is 2,000. 10,000 minus 2,000 is 8,000. 8,000 we recorded in purchase register. So purchase register Piccolo 8,000. Purchase register Piccolo 8,000. Okay. So similarly, next. Sold goods to Simon for 1,200 less trade discount of 10%. So sold goods to Simon. So we have to enter in sales register. So 1,200 trade discount of 10%. So sales register Simon.
Hello.
So date particulars it is Simon.
I have to restart. Okay, so I think there is some. It has got stuck. Let me restart the system. You be online only. I will just restart.
Sold goods to Simon for 1,200 less than trade discount of 10%. So we have to record like this. So everything we have to record in each and every book respectively. So sales register will look like this. So Snyman 1080, Carb 2250, Forza 2700, Snyman 1620. So you can see. So it is Snyman, sold goods to Carb, sold goods to Forza, sold goods to Snyman again. So 4 sales entries are there. So we have to record it in this particular style we have to record. So this is known as format or whatever. So we have to record in this particular way. So the transaction should be recorded in this particular format. So format is important. So then the next one we have to record in purchases. So we have done purchase entry. So that's so purchases will look like this. So we have purchased from Piccolo, Walters, Burger, and again from Piccolo 4,800. So we have to enter in purchase journal like this. So take some time to write it down. Then we have to enter in sales return register also. So sales return register, what do we write? So whatever sales we have returned, all those entries. So what is it? Let us see what is the sales return. So Snyman return. Snyman, we had sold to Simon. So Snyman return, which had cost him 200. No, 200. So Snyman 200. So like this, similarly, we have to record all the sales return. Snyman return. Car also return. So Snyman and car we have to enter. So the entries will look like this: Snyman 200, car 200. So similarly, purchases also we have to record. Purchase returns also we have to record. So what are the purchase returns? Purchase returns are returned goods which have cost 400 to Piccolo. 400 to Piccolo means obviously Piccolo has given 20% trade discount. So which had cost him 400 means that is the net discount before discount, which had cost $400 to Piccolo. So that is before discount. So we have to take after discount and we have to record it after discount. So returns purchase returns we have to record after discount. So it's not 400, so it is $320 and burger is 1000. So we have to record it net of discount. So we have to record in sales register, sales journal, purchase journal, sales return journal, purchase return journal. So we have to record in all the journals. Then ultimately we have to record in cash book for the payments made and received. So what are the payments that are made? So after doing all these entries we have passed. Purchase goods. So purchase goods from Piccolo we have passed. All these entries have been made. All these entries have been passed. So now last entry receipt from check. Receipt checks. So we have to consider the discount also. The discount part, everything we have to consider. So let us make the working. So here it is. So Snyman, we have sold to Snyman worth this one. These are the returns. Total. Again we had purchased. Again we have sold worth this one. So total amount is 2500. So totally 2500. He has given a discount of. We have allowed him discount of 5%. So the discount amount is 125. So the net amount 2375 we will be receiving from him. So I made all the amounts, list of amounts. So these are all sales or purchases. So these are all sales. This is also sale. These are all sales returns. These are all purchases. These are all purchase returns. Again these are purchases. These are the cash discount. This is cash discount. This is cash discount. So this is percentage of cash discount and this is amount of cash discount. So the net amount ultimately received or paid is coming here. So we have to do like this. So first we calculate.
What has happened in this year? Only this printer is not. Okay, now it's okay.
So this is the amount, net amount. These are the amounts that are received, and these are the amounts that are discount. So we have to write it. So where do you write? So all these, we guys have paid. We guys have paid. So how much they have paid and what is the discount? We have allowed them a discount. This is the discount we have allowed.
So see what happens. Sale. Okay. So when sale takes place, you will receive either cash or check
This is the amount we have received.
or bills receivable.
So all these amounts we have received.
So when you receive bills receivable, no, you can do four things. What are they? First
And
one
we have
is
paid these three people. These three people we have paid.
discount it with the banker. First you discount it with the banker. Okay, first one you discount it with the banker. Then what is the second option? You send the bill for collection. So the other thing is you endorse it to some other person, endorse it, or you keep and deposit in bank.
And we
Understood?
have
So
got
these are the four options
the
here.
discount values.
So when you sell, you get bills receivable.
If we calculate,
You get bills receivable. Then that money, that bills receivable, what you will do? The first option is you will discount it with the banker. First option is you will discount it with the banker. Second option is you get the bill discounted. You send the bill for collection. So you send the bill for collection means what happens?
the amount we have paid.
Send the bill for collection means what happens? You give it to the bank. Give it to the bank. End of it means
This is how
you give it to some
the
other
cash book
person.
will look like. The amounts we have
So
received.
what that other person will do? He will go and he will give it in the bank.
Allowed. The cash we have received. The discount we have received. The cash we have paid. So this is what
Discounted also, discount
cash book
also,
will look like.
you are getting it discounted from the bank.
And that is also done. So now
Keep and deposit in the bank. See, in all the cases,
what all we did?
finally it
So
is
we
going to
recorded-
bank only.
We recorded.
In all the cases,
prepared
finally it's
register.
going to bank
We
itself.
prepared sales register. We prepared purchase
Finally
journal.
going to bank itself.
We prepared sales journal or
Bank.
sales register. Sales journal we prepared. We
Bank.
prepared purchase journal.
Finally going to
We
bank.
prepared sales return
It
journal.
finally goes to bank itself.
We prepared
Understood?
return journal.
So either case, so this logic stick should be very clear to
And we
you.
have prepared cash book also.
So when you send it for bill, when you send the bill for collection,
So now we
that
have
is to bank, then what the other person will do? The person who has agreed, means the person on whom you have drawn the bill, he will make the payment to the bank. So ultimately the final entry should always be
we have to prepare all the ledger accounts
bank account will be
of all the
debited.
parties.
So it will be
So sales account.
to either
Sales account
what will
is
be
always
the what will
paid
be it? Bills
So we are not
receivable.
supposed
First
to
in the first case
record each and every
it will be
entry. We
bank
have to
account
record
to
the
bills
total.
receivable.
We have to
Second
record
case
the
it will be
total in
bank account
sales
to
account.
bills
So sales account we have to record the
bills sent for collection. Second case, because
So
you have
first
given the
we
bill
have
to bank and banker will put money in your bank account. Third case also the same entry. So in all the three, 1, 2, 3, three cases. Was first case,
So this is the total of sales.
first case, third case, first
Total of
case,
purchases.
third case, fourth case, this will be the final entry. Did you understand this
Total of
picture?
purchases. Sales returns.
So see, the logistics should be very clear. What is happening? How it is changing hands? How it is changing hands? So in this case, in question number 6, second is the scenario. What has happened? You have sold the goods, you have received the bills of exchange, you have received the bill, and for that what you have done, you have given it to bank for collection, and the banker has ultimately put the money in your bank
Purchase
account.
return.
So this last final entry will always be bank account debit to bill sent for collection account, because bill has been sent to collection and that has been honored. So these are the four scenarios always. And for the person who has purchased, there is no option. He has to just accept the bill and make the payment. That's all. Whatever the case is, the person who is accepting the bill, he has to make the payment.
Sales. So how do we
He
record?
has to make the payment
So come to ledger.
for
So
the ultimate. Did you understand? This is
here
the very
always
see. This is what
white column.
you have to understand. The
And
entire logistics you have to understand. The steps. First case, second case, third case, fourth case. These are the four cases scenarios. So if you understood this, no, then it should be very clear. So this is the case. So
we have to record
the
it.
second case
How
it
much
is.
is it?
Okay. Now what you do question illustration 7 you do. So illustration 7 is a problem which is all the four scenarios has been given in
Sales
illustration.
return. Sales return
Next
is reversed.
illustration 7. So illustration 7. See, take out
Sales.
illustration 7. Did you understand this? See, a bill, see illustration 7. A bill for 10,000 is drawn by A on B, which is duly accepted by the latter. The bill is duly met by B on its due date. Means bank account debit to bills receivable. Show that what entries should be passed in the case of A and B under each of the following circumstances. First case, if A retains the bill till due date. So first scenario. Second scenario, if he discounts it with a banker, discount. See, this is second scenario.
Purchases.
First one, what I have done, that is fourth scenario I have written. So if he discounts it with the banker, the first scenario. If he endorses it to creditor,
Purchases.
third scenario. If he sends it to banker for collection, second scenario. See, all the four scenarios they are given. What will be the entries? Unless you are if the concepts are clear, you cannot answer this question. See,
So total amount. Purchases.
bill for collection, yeah, bill sent for collection.
The total amount not record here. So remember we should
Okay.
never have the cost.
So note down this.
Typical
This
equation.
this thing you just take the picture as it is, so that the
What
concept
the
is
total.
clear to you.
Then purchase return. Purchase return is reverse.
Okay.
So journal, purchase return journal.
Okay, so what you have to do? See, journal of B, you see, journal of B, page number 13.15, journal of B, only two entries. A will accept the bill, B will accept the bill and he will honor, that's all. But for A, see how many entries are there? Case 1, case 2, case 3, case 4. But in case of case 1, first entry is common for all. When bill is drawn, bills receivable to B. Okay, so for case 1, case 2, case 3, case 4, there are two entries. See, understood? So this is how. So this is very important part. So this one, illustration 7, it demonstrates all the four cases.
Purchase. Purchase we have to record. Equivalent. So how much? Equal 8,000 4,800. So purchase return is also there. How does purchase return? Purchase return is pay 20. Purchase return is 320. So purchase return is 320. So then we have paid.
See, each and
So
every
we have done
problem is
some
different, no, in this case.
discount. Discount received is
No, no, that's what I said. You have to do all the problems one by one because all the problems are different from one another.
624. So amount we have paid. Amount we have paid is cash. How much we have paid? So you can see the cash book. 11856. So we have to see here and then. So 11856. Now let us just check. So now if we add all this, so that will be okay. So finally we have paid everything. So this is how the each and every account will look like. So we have to make the we have to do the posting. So then accordingly we have to uh, prepare all the ledger accounts. So now we'll prepare ledger accounts. So we have to see the transactions and then accordingly we have to prepare. So Piccolo we have purchased. We have purchased from Piccolo and there was purchase return of 320 and we have received a discount and ultimately we have paid. So this is how we have to record, seeing the debit side, credit side very carefully. Then Piccolo's account is over. Now we have to prepare Snyman's account. So Snyman is a customer. We have sold goods to him. So we have sold. We have returned also. So we have received. We have allowed a discount, and we have paid. So what are the amounts? Sales, sales, sales return. So the discount allowed, cash. So Snyman's account is also done. So now Walter's account. Walter is a supplier, is a accounts payable. We have purchased from him. So these are the purchases. We have received discount and we have paid cash also. So the discount we have received is 360 and cash we have paid is 6,840. So we can see from the cash book. Then again burger also we have purchased from burger. So 5,000 to 250. So there are purchase returns as well. So we have we have paid cash to burger. So what is the discount? Is there no discount? There is a discount, so we'll just see. Then let us first finish this. So remember burger account, there is we have to record purchases. So then cards, card. So we have sold goods to card. So we have to enter sales. We have to prepare card account. We have even made the sales return to him. So we are allowed him discount. So we have to record that, and we have paid. We have received cash. So even that we have to record. Then Hoyt's account. He is a customer. We have sold him. So 2700, and we have allowed some discount, and we have received the balance amount from him. So done. So what is left? Burger account. We didn't give discount. Let us check whether we didn't give discount. We received discount from burger or no. Burger, yes, 170. We paid him 4,080. Burger, we received discount of 170. We received discount of.
How much time you are taking here?
We received discount of.
Hello?
170.
Okay. So you should not miss. Why you are taking so much? Okay. So there are the steps here. You have to remember the step one by one. That's all. Understood? How I demonstrated no on the screen. You have to remember the steps in those. That's and see this chapter is you have to remember the logistics. If the logistics are clear, everything is understood. Otherwise it's not so easy. Okay, this is very technical lesson.
Prepare discount allowed and
How it moves, so you have to be very clear. How it changes hands. That point should be very clear.
Discount allowed from whom and all we have received. So let us see. Discount allowed. We have allowed discount to these three people. Receivables. We allow discount to account receivables only, right? So we allow discount to receivables only. So
No, don't have to. Why? Because see the question, what does it say? The question says show what entries would be passed in the books of A and B only. Okay. So only A and B. C they are not asking, no. That's why it will not come. If you ask for C, then you have to show.
And what is the amount?
The answer depends on how the question is, okay?
What is the amount? These are the amounts. These are the discounts that we have allowed. So, and we have received discount from accounts payable. We have received discount, so we have to record here. So it is an income, so we will credit it. So who are the payables? Who are the accounts payables? These three are accounts payable: Piccolo, Walter, and Berger. Piccolo, Walter, and Berger are three are accounts payables. So we have received discount from them. So the amount is this. So the amount is this, and this. Okay. So this is how we have to see the chapter is very.
Okay, next question. Next is illustration 6. Okay. So illustration 8, sorry. Chandra sold his goods to Dinesh on the list price to 50,000 at 20% trade discount on the same day delivery bill for the amount payable after 3 months. Dinesh accepted the bill. On 4th December, Dinesh retires his acceptance. What is retires his acceptance? He gives the money in advance. Actually, he has to pay after 3 months. So, but what he is doing? He is giving it on 4th September itself. So when he was actually supposed to give on when he was supposed to give August, he was supposed to give on October, but he has given 1 month in advance. He has given. So what you have to do? You have to calculate. You have to calculate the rebate. Rebate means what is the amount payable? 40,000. 40,000 into 15%. Into how many months in advance he is giving? 1 month in advance he is giving. So 1 by 12. So whatever amount you get, you have to write it as rebate on bill. So you will receive only the balance amount. So you will not get 500 rupees, you will get 39,500 and you will honor the bill.
One or
That's
two
all.
problems are more than sufficient.
So you will get the money in advance. So September
if you
4th
let me
itself
know
you will get
in
it
the
in
comment,
advance.
in the comment section, I will definitely do it.
That is the
Otherwise,
meaning
I will
of
assume that you
rebate.
have
See,
understood
see
it.
the heading 13.15 retiring a bill under
We'll move on
rebate.
to the
Retiring
next
under
lesson.
rebate means you pay in advance and you
So
get the
next
money.
lesson is
You will
how
get
to
some
balance
discount.
the
That's all.
account. How
If
to
you pay
balance
money
the
in
account
advance, you will get
from
some
your
discount. It
computer.
is similar to cash
In the
discount,
next
but it is called rebate.
So till then,
It's called rebate.
bye.
Rebate on bills discounted or whatever. So here you see it's the rebate on bill. Okay. So
Dear
September
friends,
4th, you see the
so
entry
we
is rebate
continue
on
with the
bill.
books of
So all the
payment.
entries right from the beginning to the
So
end
this
you
is
have to
another
pass.
column
Right
which
from
is there in
purchase, right
David
from
Hopkins.
sale,
So
up to the
prepare journal
retirement,
entries
up to
with
the
suitable
receipt, up to the
narratives to
payment.
promote the following
Pass.
entry. So prepare journal entries only to ledger accounts, never to other books of prime entry. See here, journal entries with suitable narratives to prepare journal entries only to ledger accounts, never to other books of prime entry. Received from Mumtaz, invoice number 506 dated 3rd March 10,000. This was in respect of the purchase on a machine on credit. So this is the purchase of machine on credit. Okay, so it is purchase of machine. Machine is an asset. So it is not purchases. So it will not be recorded in purchases account because it is not purchase of merchandise. So it will be recorded in journal. So the entry will be recorded as machine account debit to Mumtaz. Why? Because we are purchasing from Mumtaz. Okay, we are purchasing machine from Mumtaz. So the entry will be machine account debit to Mumtaz account. Account debit Mumtaz account credit. So the amount will be, so what is the date? Date they are not mentioned. So they are mentioned just A. Okay, invoice number 506, purchase of machine on credit. What is the amount? Amount is 10,000. 10,000 dollars. 10,000. So you have to write the narrations. Machinery purchased on credit. Void invoice number 506. That's all. So we have to record it. So it will not go to purchase account. So no subsidy books of prime entry, book of prime entry.
Okay,
So
very
we have to
good. You did 8
record
months
it in
also.
journal form.
Journal of Chandar and Journal of Dinesh.
Invoice number 495
Both you are
dated
done.
6th March.
Okay.
Sold
So
to
next
A.
one, wait one, let us see. So X return is acceptance.
So
1 month before delivery and
A.
rebate. 2 months after
The
maturity,
invoice has
then
been
he has
entered twice
entered.
in the
He wants to
sales.
meet his acceptance of
So
20,000 immediately. He
had
agreed to it and
been
allowed him a
entered
rebate
twice.
of
Has already been
18%.
entered, but it is entered twice.
So
we have to pass
9th month you do
rectification
it as
entry.
homework.
So
So don't
what
do
is the
this
entry
now.
when
10th
we make
month,
the sale?
dishonor of a bill.
When we make the sale, the entry
Okay,
will be
so
paid
the
to
next concept.
sales.
So 9th month you do it as
Now
assignment.
you have to
It is the
reverse
same
the entry.
concept, just you have to, the
Paid
entries
to
will come,
sales.
that's all.
Now it will be sales
1st January 2023. So you have to write So when bill is dishonored, so what will happen in case the bill is dishonored? So now all the entries will come as it is, like sales, bills receivable, everything. But when you deposit into bank, you will money will come in your bank. But afterwards, what will happen is, on the due date, no, the bill will get dishonored. Means the person will not pay the money.
Recorded.
So that is what is known as dishonor. So what are the entries in that case? You have to reverse the entry. You have to reverse the entry. Whatever you had see here, page 13.17. When the acceptor of the bill dishonors the bills on the due date, Y to bills receivable account. So you will dishonor it. Y to cash account. Noting charges paid on Y means, noting charges means what happens when a bill gets
Invoice
dishonored.
number 998
1
dated
minute, yeah.
7th March for 4,250 in respect of delivery van purchase on credit from Yunus.
बच्चे को बुला लग जा बच्चे को
Delivery
आता
van
है अपडेट हुआ
on credit from Yunus. Delivery van purchase on credit from Yunus.
Okay, so what happens is when a bill is dishonored, no, you have to immediately file a complaint. So you have to get it. What do you say? You have to get it recorded. So that is known as noting charges. So what you might have seen, no, notary somewhere here and there. Have you seen that notary in everywhere? Yeah. So you have to go to a lawyer and he will put his seal and sign and give, and he will state that such a person has not paid the money and his bill is dishonored. That should be required. That is required. So in the court of law, when you go for court, otherwise suppose if he doesn't pay, no, you have to go to court to get the money. So that is why that is done. So that is what is noting charges. So even that you have to collect from that person only who has dishonored. Okay. So you have to, so the entry will come, see, as it is. So Y to BR to cash, or it is split into two parts. You have to debit him. You have to debit Y. See, in other words, you have to debit Y with bills receivable also. The cash you have paid for noting also.
You see,
Because the cash has gone out from your bank account and the person has not paid the bills. So that's why you have to credit him.
From Yunus and paid.
So in the case of drawee, the person who has given the bill, it is an expense for him, and he has to account it as,
which is purchased on credit from Yunus. Only that will be recorded. So remember, if you write payment entry, then it is wrong. Very well. So never do. Okay. So accordingly, you have to be very careful when writing the entries. So all these entries, which never come in any of the other books, will always come in journal proper or general.
Okay,
journal.
so
This is general journal.
pass do this problem.
Because
Illustration
all these
10.
entries are capable
So
of
all the entries will come right from the beginning. होगा एक महीना होगा करा को एक महीना होगा करा को कौन है उसके बाद हम सुनना
So next, credit note
एक महीना हो रहा करा को आता जा
So you have given credit note, but you have not recorded
मालूम
sales return. So sales return journal. So how do you record it? So what will be the entry? The entry will be, you have to write down in sales return journal, and then the next step is you have to write down the journal entry, that is you have to record the entry. So
do it, come on here first.
Sales return
10th problem.
2.
See, all the entries will come right from the sale to bills received to bills dishonored, whatever. So entry, cash or whatever you receive, and finally you have to receive the money. See, these are all separate again and again. See, again afterwards it is renewal of bill. So all these concepts, unless all these concepts are clear, no, you cannot do the other illustrations. From illustration 12 onwards, it is a mix. So illustration 13. See again, illustration 13 is different. Illustration 14 is different. So illustration 15 is different. Each and every problem is different. Okay. Each and every problem is different. You have to be very clear in the logistics. What is happening, you should be very clear. So accordingly, those entries only you have to pass.
190. Yes, 190. So you can write the entry full narration. So 190.
All the entries, almost all the entries, all the problems are unique only. There are no redundant problems.
Since you can now recorded.
And all these problems you have to practice at least 3-4 times. You have to practice all the illustrations. Just you practice the illustration. That's all. Don't try to put your hands into practical exercises. Never do that. Even for bank reconciliation also, I am advising the same thing to you. Don't try to put your hand into practical exercises for bills of exchange and bank reconciliation statement. You will never get it. You will get pissed off. Means your mind will not work. Don't do that. Just practice the illustrations more than enough.
Account in error.
Unnecessarily, don't break your head. You will not get it.
It has been posted to Geeta's account. It is entered in purchases account, but the posting has been done wrong. The posting is wrong. So instead of posting to Sandra, the posting has been made to Geeta. So it is purchased from Sandra. So you should have credited Sandra. Instead of crediting Sandra, you have credited Geeta. So what you have to do? You have to credit Sandra and debit Geeta. So the entry will be Sandra account debit to Geeta account debit. So the entry will be Geeta account debit to Sandra's account credit. Geeta account debit. Amount wrongly credited to Geeta. Now rectify. So now rectify. So this is how you have to pass the rectification entries. So here you can write. See, it should be in debit column. This should be in credit column. Machine account debit, Toyota's account credit, sales account debit, finance account credit, delivery van account debit, Unas account credit, sales returns account debit, Ravani account credit, Geeta's account debit, Sandra's account credit. What is the amount? So the amount is 1300. So all these are rectification entries. So if you observe, all these are rectification entries. None of these entries will come either in the neither of the books of crime entry, neither in sales register sales this one journal, nor in purchase journal, nor in sales return journal, nor in purchase return journal, nor in cash book, neither of the books that will come in the residual book, that is journal proper. So carefully you have to do this. So this is how we have to record. So this very important aspect. So very entire chapter is based on this suspense account, rectification, suspense account. Lot of questions are asked in AS level. IGCSE also a lot of questions have been asked. So you have to be very thorough in this aspect. The debit and credit aspect you have to be very thorough. So we'll catch up in the next class. Till then, bye. Dear friends, these are exam practice questions from books of elementary. So this is again from David Hopkins. So let us discuss this. So exam practice questions. So this is basically number one. Tanya purchased goods for 1000 less 25% trade discount. So trade discount is never recorded but should be considered. So that is 1000 minus 25% is 250. She was allowed a cash discount of 10%. So cash discount will be considered at the time of payment. So entry will also be passed. What amount should she enter in her purchase journal? Purchase journal she has to record 750. So discount is never recorded at the time of purchase entry. Trade discount is recorded. Trade discount is recorded, but cash discount is not recorded at the time of in the purchase journal. It is not recorded in purchase journal. Next, Lara purchased goods costing 1800 less trade discount of 30%. So 1800 minus 30%. So that is equal to 1800 minus 30%. 1260, 1260. So that is 1260. Okay, so she was allowed a cash discount of 5%. She was allowed a cash discount of 5% means she has to pay less. So how much she has to pay less? She has to pay 63 less 5%, no? 5% of this. So 63 less. So this one. This should be how much should Lara have to pay for the goods? It is 1197. So when we subtract this and this, it is 1197. So this one done. Next. See, these are exam style questions. So similar questions have been asked in the AS level examination. So these are not A level questions, but AS level. So but IGCSE also they have been asked. So then coming to this, Cora sent an invoice to Maria for 2000 less 20% trade discount. So Cora sent an invoice to Maria for 2000 less 20% trade discount. So okay, so 20,000, 2000 less 20% trade discount is 2 to the 4, 1600. So 1600. So trade discount will be considered, but never recorded. So we have paid the net amount. So 1600 it should be recorded at 1600. Cora has omitted to enter. She has omitted. So Cora has omitted. So has sent an invoice means she has sold. To enter in a sales journal. She has not entered in the sales journal. So obviously what will happen? Sales account will be understated by 1600, not 2000 because the trade discount will be recorded. So even Maria's account also will be under stated the 1500. The answer is, so then come this one. Shiung has received a check of $1540 from Raju in full settlement of a debt of 1700. How should this be recorded in Shiung's book of account? So what has happened? Shiung has received a check. So he has received a check of 1540 from Raju in full settlement of 1700. So there is a discount factor. There is a discount factor of 1700 minus 1540 is 160. So this should be recorded. Discount allowed should be recorded, and it should be recorded. How should this be recorded in things? So nowhere this should be recorded. Bank account this should be recorded, and this should be recorded. We have to consider as we have received full money from this guy. So the entry will be this. This one will be
Which one? Both the things you need. General entries in the books of X and general entries in the books of Y.
very clear. So practice these questions again and again.
Okay. So this is next one is renewal of bill. So what will happen is, so before the bill gets dishonored, no, what the person will do, he will come and he will renew the bill. So he will not let the bill dishonor itself. So what he will do, he will cancel the bill and he will reissue another bill. That is what is renewal of the bill. So all the other entries are as usual, but on the after some time the bill is cancelled and again new bill is given. So see here, renewal of bill page number 13.19. Bill to bill. So after you have received the bill, the next entry will be to bills receivable bill cancel. You will cancel the bill, and for that you will receive the interest also. Suppose he has to pay some interest for that because there should be some consideration. This is something like fine or something we can say. So he will receive the bill, then the bill is again another bill is drawn. So that is how it is. Okay. So do illustration 11. See, first you see renewal of the bill entries. So first entry, Y to bills receivable, cancellation of the bill. You have to reverse the bill. So when Y pays the amount of interest in cash, he pays some amount of interest in cash. So you will receive the cash, and interest is an income, so interest will be credited. So when Y does not pay the amount of interest in cash, suppose he does not pay, he will pay. So that's why interest is always credit. But instead of receiving cash, you are debited to Y. Then ultimately what you will do, you will draw one more bill, the next bill, the cancelled bill, again you will redraw on the same person. That's all.
So balancing is
So read the particulars transaction part and this part, understand, and then just do it. Illustration 11 first. See, these problems you have to practice here, so there is no way. Okay, you have to remember. So once you will do, you will not understand this. You have to do it again. At least three times you have to do this.
Before preparation of trial balance. After this, we will be preparing trial balance. So before that, you should know how to balance the ledger accounts, because trial balance is prepared on the basis of balance.
You have to go in the order of the story only. Okay, you have to go in the order of the story itself.
So in this question, this is a small question. So first, let us make a list of debits and credits so that our writing the ledger entries will become easier. So
today's holiday, tomorrow and day after.
And write which account will be debited, which account will be credited in each case. So paid into savings, paid is savings into
all other schools they have given today's holiday.
So bank account, money is coming in bank.
Okay, since yours is Christian institution, I think they have done that.
So bought goods for resale on credit from Joe. Bought goods, so purchases. Paid rent of a shop by check. Rent. Sold goods to Barney on credit. Sales. Barney. Sales. of goods, the money was used to set up cash flow, made cash sales of goods, cash sales, return faulty goods to Joe, returns returns to Joe. Joe paid by check for the goods he had bought after deducting a cash discount. So Joe has paid means paid Joe by check. So we have paid to Joe and we will receive a cash discount. So this is discount received. So then by check means obviously it's bank. Then paid for postage by cash. So postage. So now we have to prepare all these accounts: bank account, capital account, purchases account, Joe account. So ledger accounts, prepare necessary ledger accounts, 3-column cash book, 3-column cash book, to record the transaction. So most of the entries will come in cash book also. So and some entries will come in ledger account. So then balance the accounts at 31st March and bring down the balances. So we have to balance also. So then what we'll do? So we'll start preparing all the accounts one by one. Okay. So capital account, purchases account, Joe account, rent account, Barney account, postage account, sales account, purchase returns account, and discount received account. So all these accounts we have to open. So now, what is the first entry? Paid his savings into business bank account, 10,000. So that is on March 1st. So March 1st, bank account should be debited with capital, and capital account should be credited with bank account 10,000. March 1st. Capital account should be debited with bank 10,000. 10,000. So then credited, capital account will be credited. So capital account will be credited on March 1st. So bank account 10,000. Then first entry is completed. Bought goods for resale on credit from Joe. Bought goods for resale on credit from Joe. So that is on March 2nd. Purchases to Joe. March 2nd. Purchases purchases sorry purchases account is debited with Joe. business account should be credited. So purchases. So what is the amount? Amount is 4,000. 4,000. Then what is the next entry? Paid rent of shop by check. Paid rent of shop by check on the same day. Paid rent of shop by check. So March 2nd. Rent account. So March 2nd. By check means bank account. What is the amount? The amount is 1,000. 1,000. So the entry is complete. So now come to the next. Sold goods to
Okay,
Barney
so
on
very
date.
good. So
Sold
you
goods to
got it
Barney
now.
on
So
date.
11th one you have done, 12th one you do here. So we'll end the class by 6:15. Okay, so 10-15 minutes got wasted. No, that's why we'll end the class by 6:15. Hmm? So you do illustration 12. Come on first. Now the assignment for you is you have to practice all these illustrations up to whatever I have done till now. No, so you have to do all those one by one. You have to do at least 2 to 3 times.
Sold goods to Barney.
Otherwise, it will not register in your mind. Okay, so it's very important.
Barney. What date? So it's on 3rd March. On 3rd March. 3rd, 3rd March. So you know why it is debited, why it is credited, right? So this all these aspects are clearly explained in chapter 1 and chapter 2. So if you have any doubts, you can just revert back to chapter 1 and 2 to see which accounts will be debited and why and all those things, so that the concept is clear. So don't assume, presume without with half knowledge. Don't try to do the problem. So be sure, 100% sure before passing the entries. So don't commit any mistakes, so that the concepts are clear. So if the concepts are not clear now, then everything will go wrong. So the amount is 2,000. So everything will go wrong. So be careful. Then, so the entry is complete. Sales entry is also complete. Made cash sales of goods. The money was used to set up cash cash goods. So you are receiving cash on selling of goods. cash sales. So cash sales are happening. So sales are always sales, whether they are cash sales or credit sales, or if you want, you can write it separately, credit sales and cash sales separately. So this, since this is a simple problem, it's okay. You can write both merged together. So cash you are receiving, how much you are receiving cash? It is 550 bucks. So 550 you are receiving cash. So when is it? It is on 3rd March. 3rd March. So March 3rd. So cash. So or otherwise you can write sales also. It's not an issue. It is not wrong to write sales. And in cash column you write. So what is the meaning of cash flow? To keep it handy. To keep it handy. Cash to keep it handy. They have sold some goods and they have kept money. So sales, the same date, cash account 550. Okay, now coming to the next part. Returned faulty goods to Joe. Returned faulty goods to Joe means from Joe we had purchased, now we are returning. So it is purchase return 200. Fifth. On fifth there is purchase return. On fifth there is purchase returns to Joe. How much?
Are you getting here? Did you get all these
200.
points? Are you understanding or no?
200.
Okay, very good. So you have to understand and do. This lesson is like that. Okay, without
Plus
understanding, don't try to
103.
write even one entry. If you have any doubt, you can ask me.
So to whom we have
So we'll wind up because I have another class after this.
sales account?
So you will just continue and close it up. Okay. So you practice the
So
same problems till illustration 12 you practice,
March
and we'll catch up in the next class. Okay, bye.
what is the value? 200. 200. 200. 200. So the entry is complete. So now come to paid Joe by check the goods we had bought after deducting 5% cash discount. So cash discount. So we have to calculate how much we are paying. So 4,000. 4,000 is the purchase and 200 is the return. So 3,800. 3,800 we have to pay 5% cash discount. You have to deduct and pay 3,800 minus 5%. 3,800 minus 5%. You have to deduct and pay. $190 is the discount. 190 is the discount. 190 is the discount. So you are paying Joe. Joe discount. So 190 is the discount. So how much you are paying? 3610. 3610 you are paying. So when you are paying this, you are paying this on 7. So you are paying this on 7. 7. So you are paying this on March 1. What is the amount of rent you are paid? Rent you have paid 1000. Rent you have paid 1000 and you paid it by check. So this is also done. Now cash discount. Paid for postage by cash 20. Paid for postage by cash 20. So paid for postage by cash what date? 76. Postage. Postage account. By cash 20. So postage account you have to enter in postage account also. So you have to enter in postage account. Cash 27th March. March 7th. So dollar Joe you have paid, right? Where is the entry related to Joe's payment? You have paid to Joe. How much you have paid to Joe? You have received cash discount received also. Discount received and you have paid money to bank account. So bank account is 3610 190 is the discount received. So discount received also should be entered. Discount received is again. So Joe has Joe so 190. So the entries are over.
Hello.
So all the entries
Ah.
have been made.
Can you hear me, dude?
Please cross check whether all the entries have been done.
Hello.
So you can cross check, I'm sure. But you also
Hello.
check. Then now
Hello. Can you hear me?
prepare the necessary ledger accounts and 3-column cash book. So we have prepared
Hello.
3-column cash book. Balance the accounts at
Can you hear me,
7th
yaar?
March and bring down the balance. Now we have to balance and bring down the balance. Now this part is remaining. So we have to learn how to
Hello.
balance the account. So this we are going to learn. this is the main thing we will be learning in this lesson. So come to cash book. So cash book, what we have to do,
Hello.
has everything been entered in cash book? Cross check once if everything has been entered. So then what you have to
Hello.
do, you total it.
Hello.
So you total it up
Okay. Okay.
like this.
So, Acha, so can you see the screen?
So when you total it up,
So can
obviously,
you solve this simultaneous equation? Solve the following simultaneous equations. So you have to solve. You know how to solve it. You have to do it. You just no, how do you calculate? How do you do simultaneous equation? So you have to what you have to do? You have to what into two the entire equation. So this is into one. So that this will become 3 2 is 6 6x. No, not here, sorry. This is
so
1,
you
here it
see
is 2, here it should be 1,
in the cash
here
column
it
there
should
is
be
a
2. So you
total
have
of
to bring one number to common. So
550 on the debit
make
side.
this y also
Bank
2y.
column there is a
So
total
3.
of
So this one you have to
10,000 on the
multiply the entire
debit
equation,
side.
you will multiply with 1. So
Discount
the entire
column
equation you
same.
multiply with
Here
2.
discount
So
column there is
1 3s are
190.
3, 3x
Cash
plus
column
2y
20 is
is
in
equal to
credit side.
13.
Bank
So
column
this
there is
one 2 2s are 4, 4x
4610.
minus
So
2y
how we have to balance
is
this?
equal to 8.
This side is
So
heavier, this
now
side is
what
heavier.
happens? This and
This
this
side
gets
is heavier.
cancelled.
So
So
this
this will become
minus this. This side
8,
minus
13 plus 8, 8 is how much?
this.
21.
So basically
13 plus 8 is 21. 7x.
balance carried
7x
down.
is equal to 21. So x is equal to
Balance
21
carried
by
down.
7. So that is
Right.
equal to 7 3 is
Then
21.
what you have to do? You have to
So
add
this is how you have to do. So now you
find
have
the
got the
difference
equation
of this
of,
value
you have got the value of x.
and
So now you have to do find out the value of y.
value and
So how do you find out the
so
value of y?
whatever
You have to substitute the value of y and then you have to find out. So like 2x minus y is equal to 4.
is equal to 10,000
2x
minus
minus y is equal to 4.
4610. So
Correct. Yeah,
directly
2x minus y is equal to
see
4.
when you
So
put
x
this
you have
value,
got
this
value as
both
how much
will
you
become
got?
equal. So
7,
the
no?
total should be such that whatever amount you put,
7
the
or what?
total will be
X you have got it as 3.
same.
What happened?
This should be same.
You're
So
sleeping,
to
huh?
find that we have to put that balancing figure. This is the
What?
balancing figure. That's why it's called balancing
What has happened to you?
Similarly, here it is 550. Here it is 20.
Your voice is
So
somewhat,
what you have to do?
you have got colds or what?
550 minus 20,
Tired
530. So that even this,
is equal to 4.
both the
So
total
now you have
becomes
to simplify.
5.
So 2 3 is 6 minus 4 is equal to y. Y is equal to 2. That's all. So
And
y
what
is equal
about
to
discount
2.
column? No, never. Discount column should
Okay,
never
this
be
is how you have
balanced
to do.
because
So
it is
work
just
out one just a simple one
it
more
is
problem.
not part of
I will just give you one
ability.
more problem.
We are just posting it. So we should not. We have to write this directly to the
What happened?
ledger
If you are
account.
not feeling well,
So
we'll
it is
cancel the class.
discount
No issues.
dispute. We have to write as it is. We should never balance this. Remember, we should never balance discount column. Never balance discount column. If you balance discount column, it's wrong. So when you are doing cash book problems in AS level and IGCSE, you may be asked one or two cash book problems. So never balance
4x plus
the
2y.
discount column. Should never balance it.
4x yes.
Then here, capital account should be
2y is
balanced.
equal
So
to
now
3.
coming to here, this is the
3x
cash
minus
book is
4y
over.
is equal
Cash
to
book
5.
is done. So this is known as both
3x
book of prime entry and
minus
book of secondary entry also. It is ledger
4y
also for cash.
is
It is
equal
cash
to,
ledger and bank ledger.
okay, just do this
So it
common
is
factor.
cash ledger, bank ledger. So that's why we never record. We never prepare ledger account for cash and bank. This is both. So it is both primary and secondary So now we have left out with the other account. What are the other accounts? Capital account. So capital account this side is 10,000. So this will become carry down 10,000. So that both the sides are equal. So this is how did you get this? This is 10,000 minus 0 because nothing was there on the.
So has your teacher started
So
transportation?
here the amount is same. So this will become balance carried
Okay,
down.
you are getting it.
Balance got down. When is this? This is March 7.
Fine, I guess why you are not attending the classes.
So total
Then
10,000.
okay.
10,000. So balance brought down will be again 10,000.
Then 2 days holiday, yeah? Tomorrow and day after. Only one day. Okay.
Okay. So normally nominal accounts like purchase account and sales account, they are not balanced. Why they are not balanced? They are directly taken into trial balance. They are just totaled and taken into trial balance. So rent account is not balanced. So you have to just total it up and take it directly to trial balance. So Joe's account,
Why?
Joe's account. So if you see,
Then how will you cancel? Top one you can multiply with 2. Hmm. So that y has to be on the same line so that it cancels out.
both the sets are matched. So both the sets are same. So there is no question of balancing at all. So both they are already balanced. There is no balance brought down or carried on. So there is no difference. So that's why we should not do anything. Then rent account is a nominal account,
Just one
expense
problem
account.
you
So
know,
it is
that's
not
enough.
balanced. So just we have to total and take it to the trial balance directly. Barney account. Barney is a customer. So accounts receivable. So we have to balance it. So it should be balanced on March 7.
Just tell me whatever.
It should be written as balance carried down. So that will be same amount 2,000. So again, totally same 2,000.
1.375.
Total should be same on both the sides. Remember, both the sides total should be same.
How come
So these are the
1.375
totals.
you get?
So what happens is
No,
8th
wrong.
March 8th, they become opening balance.
What happened? Why?
March 8th, they become opening balances. They become balance
Just check.
brought down. We have
Send
to
me the solution at
bring
least.
down the balance.
Send me.
So
Send
that
me.
is 2,000. So postage account is not balanced. It is a nominal account directly transferred to this one trial balance. Sales account directly taken into sales account directly to trial balance. There is no question of balancing. Purchase returns you should not do. You should just directly take it to the thing trial balance. So discount receipt zero account directly taken to trial balance. So what should be balanced is only the personal and real accounts and the assets and liabilities. That's all. Always assets and liabilities should be balanced. So whether they are non-current assets, non-current liabilities, only they should be balanced. In other words, the balance sheet items. So they are called the items of balance sheet. So these are assets. No, cash is an asset, bank is an asset. So it is something which we always keep. So it will always be running. So that is why. So see here, balance carried down will become balance brought down in the next year. So it was balanced on 31st March. On 7th March, the balance was 530 rupees. $530 and $5,390. So which became opening balance on 8th March, that is $530 and $5,390. So this is how we have to balance. So this is done.
How much? Okay, what is the other one? Okay, what is the other one?
Have a good day.
Yeah, you can
So
take
dear
any
friends,
equation.
this is one simple lesson with the classification of counts and division of the ledger. So we have seen in part one, we have read everything of it. So this is simple practice exercise just to question up. So we can just discuss this. Complete the following table to indicate whether or not following statement is true. The purchase of motor vehicle, motor car is revenue expenditure. It's false. It's not true because it is capital expenditure. False. So then the payment of wages to employees is revenue expenditure. True. The account of customer is kept in sales ledger. The accounts of the
Yes,
accounts
enter.
for customers are kept in sales ledger. No, no, it's false.
And receive some.
The repairs of the office windows is an example of
No,
capital expenditure.
you have done
False.
some whatever again. Just check.
Revenue expenditure. It's not capital. The purchase of stationery is revenue expenditure. The sales account is a nominal account. True. The figure and fittings account is a real account.
What such a simple
Fixtures
problem you
and
are taking
fittings
so
account
much
is
of
a real
time?
account. True. Suppliers accounts are kept in nominal ledger. False.
I think you are too tired today.
They are not kept in nominal ledger. They are kept in specific suppliers accounts and payables ledger. The day-to-day cost of running the business are an example of revenue. This is revenue expenditure. So complete the following sentences by inserting the correct word from the following list. The sales account records the dash of the business and the example of dash account. Complete the following sentences by inserting the correct word from the following list. The sales account records the revenue is an example of nominal revenue. Nominal account. The purchase of new machine is an example of capital expenditure. Non-current. Non-current expenditure and account is an example of
Correct. Minus 0.5. Okay.
small item expenses expenditure recorded in
Finally, what?
the ticket.
Okay, now
A dash asset is required to keep the business for a long period of time.
we will do Kramer's rule. Okay.
Non-current expenditure.
So what is Kramer's rule? They will give the equation. So the same equation, let us say the same equation which we did first.
So here,
What
it's
was
not
the
non-current.
equation?
It's capital account.
3x plus 2y is equal to 13. 3x plus 2y
Capital account.
is equal to 13.
Okay. Very simple
2x
problem.
minus y is
So
equal
we
to
wind
4.
it up and we'll
2x
continue in the next class.
minus y is equal to 4.
Dear friends,
So by Kramer's rule,
welcome to Shashan's structural classroom.
by
So
Kramer's
today
rule,
we'll be discussing trial balance.
x is equal to dx by d Y is
How
equal
to
to
prepare a trial balance
dy
and
by d. Okay, so you remember by Kramer's rule x is equal to dx by d, y is equal to dy by d.
came from
So what is d? What is dx?
David Hopkins.
What is dy? First you have to find out that.
You can see
D
again
is equal to
all the details.
how much? Dx is equal to how much? Dy is equal to how much? So this is just for your understanding. Okay, so don't write this. So first d. So what is d?
Prepare a
D
trial
is equal to
balance
what you have to do.
as
So
at 31st
you
March
can see they have written
2020.
3 and 2. Okay, so D is what?
The balance on it.
Whatever they have written no, in the
So
equation.
we are supposed to prepare the
Whatever
trial
they have
balance.
written in the equation. What
How
is the
do we prepare
equation?
the trial balance?
3x
So the trial balance, the format of trial
plus
balance is
2y.
something like this. So
Okay, here only.
trial balance has on
D is equal to
and particular debit. So
this itself.
it is a
3,
statement. Okay? So it is a statement.
2,
So it is trial balance as on
2
December
minus 1.
2020. So
So what do you mean by this? What is
we
this?
have to
Two straight lines?
just plug in the figures. So they would have given the details. We have to just plug in the figures. What will come in debit and what will come in credit. Sales
This
will
number,
always
see?
come in credit. Sales return is opposite of sales. Sales will always come in always come in debit.
This.
Purchases always debit. Purchase return always credit. So
Understood?
you have to understand this.
So you have to write this.
Whatever
So
you
then
have done
what is
till now, you
dx?
have to apply and
Dx
then
is nothing but
you have to prepare the trial.
right as it is.
So coming to the question again here, see the
This
question
is y, right? So y, whatever is there in the place of y, write as it is. 2
So remember
minus
one thing.
1. So in place of x, what you have to do, in place of this, you have to write these two numbers.
Assets
You have to, no, these numbers. These 13 and 4.
and expenses
13. So what is dy? dy is equal to
are all
correct. 3, 2, 13.
okay, assets, real account assets.
Now you find out the determinant. How do you find out? 3 into minus 2
So all these are assets.
minus of
So all
2
these
to
are
the
expenses.
4 like that. You know now how to do the determinant, find out the
All these
determinant, you do that.
are all debit balance. They should be
3
all
into
debit.
minus 2, 3 into minus
Always
1
be
minus of
debit balance
2 into
and
2.
they should appear on the debit.
Do that.
Okay. So remember this, learn this graph. So this is very
Find out dx, find out d,
basic
dx and
information
dy. Come on first.
to for balances. Then liabilities and income. Liabilities and revenue are all debit
You have to find d, dx, dy.
balance. Liabilities and revenues are all credit balances. So what are liabilities? Liabilities are something we owe, right? So liabilities can be internal as well as outside, external. So internal is capital. So external are like loans, accounts payable, all those are liabilities. So payables, all payables are liabilities. So these are all external liabilities, these are internal liabilities. So whether they are internal or external, they are always credit balances. Revenue or income are all credit balances. They always both are either the credit. So simple. So unnecessarily don't exaggerate, learn a lot of things, nonsense and all. Just remember this. You can do. You have to just identify whether the given particular item is debit or credit. So sales is a revenue. So it is an income. It is a credit balance. So sales return is a debit balance. So purchases is a debit balance. Purchase returns. Purchase return is again credit balance. Wages is again debit balance. Heating and lighting expense debit balance. Rent payable expense debit balance. Rent receivable income debit balance. Advertising expense debit balance. Postage and telephone expense, debit balance, discount allowed, expense, debit balance, discount received, income, revenue, debit balance, plant and machinery asset, debit balance, delivery van asset, debit balance, bank balance asset, debit balance, trade receivables asset,
Hey, stupid
debit balance,
fellow. Do it properly. 3 into minus 1 is how much here?
trade payables, liability, credit balance, drawings, opposite of capital. That is always debit balance. Drawings by default credit balance, but it is balancing figure. So
How
you
3
have to
into
put
minus 4
according to
it is a
your
minus
thinking.
1, no?
Put it on
What
the
is
debit
there? I have
and credit side,
substituted.
and then you can
3 into minus
note
1. We have
that
to
in
go in
the
this order. We have to always go in this order,
can do it.
dude. We have to always go in this order. 3 into this
So
minus
can
this
see
into
the
this. Always
transaction.
we have to. That's what. So it is 3
So
into minus 1
seeing the question. So here
minus
you
2
can see
into
this is the
2 into
question.
2.
This
So
is
it
the
will be
level.
minus 3 into
So you
minus
can
1 is how much?
note down or take a screenshot
Minus
about
3,
that.
no?
Or if you have the
Plus into minus is minus 3. Minus 2
then
2 is 4. Minus 4 is equal to minus 7, right?
so now
Ah,
sales sales is an income, sales
what
return
happened
is
to
an
you?
expense, purchases is an expense, purchase return is an
Correct,
expense,
minus 21.
wages is an expense, heating and lighting is an
This is
expense,
minus 21
rent
and this
payable
is
is an
minus
expense,
14, correct.
rent receivable is an
So you
income.
have to just
So
substitute
this come
21
on
by 7.
5.
You will get the same answer what you got
Revenue is an expense,
initially.
post and
7
telephone
3s
is an
are
expense,
21.
discount allowed is an
7
expense,
2s are 14. You will
discount
get
receivable.
3 here.
So
So
it
is
is
equal
receivable.
to
So rent receivable
3
is an income.
is equal
So
to
discount
2.
received is an
Ultimately, you
income.
will get the same answer. That's why I made you do that
Plant and
problem. That's
machinery
all.
is an
Nothing else.
expense. Is an asset. Always a debit
Understood?
balance. Then
So it is.
delivery van is
Now
an
you do the
asset.
next one. Next problem which I gave you to,
Bank is an asset.
that one itself we do again in
Trade
Kramer's rule.
receivables is an asset. Debit balance. Trade payables is a liability. Drawings always a debit balance. So then when
What
we go to
happens to you?
this,
Sometimes you are
we
very
get
active, you will do everything correctly.
110,000
Sometimes you will get.
and 175,000. So capital will be the balance. So what you can do is 2 lakh 10,000, 210,000 minus 174,000. So see, when you put this will both tally. So this is balancing here. Simple. So it's very simple. Just you need to know this concept. So just
If
remember
you are tired, you would have
all
taken some
assets
rest.
and
You would have
revenues are
asked,
all debit
requested the class
balances.
by 7 or
All
8. No
liabilities and
issues.
revenues are
You
all
would have had at
trade
7 or
balances.
8.
Just remember this
So if you are
simple
tired,
formula.
you don't do like that.
Very simple, very easy. So easy marks if it comes into question.
By then I will get exhausted. If it is late, no, 8 or 9 or something like that, I get
Lot
exhausted.
of
So
questions
that is why.
are based on
I
this
just want to finish
balances,
almost if
concept of
possible.
balances.
Whatever is possible,
So
I want
often
to finish
using
it.
this
So that
concept
afterwards I can just relax.
in solving lot of problems.
That's why I gave what is always possible time. No, I will give and try to
So
finish.
we'll just finish this and you just see the next problem. So next problem is an inexperienced
For me, it's
people
not
are
an issue.
instructed to
Okay.
trial balance
But I
as
want
that
you to
book
be
of
active in the
number from
class.
Apple books. It contains some errors and does not balance. Premises, this is correct. Our plant and equipment, this is correct. Office equipment, etc. Correct. Wages is correct. Rent payable is an expense, so it should not come here. So it should not come here. It should come here. So heat and lighting correct. Other operating expenses correct. Sales is correct. Purchases is correct. Discount allowed is an expense. It should come here, not here. So discount received is an income. It should not come here. It should come here. Bank account is a debit balance, correct. Trade receivables is a debit balance, correct. Trade payables is a liability, is correct. So purchase returns. Purchase returns are opposite of purchases. It should come on the debit side. So it should not come here. It should come this side. So sales returns. Sales returns are reverse of sales. They should be debit balance. It should come here. Rent receivable is an income which is from this side. Capital is a liability. Drawings should not come here. Drawings should come. So that's all. So you can do this as a assignment. So it's very simple, very easy. So this chapter is done, and this is the end of bookkeeping. So we'll see. We'll start financial accounting in the next class. Till then, bye bye. So dear friends, so welcome to Shosha's virtual classroom. So we'll be doing exam practice questions. This is again from David Hopkins. Similar questions are being asked in base level examinations. So this is from statement of financial position. Okay, so statement of financial position. Now, multiple choice question. The purchase of an office computer has been debited to office expenses. So where should that be debited? Office should be debited to non-current asset, right? Because it is office computer, so it is non-current asset. So we should go to non-current asset. Whereas they have debited to office
Dude, I
expenses.
asked you to
So
do the previous
what
one.
has
No? How
happened?
you got? You have to get the same answer.
The
No?
profit has come down.
Which one? Which is the previous one?
So the profit has
This
come
one.
down. The profit is understated. The profit is understated.
3x minus 4y is equal to 5. Ah, you have to get the same answer, no?
The profit is understated.
You have to get the same answer, dude.
And even
how much you got? You got 1. X is equal to 1.
Understated because it has not
Y is equal to
shown as
minus 1 by 2.
non-current assets.
You got this. So it's again in the Kramer's rule also you have to get the same answer. It means otherwise you have done some mistake.
Right. So this is the simple.
Check, cross check.
Okay. Then next one. So the owner of a business has taken goods for her own use, but no entry has been made in the books to record this. Oh, so it has not been made. So what happens? What row will show the effect of this on the statement of financial position? So what happens? Oh, inventory will be showing higher. Inventory will be showing higher because inventory has not been recorded. Drawings has not been recorded. So it will be showing. It will be overstated. What will be overstated? Inventory will be overstated. So then what happens? And even obviously the double effect. To complete the entry, you would not have debited to capital account. So the capital also will be overstated. So this is the right. Okay. So the following information has been extracted from the statement of financial position as of 31st December 2015. Non-current assets are 310,000. Working capital is 30,000. Long-term loan is 20,000. Profit per year is 35,000.
Okay, now you do this.
So non-current assets, working capital. So what are the steps? You have to
2x
add
plus 3y is equal to 8. X plus 2y
so you have
is
to add
equal
the
to 5.
non-current assets and working capital. So that will be 3,40,000. 340,000. So long-term loan you have to subtract because it is non-current liability. Non-current liability you have to subtract. So that should be 320,000. So 320,000 is net assets. So we have done the problem already. So net assets should always be equal to capital. So what is the net assets? Net assets is 3,20,000. 3,20,000. So what was the balance on the capital account on 31st December 2015? So this has no relevance. This has no relevance. So if the concept is clear, you will not even think about these two items. You will just straight away see this and you will select this. So that's why the concepts are very, very important. You have to clearly understand the concept. If you are not understood the concept, then you will get this wrong and you will mess up. So don't be in a hurry when solving MCQs. Be careful. Carefully you solve the MCQs. Explore all the options. Be conceptually perfect. Be conceptually strong to secure A plus in A levels. Okay, so don't be near, never be near. So which of the statements is not correct? Assets is equal to liabilities plus capital. Correct? No, liabilities, assets is equal to liabilities plus capital, because assets is equal to liabilities. So capital is also internal, internal liability. So this is correct. Okay. So capital is equal to assets minus liabilities. This is also correct. Just now we did assets minus liabilities is equal to capital. This is also correct. Then capital minus liability. Capital is also liability. This is also liability. They cannot be equal to assets. This is wrong. So this is the correct answer. So liability is equal to assets minus capital. Correct. Assets minus capital will always be equal to liability. So you can do this using the formula. So by substituting here and there this one. So you know that, right? So assets is equal to liabilities.
X is 1, Y is 2, correct.
So you might have already learned this in basic accounting, like accounting
Next
equation.
one.
So you might have done a lot of problems also based on this.
3x
So
minus
this is the first lesson that is taught in accounting. So you must be knowing this. So when you just crisscross this, when this comes this side, it becomes minus. When minus comes this side, it becomes plus. So all these things, you know, if you know this basic simple math, then you can do this. So simply, so this is the answer. So this is over. So we have covered statement of financial position. One simple problem also we had an MCQs also. So you have understood
3x minus 4y is equal to 7.
So
4x plus
please share
5y, it is 5y
spread the
is
knowledge.
equal to minus 1.
Please share so that others also get the benefit of my classes. Okay. So please share. Thank you. Have a good day. Good night. Dear friends, welcome to Shasha's virtual classroom. So today we will be discussing statement of financial position. So we will be, this is very important class. So please have patience and focus on this. It's very important. Okay. So statement of financial position. Financial position. So first step is non-current assets by default. Okay. So non-current assets. First, you should understand what are non-current assets. So you have to make a list of non-current assets. The trial balance would have been given. So from that you have to make a list of non-current assets. So what are the non-current assets? Non-current assets are those assets which are intended to use in the business for a period of more than 12 months. For a period more than 12 months from the date of financial statement. So very important. Okay. So non-current assets are those assets which are meant to be used in a business for more than 12 months from the date of financial statements. So what are financial statements? Income statement, statement of financial position, and cash flow statement are known as financial statements. So basically here, what all is included? So you have to include, you have to prepare the list in such a way that most permanent ones are written down. For example, land and building. Land and building. How many years do you use land and building? Maybe forever. So land you will never intend to sell. Normally you will never intend to sell. And building maybe you may again you may change it after maybe 15 years or 20 years or maybe after 25 years or 30 years or something like that. But
okay,
land
perfect.
will never be. It's
Now
not intended. So it is more permanent. It is most permanent.
5x minus 7y.
Then what is the next one? Next one is machinery. Okay, so plant and machinery. So plant and machinery,
7y
maybe
is equal to
you can
2.
use it for at least 10 to 15 years
7x
unless
minus
there
5y
is any technical changes. So the next one. So then comes
is equal
vehicles,
to
motor
3.
vehicles or vehicles. So because you'll be using them
Do this.
for a longer period. Then comes furniture. So non-current assets are those assets which are intended to be used in the business for more than 12 months from the date of financial statement, and they should be written down in the order of permanency. So first land and building, then plant and machinery, vehicles. So based on whatever the items the business has, based on that you have to use your common sense and you have to prepare the list. So that is the first step. You have to prepare, you have to write down the list of non-current assets. Then second one is current assets.
Did you get your marks here for the last exam? When should you? Almost so many days over. Uh,
So what are current assets? Current assets are those assets which may vary. So immediately after 12 months, they say in the very next day they may change. So they are inventories. So what are inventories? Inventories are merchandise which are lying in the business after the on the date of preparing the financial statement. So inventory. So that is one thing. Then trade receivables. So what is trade receivables? Trade receivables are credit customers. Credit customers from whom we have to receive money. So to whom we have sold on credit and we are supposed to receive money. And the third one is cash and cash equivalents. Cash and cash equivalents. What are cash and cash equivalents? Cash and cash equivalents means it can be cash in hand, cash at bank. So maybe those fixed deposits which are immediately which can be immediately materialized, like very short-term cash deposits. So all those are cash and cash equivalents, particularly cash and bank balance. So we are, this order is important. So it is recommended that the order of these assets should be in this particular order. So again, the items are based on the question. So whatever details have been given in the question, based on the details that have been given in the question, so the current assets list of current assets should be. Then third one. Then third one is current liabilities. So remember, this is with regard to financial statement of sole traders. Okay, these are with regard to a financial statement of sole traders. Because when you are preparing financial statements of company, the format is entirely different. The format is entirely different. The items, the items are same, but the headings are same, but they have to be shown that the form of presentation is entirely different in case of companies and other entities. So be careful. So this is meant only for sole traders, and you have to learn this. You have to learn this how to go ahead with this preparation of statement of financial position, current liabilities. So what are current liabilities? What are current assets? Current assets are those which change within a period of 12 months. Inventories today, inventories may be something else. Tomorrow there may be something else. You keep buying and selling the goods. So similarly, trade receivables. So you keep selling, you keep receiving the money, so they will not be same. Cash also, cash will be receiving and paying. So that's why This will not be same. So because of this, all these are, what do you say, they are dynamic in nature.
How much you got X is?
They are dynamic in nature, means they keep changing. So this is another way you can remember. You can just use your common sense to identify.
Okay, very good. So done.
Make a
So
list
now
of
we'll do with
what are
for
bank
three
liabilities.
variables.
Current
Okay.
liabilities
So
are
when a problem
trade
has
payables.
three
Okay,
variables,
so
how
what
to
are trade
do?
payables? So credit suppliers. So you have purchased goods on credit. You have to pay them after some time. So maybe after
So
30
now
days,
you are
after
thorough in
45
that.
days, 40 days, or 45, whatever. So you have to pay immediately. It is payable within a period of 12 months.
So for example, if the equation is 2x minus 3y plus z, 2x
So this also within 12 months.
minus 3y plus z is equal to 7.
Okay, so trade payables. So again, what is
2x
the
plus y
bank
minus z,
overdraft may be there. What is bank overdraft? You
2x
might have made
plus
arrangement with the banker to take money for a shorter period.
y
So that is what is bank overdraft.
minus z is
So
equal to
then what you have to do when you are
1
preparing the financial statement. So remember,
4y
first you have to write non-current assets.
plus 3z.
Non-current assets you have to write.
4y
Then
plus
you have to write current
3z
assets.
is
Then
equal to
current assets,
minus 11.
the figure total.
So in this case also, d x is equal to
So then
dx
this one again, current
sorry,
liabilities
big D,
total.
big dx minus d
So what you have to do
y
is
is equal
you have
to
to find out
dy
current assets minus current liabilities.
minus upon
Calculate
d,
current assets minus current
z
liabilities.
is equal
So
to
that is called working
dy
capital.
upon dz, sorry, dz upon d. So what is x,
So
what
what
is
is
y,
current
what
assets
is
minus
z?
current liabilities?
So what is delta?
So
D is equal to
2
d is equal
minus.
to
No, you are
determinant
not
of
required to write what is working capital. You don't have to write this. This is just for
what
you
are
to
the
remember,
numbers?
so that you
2 minus 3
don't mess up
1,
when you are working out the
2
answer. So always
minus 3
remember 1,
1,
2, 3, 2 minus 3.
2
So whatever
1
amount
minus
comes,
1,
you have to write here.
2 1 minus 1.
Then
X,
fourth,
there is no x, that's why you have to put 0.
so
You have to
non-current
put 0.
liabilities.
So then it is 4 and this is 3. So this is d. What is
So what are
dx?
non-current liabilities?
dx
Liabilities that are
is
payable
nothing but
after a period of 12 months from the date of balance sheet. Okay. So more than
so you have to write this minus 3 1
or after
4 as it is, 1
12 months.
minus 1 3 as it is. So
From
in
the
this
date of
place
balance.
you have to write
For example,
7 1 minus
so
11.
bank loan
7
normally when you will pay
1
after a period of
minus 11.
maybe you pay
So for
after
dy
2 years, 3 years, or
dy is equal
10
to
or 15 years also. So that's why it has payable after a
2
period of 12 years. So what is the example best
0
example for this? Maybe you have
1
taken a bank loan.
minus 1 3. 1 minus 1 3. So instead of
So maybe
this
you have
one what you
taken
have to write 7 1
long-term loan
minus
from
12.
any others.
7
So which is
1
which has to be
minus
repaid
7.
after a period of 12 months from the date of statement of
dz is
financial
equal to,
position. Okay. So then even that you have to add.
so you have to write minus 3
You have to add this.
1
You have to add
4
on
1
this.
minus 1 3.
So you have to add
dz, no,
bank
sorry,
loan,
so dz.
long-term loan. So you will get one figure. This item you have to subtract. You have to subtract from this, and this is called net assets.
So this one 2 2
Net assets. What are net
0.
assets?
In this place you have to
All
write 7
working capital
1
minus
7.
working capital.
So how do you
net assets are
find
nothing
d?
but
You know how to find out d,
non-current
no?
assets plus
Correct.
working capital
First row, first column.
minus
First you have to
non-current.
do this for this. Okay, then for this, then for this. Okay, so you will get D. Then you have to do dx for dy and then
What is
dz. Come
working
on, do
capital?
first.
Working capital is nothing but current assets
Seems easy,
minus
no? Okay.
current liabilities. So very important, don't get
This is the
confused
question,
with,
dude.
don't confuse yourself.
Okay, so question.
Very important.
Okay,
So
okay.
first we have to find out non-current assets. To that we have to add working capital. So what is working capital? Current assets minus current liabilities. Current. Okay, current assets minus current liabilities will give working capital. So from that again you have to subtract non-current liabilities. So that gives net assets. So then the fifth item. The fifth item. What is the fifth item? Fifth item is owner's equity. Fifth item is owner's equity. Okay. So what is owner's equity? Capital at the beginning.
So can we have class tomorrow also?
Add net profit.
Okay.
So less points.
No problem.
So the net amount will be
So Gauri Ganesha.
the capital. Owner's equity. So that net amount will be owner's equity. So ultimately this should be equal to net assets. So
You are not
finally
Christians, sir?
net assets is equal to owner's. You have to follow these steps particularly in this particular order, specific order. Just follow this. You can do any time problem in
So Thursday
statement
also
of
we
financial
cannot have. We
position
can have on
as far
Friday.
as sole traders are concerned. So you will just work out another problem, one simple problem to demonstrate this. How to find out how to prepare statement of financial position. Till then,
What
have a good
festival
day.
you will do?
Goodbye.
Huh?
Good night. Dear students,
What festival you will do? Gauri Ganesha.
dear friends, welcome to Shasha's lecture classroom. Today we will
Means
focus on
you keep Ganesha at home, huh?
important points in income statement.
That will be there. That
So
is
they are
there.
very
They were
important.
already on, no? They must be already on, no?
Most
Now
of the
itself they
students
might
they
have
commit
started, no?
mistakes. Often they think whether we have to how to treat
You don't keep Ganesha at home.
So to start with, important considerations in preparing income statement.
Okay.
So income statements are often prepared in vertical form. Since it makes them easier to read, you should study and learn the vertical form carefully until you are quite familiar. So there are various forms. There is a horizontal form also and there is vertical form also. But 99% of the cases you will be doing vertical form. So you will be preparing income statement in vertical form. So it is very essential for you to study and learn the vertical form carefully until you are quite familiar, so that you can work out the problems with ease. Do not prepare journal entries for the income statements unless you are specifically asked to do. They might have been shown in the chapter simply to help you understand how entries are made. Okay, so there are so many entries. If you look into the chapter, income statement chapter, you will find a couple of entries. They are not important. In the sense, they are not important. So you don't have to prepare unless otherwise they are asked for. So you can just know it. So in the examination, unless otherwise they are asking you to pass journal entries, you are not supposed to. The heading is important. Okay, so the heading, when we start any problem, the first thing, the heading is very important. The fact that the income statement for the year or month ended. So we have to write it as income statement for the year ended. The statement covers a period of time, so it is necessary to state the period. Okay. Goods taken by trader for personal use. Some goods, sometimes the trader may take out some goods for his personal use. So what we have to do, deduct goods taken by the trader for personal use from purchases and add to drawings at cost price. So they would have given selling price also. So you should not get confused. You have to always deduct at cost price. You have to deduct goods taken by the trader for personal use from purchases and add to drawings at cost price. So the adjustments will be reflected at two places. Carriage inwards. Carriage inward is taken as part of cost of sales, not an expense. Okay. So carriage inward is, what is carriage inward? Carriage inward is the amount spent on getting the goods inside the premises where goods are being traded. So that is why they are called carriage inward. So to bring in the goods inside for the trading purpose. So that's why they should be added with cost of sale. To sell the good, those are the expenses incurred to sell the good. That's why they are added to cost of sale. You should not treat it as an expense, like expense in the sense which we have to show below the line. So it should be considered as part of cost of sales. Carriage outward. The cost of delivering goods to a customer is carriage outwards and is debited in the instance stated as an overhead expense. Okay. So it is debited as an overhead expense. Double check the treatment of carriage inwards and carriage outwards. So carriage inward will be reflected in cost of goods sold and carriage outward will be reflected in overhead expenses. Wages treated at the cost of sales. Goods purchased may not be in a suitable condition for selling to customers. Sometimes what happens, they may buy the goods and they may do some work on it. So further work may be required to them before they are sold. So maybe some rectifications, some final touches should be given. Some work is pending. So on that you may spend some money. So the wages paid to employees for performing this work, which work, the additional work on the goods. Okay, so this work should be debited as part of cost of sale. So those particular part, that particular part of expenses, the costs which are incurred to improve the product, they should be treated as part of cost of sales. Gross profit. The gross profit is the profit earned on selling goods before any other expenses are taken into account. So sales minus sales returns will give you net sales or net revenue. So to that you have to, from that you have to subtract all cost of goods sold. So what is cost of goods sold? Cost of goods sold is nothing but opening inventory. And to that we add purchases less purchase return. So to that we add carriage inwards, and from that again we subtract the closing inventory. So what we get is cost of goods sold. So what you have to do, from that, once from net revenue we have to take out cost of goods sold, then what we get is profit. So gross profit. So what is gross profit? Gross profit is the profit earned on selling goods. Okay, the profit earned on selling goods before any other expenses are taken into account. When there is no trading account, when there is no trading, there is no gross profit. It's very important. Okay. Some cases you may be asked to prepare a statement, income statement, where they would not give any opening inventory, closing inventory, even purchases may not be there, sales may not be there. For example, in case of service industry, service people who are rendering services, service business, they may not have any inventory. So then in that case, gross profit, the question of gross profit doesn't arise. The words cost of sales and gross profit are important and should always be shown. Okay, so never miss out. In a hurry, what most of the students they do, they forget to write cost of sales as a heading. They forget to write gross profit. So that should be avoided. So you should be very careful. So you have to write it. So the words cost of sales and gross profit are important and should always be shown. Should means it is mandatory. Always include the words cost of sales and gross profit in full. So avoid using short forms. So you cannot write COS, GP or something like that. So you should not use short forms. You have to use full form. You have to use full words. Include the words, full words. Okay. So you cannot use the short words. Any other income. you should add any other income to gross profit. So suppose you have got other than sales, other than sales, if you have got any other income, you have to add it to the gross profit. Never treat it as a negative expense. Negative expense means don't deduct it from expense. Never do that. So you should not show it as negative expense in the expenses column. You have to just add it to gross profit. So because that is also income, but it is not from trading.
How much you got?
It is other income. So that's why it should be added to overhead expenses. So we have to, after you add up other expenses, there are overhead expenses which you have to
X is 1, Y is minus
you
2.
have to show. So there is no particular order in which overhead should be shown in the income statement.
Perfect.
But it is often best to place
So we will continue in the next class, okay?
Smaller. So there is no particular order, which is not mandatory that you have to show it in particular order. But it is often best, it is a practice, best practice to place the larger amount before the smaller. So that you show the bigger amounts first, then you show the smaller amounts. It is also a good plan to group together similar kinds of expenses. For example, property expenses, rent, eating and lighting and insurance. So you can club up the similar type of expenses and you can show. There is no such prohibition that you have to. And this is not compulsory. So this is what is it is an option. So it is better if you do it. So the examiner will be impressed. Profit for the year figure. The profit for the year figure is important. You will need to use it when you prepare the next document, the statement of financial position. So profit for the year, you have to show. The profit for the year is important. You have to show after the end result is profit for the year. You need to use it again when you prepare the next document. So the next the chapter after this is the statement of financial position. There you will be using the net profit whatever you can. Other chapters where income statements is prepared. See, income statement is very important. So it's very important in the sense again when you study accruals and prepayment, this is another lesson. So another chapter, the matching concept. So in this also, if we incorporating this, you have to prepare income statement. So again, there is one more chapter, provision for depreciation of non-current assets. Again, there also you have to incorporate the depreciation and you have to prepare income statement. Irrecoverable and doubtful debts. Again, there is another lesson, another chapter called irrecoverable and doubtful debts. There also you have to incorporate these things and you have to prepare income statement. So this is the income statement is the base. So to that you have to make lot of other adjustments. So incomplete records. Even in case of incomplete records, you may be required to prepare income statement. Not-for-profit organizations. See, not-for-profit organizations means clubs and societies. So there may be a bar or cafe or something like that. So there they may be doing some sort of business. They may buy some inventory, they may sell something. So all those things. So even there you need to prepare income statement and you have to show it as income. There also you need to. So it is very important lesson. So very important. So but this is the base. And you have to learn all this as a comprehensive. So that is where a lot of students commit mistake. So you have to be very careful. You have to be very attentive. You learn each and every aspect. Learn every lesson carefully. Learn every chapter carefully. Work out all the problems before attempting the main examination questions. You have to be double sure. You have to be thorough in these particular aspects. Income statement is prepared in different forms. See, there are partnership accounts. There also you have to prepare income statement, but the profit is shared between the partners. So that is one difference. An introduction to the accounts of limited companies. There also you have to prepare income statement, but the format is entirely different. The form is entirely different. Manufacturing accounts, where manufacturing account means there are so many other aspects. There are a lot of details given about manufacturing entity. So there also you have to show a lot of other aspects, and there also you have to prepare income statement. So income statement is overall it's very important, and lot of questions are asked from income statement. So you have to be it's very important topic. Okay. Income statement of service business. See, people who sell their services such as accountants, lawyers, dentists only require income statement. So they don't need trading account. So that is there is no question of preparing, finding out gross profit, because there is no trading. So if the business is a service business, one which does not pay on input, then there will be no cost of sales. Okay, there is no cost of sales. You will need to show the income, which will be the fees received less the expenses to leave profit for the industry. So it's very simple thing. Okay, so keep these points in mind. This is very very important. So then in the next lesson we will start with working out the problems. Okay. So dear friends, coming to income statement for sole traders, the following trial balance has been extracted from Hadley books as at 31st December 2015. So this is from David Hopkins. The following trial balance has been attracted from Hadley's books as of 31st December 2015. Plant and machinery 25,000, office furniture 6,000, inventory 1st Jan 11,000, trade receivables 4,740, trade payables 1,926, bank 3,327, loan receivable 5,000, sales 72,800, purchases 28,540, sales return 1,600, purchase returns 144, wages 3,100, rent 4,000, heating and lighting 5,120, advertising 2,400, other operating expenses 2,010, loan interest to the 250, drawings 4,843. Capital 20,000, inventory at 31st December 2015 cost 9,000. Prepare Hadley's income statement for the year ended 31st December 2015. Income statement for the year ended 31st December 2015. So we have to prepare income statement. So based on this information, so it is Hadley's income statement. So for the year ended December 2015. So that is it. So heading is very important. So we have to write particulars and dollars, and date is also very important. So name of the trader also should come. Hadley's income statement for the year 31st December 2015. So what are the 5 steps? First we have to record sales and sales return. So sales minus sales return. So first step, sales minus sales. So what are the sales and what are the sales returns? Sales are 72,800, 1,600. 72,800, 1,600. So it will be 71,000. 71,200. So now less cost of goods sold, cost of sales, cost of sales. So in this, what will be there? So by default, first one is inventory as at 1st Jan. Inventory as first Jan. So how much? 11,000. So first Jan 2015, 11,000. Purchases. So how much are purchases? Purchases are 28,440. Then purchase returns are 2144. Four. So what else? So carriage inward is there? No, carriage inward is not there. So purchases is over, purchase returns is over. So inventory at 31st December is 9,000. Inventory at 31st December. So even that we have to subtract. So if we add this, so it will be 11,000 plus 28,540 minus 2144 3739. 3739. So minus inventory as at inventory at 31st December 2015. So 9,000. So 37,396 minus 9,000, 28,396. 28,396. So this minus this will give you gross profit. So what is the gross profit? Minus 42,000. 42,000. So this is the gross profit. So to this we have to add other income. So let us see if there is any other income is there. So okay, so there is no other income. So other income will not come. So if you want, you can just write and leave it blank. Add other income. So when you are learning, you can just write so that you don't forget in the exams. So you miss out and again you have to scratch and again you have to go. There will be a lot of waste of power. So on that side, it's better you make a practice of writing this and you write it as zero because there is no other income. So now less overhead expenses. So what are the overhead expenses? So let us see. Wages, rent, heating and lighting, advertising. Wages, rent, heating, lighting, advertising. Wages, rent, heating, lighting, advertising. So our wages is 3100, 4,000, 3100, 4,000. 5,120, 2,400. Other operating expenses 2010. Loan interest. So totally up 100 plus 4,000 plus 5,120 plus 2,400 plus 2,010 plus 50 is equal to 16,080. 16,080. So these are all overhead expenses. So minus 42,804. 42. So 25,924. 25,924. So what is this? This is nothing but profit for your. Okay. So this is how you. So very simple. This was very simple question, very simple topic. But going forward, you will have a lot of adjustments here too. The problems will not be simple. But if you remember the steps, you can just uh, increase the learning speed. So incremental learning. So you can learn, add more concepts into that. So prepare at least income statement for there. Keep your answer. It will be needed again in chapter 8. So the answer you need. So answer whatever you have got is required because next lesson is statement of financial position. So in statement of financial position, we need to add the profit whatever we have. So profit whatever we have got, we need to add. So that's why that's very much important. So in the balance sheet, we have to reflect. So that's why it is noted. So next one, let us see. This is finished. We have completed one question. So let us see the second question. So the trial balance extracted from Piccolo's books at 31st March 2016 is as follows. Sales 4,000. Sales returns 3,600. Purchases 1,20,000. 120,000. Purchase returns 4,400. Purchase returns 4,400. Inventory 18,000. Carriage inwards 5,000. Carriage outwards 3,724. Discount received. This is other income 3,060. Discount allowed 5,020. Wages 36,800. Rent 8,000. Heating and lighting 6,450. Other operating expenses 1,143. Fixture and fittings 9,000. Office furniture 2,000. Trade receivables 1,990. Trade credit 2,130. Bank balance 2,496. Drawings 20,427. Capital 30,000. So during that, Tekla had taken goods costing 2,000 for his own use. So this will come as a deduction from cost of goods sold. This had not been recorded in the books of in the books. Inventory at 31st December 2016 cost 20,000. Prepare Ticola's income statement for the year ended 31st March 2016. Keep your answer. It will be I needed again in chapter 8. So hopefully I think you can do this problem on your own. So if possible, take the screenshot of this question. Take the screenshot of this question and put efforts. Try to do it on your own. And if you don't get this, please let me know in the comments. I will do it. We will do it in the class. So otherwise, it will be assumed that you have understood, then you have got, you have completed. So then we'll proceed to the next part. So I will give some time. Just take a screenshot of this question. So next class we'll do exam practice questions. So please let me know if you have any doubt in this question as a comment. So we'll have a separate class or I will just explain to you whatever doubts you have. So till then, bye bye, bye, good day, good night. So dear friends, welcome back. Welcome back to Shasha's virtual classroom. So today we will discuss exam practice questions from income statement. So this is income statement. These are the questions from income statement. So we will discuss similar questions might have come or expected to come in AS level question papers. So let's discuss this question paper. So what you can do is you can take the screenshot of this, take a picture or try to answer yourself. So then you can continue and just check whether everything has been done correctly or not. So which of the following does not appear in an income statement? So which does not appear? Carriage outwards expense will appear, carriage allowed, discount allowed will appear, discount received will appear. So motor vehicles will not appear. So motor vehicles is an asset, so this will not appear. So the following information has been expected from the trial balance of business. Sales 1 lakh, purchases sales 100,000, purchases 60,000, wages 21,000. Closing inventory was 3,000 more than opening. Okay. Closing inventory was 3,000 more than opening. So one third of the wages was charged to cost of sale. One third of this, 21,000 to one third is nothing but 3,747. So a cost of sales in the trading section of income statement. What was the gross profit? So they are given sales. So let us do is 100,000 plus. So this is just working. So we can do here. We don't have to follow the rules like cost of sales or this. So this is just to calculate. So if you want, you can just write cost of sales. So opening inventory minus closing inventory is 3,000. It is more, right? So first is opening inventory. So we don't know. So we'll keep it in pending. So purchases 60,000. Purchases 60,000. Wages 7,000 to go in trading account. So that is cost of sale. So wages 7,000. So then what to do here? Opening stock is not given, closing stock is not given, but difference is given. So if you recollect, opening stock, opening inventory will be added and closing inventory will be subtracted. So since the closing inventory is more, so So we have to subtract the closing inventory. So closing inventory, so 3,000. So please don't get confused. If the concept is not clear, so just know this: cost of sales is nothing but opening inventory, purchases less purchase returns plus wages minus closing inventory. Okay, so purchases is given, purchase returns are not there, so wages is given. So then opening inventory they are not given. Closing inventory was 3,000 more, so that's why we are. Okay. So since we have to subtract, since it is more, so this is positive, this is negative. So plus minus. So whichever is greater, this is greater. So that's why we are taking this one. So it is 67,000 minus 3,000 is 64,000. 64,000 is cost of sales. So therefore the gross profit will be 36,000. Okay. So next. The carriage inwards of business amounted to 6,000 and the carriage outward was 7,000. The carriage outward was charged in trading account. So this is a mistake, so it cannot come in trading account. Not come in trading account of the income statement in other, and the carriage outward was debited in the income statement. Carriage inward was debited in the income statement. Okay, so what is the carriage inward? Carriage inward is 6,000. Carriage outward is 7,000. The carriage inward was charged to trading section in the income statement and the error. So what has happened? Cost of sales. Dear friends, the third one, the carriage inward of a business amounted to $6,000 and the carriage output was 7,000. The carriage output was charged in trading section of the income statement in error, and the carriage inwards was debited in the income statement. What has been the effect of these errors? So the carriage inwards. Okay, see here. The carriage inward 6,000. Carriage output is 7. So what is the rule? The rule is carriage inward should be considered as part of trading section. So that is part of cost of sales. But here what has happened? The carriage output was charged in trading section. This should not come. Carriage output was charged in trading section. So carriage output was how much? Carriage output is 7,000. So this is 1,000 more. So what has happened? So if it is 1,000 more, then gross profit will be understated or overstated. So I want you to be clear in this. So see whether it is carriage inward or outward, there won't be any effect. So for the profit for the year, there won't be any effect. So this is correct, and this is correct. But we have to see among this which one is correct. So don't try to answer the question with a trial and error method. So try to understand the question. So work out. Take some minutes. So it's small time, a bit of time. So just to understand the this one. So third one. So let's assume sales. Let's assume revenue as 90,000. Let's assume, this is just assumption, okay? So less cost of sales. So assume purchases as 40,000. So now what you have to do? Carriage inward is 6,000. Okay, carriage inward is 6,000. So this is the actual treatment. So what should be the profit? So 90 minus 46 is, so 90 minus 40 is 50, 50 minus 6 is 44, 44,000. The gross profit should be 44,000 if the actual treatment is done. Now, this is the correct one. The correct. So now the wrong. So what has happened? So revenue is 90,000 itself. Cost of sales purchases is also 40,000. What they have done? Carriage inward. Instead of taking carriage inward, they have taken carriage outward. Carriage outward they have taken the 7,000. So what has happened? So this is carriage outward. So 90 minus 40 is 50, 50 minus 7 is 43. The gross profit is showing more or less because of the wrong error. Gross profit is showing less because of the wrong treatment. The gross profit is understated. Gross profit is understated by 1,000. See, this is how you have to confirm yourself. See what happens, most of the students, because of hurry in the examination, they hurry, and because of this they commit mistakes. So they try to answer it in a trial and error way, and easily they will lose. So never do that. So hardly it will take 1 minute to confirm yourself. So it is understated. So the correct answer is understated the 1,000. So now we are double sure. So we have checked the figures and we are double sure. So this is the answer. So this is how we have to do this type of problems when there is a bit of confusion. So you have to confirm yourself whatever you are doing is right or wrong. So next one. So what I suggest you is, always when you are doing the MCQs and whenever exercises are given, always you have to try solving on your own. Just see the question, try, stop the class, stop the video, pause the video, just try to work out the answer on your own, and then you compare with the actual solution, so that you are then only the learning will be more effective. Otherwise the learning will not be effective, and ultimate result will not, you will not get the ultimate result. Okay, so never do that. So please follow my instructions, so that the purpose should be served. Don't waste time unnecessarily by trial and error methods and all. Okay, so now come to the next one. So let us see this one. Discount received amount to 10,500. Okay, discount received 10,500. Discount allowed 13,000. So the discount received has been debited. Discount received have been debited. So what we have to do? Discount received should be credited, right? But they have been debited. Okay, and the discounts allowed have been credited. Discounts allowed should be debited because it's in loss, it's an expense, so it should be debited. So this is wrong. This treatment is wrong. This treatment is wrong. Okay, in the income statement, what has been the effect of errors on the profit for the year? So who was understated, overstated, understated, overstated. So Don't try to answer this the hinky panky way. So let us see. Let us assume, and we will do the problem. So then the concept will be clear. So 4,000. So 4. So profit before discount. Okay. This is the correct profit before discount. So let's assume it is 40,000. 40,000, 40,000 in both the cases. Then we'll do the actual treatment. Okay. So we'll do the actual treatment. So we'll deduct discount allowed. Because discount allowed should be deducted, right, from the profit. Because it is an expense, so it should deduct. So what is discount allowed? Discount allowed is 13,000. Discount allowed is 13,000. So what we have to do with the discount received? Discount received, we have to add, because it is an income. Discount received, we have to add because it is an income. What is the discount received? The discount received is 10,500. This should be subtracted and this should be added. So what will be the net profit? So what should be the net profit? 37,500. See, this is just assumption, okay? So we are assuming that this is the profit before discount. So this type of problems we have to do this way so that the understanding is clear, so that we are sure what has happened and what is the effect net effect. Otherwise, don't try to do some wrong methods, wrong calculations, and try to ultimately. So whatever method you do, ultimately you have to get the correct answer. So that is what it is. So what has been done? They have actually this is the right one. So this is the right one, and this is the wrong one. So what has happened? Wrong one, what they have done? They have deducted 10,500 and they have added 13,000. So then what will be the profit in this case because of the wrong profit? 40,000 minus 10,500 plus 13,000. The profit will be 42,500. 42,500. So it is more. The profit is more. Okay. So it is overstated. It is overstated.
Similar in G.
Overstated. By how much? 42,500 minus 37,500 is 5,000. It is overstated by 5,000. See, the concept, you are double sure now, it is double sure, it is certain. There is no hinky panky, like no, you are not trying to guess and write the answer. Never do that, never do that. Okay, so never do that. So the answer is overstated by 5,000.
क्या मैसेज देख रहा है?
Open करो
In view of Gauri Ganesha festival, the school will be closed for 2 days.
Okay. So this is how you have to do. What a lot of the students they do because of hurry, because of the exam stress, they will just try to guess and they will ultimately
assignment done the chapter 2 question. Read lesson number 2.
Ultimately they will lose marks. What is the purpose? The entire year,
describe briefly 5 sentences, 5 unknown features of Nazi thinking.
So please don't do that. So please be careful. So please learn the and methods how to actually get the answer. Now, carriage inwards in a trial balance is 2,300. Carriage inward in a trial balance is 2,300. It has been entered in trading section of the income statement. Again, trading section as 32. In addition, motor expenses has been posted to the motor van. What effect on this other income statement. So again, we'll not just do it, we'll not just try to blindly, we'll just try to analyze by understanding the question carefully. So again, income statement. So let's assume before these frequencies again 90,000. Right. Okay. So what has been done? Carriage inward in the trial balance is 2300. Carriage inward is 2300. But it has been entered in trading section of income statement of 3200. Wrong treatment. What we have done? We have taken this. Motor expenses of 600 has been posted to the motor vans account. So motor expense is a expense. So it should go to reduce the profit. So motor expenses 600. But what they have done? Motor expenses have been posted to the motor vans account. It has gone to motor vans department. It has not been shown in income statement. So it has not been shown in income statement. So now let us see. So what is the right thing? After if you do the right one, so it will be 90,000 minus 2900. 87,100. So 90,000 minus 86,000. So the profit is understated. So what has happened? The profit is understated. It is understated. It is less, no? So it should be more. The profit should be more, but the profit is less. The profit is understated. What is the profit? Understated how much? 87,100 minus understated the gross profit. So the profit, okay, so this one. Overstated the thing. Or understated the thing. And even gross profit also will be understated the, and the gross profit is also understated the. Here gross profit is okay. So we need to find even gross profit also. So my mistake. So we'll just do it again once again. So please bear with me. So this is just to find out the gross profit. Okay. So less carriage inward is 23. And this is This has been shown as 3200. So this is just to find gross profit. Okay. So what is the profit? Let us see. So 90,000 minus 2300 is 87,700. So then 90,000 minus 86,800. So gross profit. So actually gross profit should be more. Here it is showing less. So it is understated again. Understated. Understated by how much? Minus 87,700. Understated by 900. So this one is understated by 900. This one is sorry. This one is sorry. So please be double sure. So don't try to guess. Don't try to
हजरत को
do the
जाको
problem
पूछला को
without
चाहे नहीं ना
understanding.
तो
Never do
कबाता
that.
मुहरत हुआ
Never do any problem without understanding. Have a clear-cut understanding of the concept and please do it so that each and every mark is very, very important. So please do it. Use my classes very carefully. So please share and subscribe. Let others also grow. So let others also get help from this. So be generous. So we'll catch up in the next class. Basically, I will be starting the next one that is statement of financial position in the next class. Till then, have a good day. Good night. Goodbye. Hello, dear students. Welcome to Shasha's virtual class. So today we will do a recap of whatever we have learned till now. So basically, this is a recap session. So in this lesson, we will discuss what all we have done till now. So the first lesson was cash transaction. So in this lesson, we learned how to record cash transactions when payments are made and amounts are received. When amounts are received in so that is what is cash transaction. Cash transaction means money is paid to someone and money is received from someone. So how to pass those entries? So that's all we have learned. So here in this we have learned all about personal transactions, like when we receive money from accounts, personal accounts, how to record them. So when someone gives money and someone receives money, how to record it. And we have even learned how to record expenses, how to record when payment is being made or received. So all these things we have learned in cash transaction. In lesson number 2, we learned credit transactions. So what are credit transactions? Credit transactions are those where amounts are not paid, where amounts are not paid. Or not paid. So that is why it's called credit transaction. The payment is not made instantly, or amount is also not received instantly. So again, how to record when amount is not received, and again when there is a transaction with personal account, when there is a transaction with expense account, income account, and all other stuff. So we have learned in credit transaction. How to record credit transaction? We have learned in second lesson. So we have done couple of questions. So here also we have done couple of questions. This is also we have done couple of questions. We have discussed couple of questions. Please go through that. And then again, third, we have learned books of timing. We have learned about books of timing. So what are the books of timing? We sales journal, sales journal, and purchase journal, sales return journal, purchase return journal, cash general journal, or just okay. So what is recorded in sales journal? All sales, all particularly all details of sales, particularly credit sales, are entered in sales journal. Purchase journal, all credit purchases are recorded. Sales return journal returns when customer returns the goods, then whatever entries we make, so that is made in sales return journal. Purchase return journal, we record the purchases where we reject the material and when it is given back. So that is what is purchase return journal. So that is written in purchase return journal. So in cash book we record amounts received and paid, whether cash or check. Cash or check. And even discount column also we have done. Discount column. So we have done how to record entries in sales journal, purchase journal, sales return journal, purchase sales return journal, purchase return journal, cash book, general journal, on journal. So what will be entered in general journal? Adjustment entries like outstanding expenses, prepaid expenses. So purchase of non-current assets, like purchase of machinery, purchase of how to rectify entries. So for a non-current assets, entries related to non-current assets, rectification entries. So basically, what all doesn't come, what doesn't come in sales journal, purchase journal, purchase journal, purchase journal, cash book. So that will be reflected in general journal or journal. So that is how it is. So we have done how to write these and all. So then how to post it to the ledger also we have done. How to post to ledger. And again we have learned division of classification of accounts, division or classification of ledger account, and how in ledger we have done how to post, how to prepare, all these things we have learned in ledger account. So then division of classification of ledger. So what is the how many different classifications are there? All those things we have learned. And we have learned the balancing of ledger account. Balancing of ledger account. So that is how to do the balancing of ledger account. And we have done one comprehensive problem also. Comprehensive problem to cover up all these aspects, and we have prepare, ultimately we have prepared trial balance. So how to prepare trial balance? Prepare trial balance. What is trial balance? How to prepare trial balance? The format of trial balance, the procedure, the structure or the design of trial balance. All these things we have learned. Uh, all this, whatever is there, whatever we have learned, all this is known as bookkeeping. So all this is known as bookkeeping. So till the preparation of trial balance, the work is done by bookkeeper or clerk. So after this, the next step starts. So the next step is known as financial accounting. So the accountant does the financial accounting job. So he starts with financial accounting. So next lesson. So here onwards we will be doing financial accounting lessons, like how to prepare income statement, how to prepare balance sheet, what are the different. So the main account here till here was all basic, but very very important for you to get understanding of accountancy. So now from the next lesson onwards we will start financial accounting. Till then, bye bye.
Dear friends, welcome to Shasha's virtual classroom. So today we'll be discussing books of prime entry. Prime means first, initially. So as soon as the transaction happens, we record in some place. So what are the different types of transactions we have? So we sell goods, so they are known as sales. And when goods are returned, when sold goods are returned, they are known as sales return. We purchase goods, it's known as purchases. If the goods are not of good quality, we return the goods, purchase return. Business even receives and pays cash, even that is recorded. So apart from that, there are a lot of other things which are recorded. So when they happen initially, as soon as they happen, we record at one place one books, certain books, okay, certain books, certain books. So we don't write in opposite way, we write in certain books. All sales, sales, we record in sales day book or sales store or sales is also known as sales. Similarly, some customers may return the goods, so we record them in sales return register. So when purchases are made, all the purchases are recorded in purchase register. Similarly, if the goods are not of good quality, we may return the goods, so they are recorded in purchase return register. So when amounts are received and paid, receives and pays, when business receives and pays, so it is recorded. So they are recorded in cash. So summary of receipts and payments, whether cash
अंडा होंगे जीरा
is received by so all those will be recorded in cash. So a lot of other entries like purchase of non-current assets, because purchase of non-current assets are not purchases, right? So purchase of non-current assets. Just
entries are recorded in a book called General Journal. Or so we have to write the specific transactions in specific book itself. We cannot mess up. So the entries cannot be messed up. Okay, so this is the fundamental. So in this lesson, we will learn how to record the entries in the books of crime entry. So how will be the books of crime entry? So you can see books of crime entry will be like this. So the dates will be there, particulars. So date means date, particulars means parties will be there from whom we have sold. So obviously customers, name, date will be there, customers name will be there. So everything will be entered in sales return. So sales return journal again, customers name will be recorded. So again date, particulars, so particulars, customers and amount also. Similarly, purchases journal, we record supplier's name. Supplier's name and details of what is the amount of transaction. So again purchase return journal also we record suppliers. So obviously date will be there. All those things will be there. So this is how the entries we have to enter. So in this specific format, specific order itself. So we have to write this specific. So this is a list. Actually, these are the list: sales journal, sales return journal, purchase return journal, and
ले ले जग दावल का जाता है फिर रे
so all lists of so lists of sales, list of
जा
sales,
दावल तो लग जाएगा
list of
वैसा लगा डालना फिर रे लगको थे नहीं हाँ चार्ज को रात भर चार्ज होते सो
For resale or trade from Dev.
once you write here,
My debit card
so what happens next?
नहीं मालूम है
Sales
थोड़ा नहीं
on
लगा
trade to Yash. Cash sales 700. Paid cash into bank account 900. Paid Dev money owed version of
Sales.
cash discount. Paid stationery by cash 20 bucks. So prepare the necessary accounts and cash to record the transactions. Balance the accounts at
Sales.
7th October and withdraw the balance.
Customers.
So first let us make out list of ledgers. Okay. So first let us prepare a list of ledger accounts. So Jana return so cash account.
Sales.
Balance.
What we have to do is we have to add all this. Whatever the amount is, we have to enter.
This is
Sales account.
This is
We have to enter in sales.
so your discount will come
Sales.
this.
So sales journal is different,
But
sales
discount
account
amount also we have to prepare.
very
And then
similarly sales return journal whatever the total amount we have to enter in sales returns account.
bought goods for resale on credit from their purchases and their
Total is total.
paid rent by debit card rent amount. Sales on credit to Yash, sales and Yash.
Sales account. Total amount.
Sales and Yash.
Recording.
Put cash into bank account contrast.
So
then paid them money owed by check after 5% cash discount. So purchases. So purchases. Total purchases. Discount. Will be entered in purchases. So they were purchases. So again here is total amount. So how many accounts we need to prepare? One. Purchase returns. So this total will be. So the supplier's names. So the details of, suppose this is Mr. A, Mr. B. This is ledger account as well as post it to the respective ledger account. So this is. So first we'll prepare cash and bank account. So then we'll prepare all the accounts. Simultaneously customer. So this is a comprehensive problem. So if you are not attended any of the earlier classes, which is based on posting of ledger the customers, so we have to transfer. We have to make the entries, corresponding entries. Z's ledger account, Y's ledger account, X's ledger account, B's ledger account, respectively. So separately we have to record. But total of sales we have to record to sales account. Only one. So aggregate. So aggregate will be recorded in 1,025. So no individual. Not record individual entries. Again in sales account. The total of sales will be recorded in sales account, whereas customers accounts will be independently recorded in the customers respective customers. The same rule applies for even for sales returns. So remember, sales journal is different, sales account is different, and total amount of sales or sales return, purchases return, only total is recorded in either sales account or sales returns account or purchases account or purchase returns account. Aggregate will be recorded and individual entries will be posted. So then so remember this is very important part. So often asked in MCQs, so you have to be very clear. So then similarly sales register, sales return register is sales bank account. So so then cash. So complete the entry. We have right here. So we have discussed the sales register, sales return register, purchases register, purchases return register. So when we receive and pay, we record in cash book. Cash and bank columns. So cash book. So the format is cash book. We have to record in this. So cash book is divided into parts. So debit part and credit part. So debit part date, particulars from whom the cash is paid. So folio, ledger folio, number, discount. So there is one column for discount also. So when we receive money, we may allow some discount. So that discount we record it here. When we receive cash, we record here. When we receive checks, we record it. Similarly, date, particulars, total discount. So when we make the payment, we may receive some discount. So we record the discount here. When we pay by cash, if we pay by cash, we record here. If we pay by check, we write it in bank card. So very important this particular format. So very important question. So often asked in AS level exams. IGCSE also this question is often asked. So cash book very easy one. So just you have to remember the format and just plug in the figures. So very simple, but the format is very important.
You have to write this in this particular way.
So we consider it as
So it's very important. So it's format oriented. So format is very strictly how to follow.
what it is again.
Last, general or general properties. So journal. So the format of journal is like this: date, particulars, and so whatever is debited during the quarter. So this is also from here we just write it as a for reference. From here we record it for respective ledger accounts and cash book also. We record the entries and from here we post it to respective ledger. So remember this. So it's a very simple chapter, it's a simple lesson, and but basically to understand accounts you have to do all this. You have to understand all this, otherwise understanding will be incomplete. So we'll wind up. Next class we'll work out one problem based on this. So we'll work out one practice exercise based on this. So one or two questions will be more than sufficient because we just need to know how to record it and how to post it. So until then, bye-bye.
Send some sales is always created. So ish. So opposite side. Ish account will be defeated. Because they are sold in goods. Because they see the receiver, account that receives. Issue account receives. Debit account that receives. Next. So cash sales 700. So what is happening? Sales is happening and cash is coming in. What date? 4th. Cash sales 700. 4th. Cash sales. Cash sales means money will come in cash account. Sales. So we receive money in cash through sales. So sales amount will be written on the opposite side. Sales. So cash. Content. Paid cash into bank account. Paid cash into bank account. And content. Paid cash into bank. So cash to bank. Cash is coming in bank. Paid cash into bank. So money is coming in bank. Content. Cash is coming. Paid cash into bank means money is coming in bank, but it will go in cash. So here, so it is cash payment and bank receipt. Same date, same line. So against this, so money is going out from cash and coming in bank. So against this, you have to write bank. So against this, you have to write cash. on 6th. So we have paid 4,750. Discount is 250. We have received discount of 250 on 6th. On 6th, we have paid here 250. Discount received is 250. And money is going from bank 4,007. So to whom we have paid? We have paid to them. So to them when we have paid on October.
So rules to remember. So a business normally deals with persons, whether natural or artificial. So when we deal with any persons, then they are called personal amounts. So either we receive from them or we pay, or the business will either receive or pay or give to the other business. So the rule is debit the account that receives or debit the receiver. Debit the receiver. So some authors they write this way. So debit the account that receives or debit the receiver, like David Hopkins and all, they use the first rule, that is debit the account that receives. They write it that way. So some other authors they write debit the receiver. Similarly, for credit items, they write credit the account that receives or credit the giver. So some authors write in one way or the other. So the rule is ultimately the same. I mean, the concept is ultimately the same. Real account, debit what is being received. So in case of real account, when we receive or pay something to the business, we receive and pay something. So then debit what is being received or debit what comes in. So credit what is being given away or credit what goes away. So this is the rule for real accounts. So you know what is real accounts. So when we deal with cash or nominal, so nominal account, the rule is debit all expenses and losses, credit all incomes and losses. So nominal accounts are expenses and incomes, right? So accounting equation. So when we are recording accounting equation from the accounting point of view, when we see from accounting equation point of view, assets normally have debit balances, liabilities and capital normally have credit balances. So remember, assets and expenses normally are debit balances. Okay? So liabilities and incomes are normally credit balances. So even you should know, it is noteworthy that capital is also a liability. So it means capital, liabilities and incomes are normally credit balances.
Stand out and build in-demand Gen AI skills with Coursera. Reshape the way you work with AI and take your career to the next level. Explore more at Coursera.org.
So through cash, we have paid stationery account is always debit. Cash, because cash is going up. Stationery cash. Now we have to balance.
Okay, remember, I'm a trainer, not a tutor. I train you to pass, to succeed, to clear your exams, to get better marks, to excel in your studies, so that you understand and do better and better and best, the best. It's okay. I've been taking one-on-one classes. I'm aware of difficulties for the various students, below average, above average.
It is 5,007.
I
Minus 5,007.
analyze and understand what they don't really understand and how the students suffer. I feel their pulse and try to understand their difficulties, making the student understand the subject and making interesting for them to learn, so that they excel in their studies is my core perspective. These days, a lot of students have various difficulties. They won't understand anything in the class. A lot of students who are pursuing online classes. A lot of students who are taken up distance learning classes face various difficulties in understanding the core concepts. So they try to understand, but most of the teachers have different methodologies to explain, and the students are unable to understand. It's a hard time for the students. Myself,
And this is called balance carried out.
but having understood the subject as a common sense,
So balance it.
I
So
will
this side also it is 1700. Here it is 530. So 1700. This side is here. Write down here 1700.
theoretical knowledge in various subjects,
So here it is
such as
530. 1700 minus 530.
direct taxes, indirect taxes,
1700 minus
financial about cost accounting, cost accounting, managerial
1170. So you write down 1170.
advanced management accounting,
Write down
financial management, operations research, quantitative techniques, business mathematics, business statistics, business economics, business studies, and various other business management subjects. I even have a on-hand experience in
So now
ERP, SAP,
we have
Tally,
to do balancing
QuickBooks, and
only
all.
for capital
So
accounts.
I'm in a better position to
Because they
explain
will be carried forward
the real
for the next accounting period. So
the
cash
logistical
capital
part
account is 8,000. Balance carried down is
in a better way. So a lot of students approach me near the exams for
so this will be carried down to balance carried down. So it will become by balance
exam
account.
coaching so that they pass their exams.
By balance.
I have a record 100% of my students clear my exams.
So only the restrictions here will be October 7th. Here it will be October 8th.
With these
Or October 17th.
100% they succeed. So I
Balance.
explain them as if they are
So then.
no eyes.
So purchases account
Ignorant
5,000.
no eyes. Even the
So
ignorant no eyes.
there is no need to balance. This is 5,000. You have to just this will directly.
So
go to
I teach them as a
balance.
common sense.
So they will count. Here
Because
also
any
5,000.
subject is
Here
more
also
important than a subject. So understand should
So
the
there is no
student
question
should
of
be
balancing
capable
here.
of understanding
Because
the
the total
concepts
on both the
so
sides
as
are
to
same.
make their life easier. So learning becomes pleasure and enjoy. So anyone who is interested,
Rent account. You should this
wants
will
to
straight away go to
prepare
trial
their
balance.
exam.
You have to write this as it is.
without
Sales
any
3,700. This will go to sales account directly to
get in touch with me.
trial balance.
I am available anytime
If
for
you
them.
want, you can
24
just write
by
the
7 I am available for them. Thank you. Sharing is caring.
So
So
this will
please
go to
subscribe,
trial
share
balance.
to my channel
Yes account.
because
So balance carried down.
spreading knowledge only
Balance carried down is 3,000.
increases your knowledge.
So this will be brought down
So
again.
dear friends, welcome back. Let us continue with activity 7.2. So Vikram is a sole trader who buys and sells goods.
So
at
discount
random.
received is
So
250.
this
This
is a
will
question
straight away go
from
to
statement of
trial
profit or
balance.
loss. So we need to prepare
Stationery
a
is
statement of
330.
profit or loss.
30 is will be straight away
David
go to
Hopkins'
trial
latest book,
So this is
so applicable
the end.
for 25
This is
26.
what else we need to do in this? So balance the accounts at first and bring down the balance.
So let us just so check out the items whatever are
This is
there.
how you have to.
So before
this
starting
balance.
this, so let's have a recap of
So
how statement of profit or loss is
okay.
prepared.
So
first,
we'll catch up in the
what are the
next
line
class.
items? So statement heading, always we have tried the heading. So always, but sometimes it is given in the question paper itself. So anyways, we will just write down statement of profit or loss, whatever the trader's name and the period and all, or whatever. So what are the line items? So first one, it is revenue. So revenue is nothing but sales minus sales returns. So minus cost of sales. So cost of sales. Do you know what is cost of sales? So opening inventory plus purchases minus purchase returns plus carriage inwards minus closing inventory. So that will give cost of sales. So when we subtract revenue, cost of sales from revenue, we get gross profit. To that gross profit, we add other income. So other income is like discount received, interest received, so rent receivable. So all other income which is not other than operating income will come here. So from that we subtract expenses. What are the expenses? Like expenses incurred, which are like salaries, wages, rent, postage and telephone. All those expenses are taken out. So that will give profit or loss. So it's just 5 steps. So very important. So learn this because often the questions are asked in AS level. Lot of questions are asked on income statements. So that's why we'll be repeating this concept again and again. Like what are the themes and what are the contents. So it's very important. Okay. So now let us just have a look at.
3 जन कैसा से आती है हाँ मैं भी जगह रूम में
So
सोती हूँ
carriage inwards. So this is
हमारे
total
रूम में
cost of sales.
हाँ कहीं को नहीं आती ऐसा ऐसा ओके
This is forming part of cost of sales.
को देख लियो वो डब्बे ले लेके
Carriage
खरीदता
outwards
नहीं
is
है
expenses.
वैसे
So discount allowed is also expense. Discount received is other income. Heat and light expenses. Insurance expenses. Inventory at 1st April 2019. So this is cost of sales. Motor expenses. Purchases cost of sales. Purchase returns cost of sales. We have to subtract. So rent and rates expenses. Sales revenue. Sales returns revenue. Wages and salaries expenses. So inventory at 31st March was valued at 29,143. So this is also cost of sales. So this is how we have to do. Okay. So first, as soon as you see the question, you should visualize where these items will come. So you should visualize where these items will come, so that when you're doing the problem, you should be doing it like a bullet train. So very fast. You should be very fast because the questions will be very tricky sometimes. They will be very somewhat lengthy. If not one question, some other questions may be very tricky. So that's why you have to be very active. Okay, hyperactive. Otherwise, getting very good grades is not at all possible. Okay, so that is remember this. It's very very important. So now let us continue to so what is there? First revenue. There are two items. So sales and sales returns. So that is what is in revenue. Revenue, it is sales and sales returns. So how much it is? Sales and sales returns is 354987. So you need to write this. What is so it is sales. So this is sales returns. So that will give you 354. G51002. us do it in a proper way so that I don't want you to follow the same thing when you're writing. So let me just write it again in a proper format. So see, accounting as a subject is a presentation, more concerned about presentation. So all the steps should be as it is. All the steps should be very formal, very neat and clean, so that each and every concept is explained to the examiner. So first of all, we have tried the heading statement of profit or loss. So in the exams they would have given this actually. So it is not so important. Even then, if they are not given, so I am just writing here for your convenience. That's all. So if it is written, you don't have to write it. So first, we have to start with revenue. So revenue, under revenue, we'll have sales minus sales returns. So this is okay. Next, always write the dollars currency in. Always you have to write. Don't forget to write this. So revenue. So on the top, if you write, it is applicable for all. So you don't have to write everywhere again. So minus cost of sales. So what all is coming in cost of sales? Purchases. So below that, you need to write opening inventory. Okay, don't forget to write opening inventory. Follow, understand, remember, by heart, whatever. So always you have to write it in a proper sequence. Okay, so always. So inventory, what they have given here, inventory at 1st April 2019. Inventory at 1st April 2019. Write the same line item, whatever they have written. See, what I advise you is, as soon as you see the question, you can try answering the question on your own, and then you can cross-check with the solution here, so that you can answer, you can be sure that whatever you have done is right, so that it will increase your confidence, it will boost your confidence, and it will help you prepare for examination with lot of comforts. Okay, so first you try on your own, then only you check this. Don't see this as a movie or as a video or something like that. So please try to work out the question on your own, and then you have to have a look at this. This will be more effective. So learning should be more effective. So it should be with fun also, but it should be more effective as well. So try to answer the question on your own, and then you cross check with this solution whether you understood every concept, everything is clear or what. Okay, so inventory at 1st April 2019, 34096. 34096. Okay, then purchases. To that we need to add purchases. What are the purchases? Purchases 245110. So from this we need to subtract purchase returns. What is the purchase returns? Purchase returns are exactly reverse of purchases. So 5620. So to this we need to add carriage inwards, because when we purchase we get the goods inside. So by default carriage inwards to 305. Normally these are the line items normally, okay, purchases minus purchase returns, carriage inwards. So from that we need to subtract inventory on 31st March. Inventory on 31st March 2020. So it's given in adjustments. Always closing inventory is given in adjustments 29143. Always to put it in brackets so that you don't mess up again. Lot of students they mess up doing calculations. If they don't if you don't put the numbers minus or something like this, you will just make wrong calculations and ultimately the figure will go wrong, so you lose marks. So very important, 34096 plus 245.
So, dear friends, let's continue with activity 1.562. So, this is David Hopkins' latest book. This is from David Hopkins' latest book. Yes, this is
2305 minus
David Hopkins' latest book.
2914.
So, complete the entries for the following table with information taken from the accounts of a trader. So, name of accounts to debit, name of accounts to credit. So, what you do basically, you start with your own. You see the question and answer yourself. Then you can compare with the answers whether you understood or not. Okay, paid rent by check. So what is
cost of sales are subtracted, so you put it in bracket again.
So money is going out means credit what goes out.
This
so
minus is for these
given
items.
So it is bank.
Okay.
So money is
So don't get confused again. So
bank. So bank. So we have to write here bank.
104254. 104.
Paid rent. So rent is an expense, right?
54.
So rent is an expense.
So this is, what do we call this? This is gross profit, correct? So gross profit. So this is gross profit. Okay. So this is gross profit. So this is how it is. So to this we need to add other income.
So postage and stationery paid by check. Again, money is going out of bank. So
this is a comprehensive question. So all items are begin. This is a very good question for practice. Okay. So this is very good question for practice. Try to practice this to learn the line items, so that all the line items are included in this. So it will be easier for you. So you will kindly mark it as important and practice these questions. Often you practice this at least 3 to 4 times you practice, so that the concept is clear and you so that you don't miss out any line item. So yes, obviously there will be adjustments. Lot of adjustments also will be there. So that is another another part. But this is the starting point. So always you have to start with this. Then you have to incorporate the adjustments, whatever. So the format will be the same. So only you have to incorporate the adjustments. Okay. So practice this question. This is very good question because lot of line items are there. Discount allowed. So exhaustive line items are there. So discount received. So this is other income. So this is other income. Discount received.
Why? Because money is going
2067. Discount.
Rent received directly into the bank account. So what is happening here? Money is being received. So bank account will be debited because money is being received. Bank account will be debited. Rent received. So rent.
So you add this. So this will give you one amount. So we don't know.
So you specify because rent can be paid. See here, rent is paid. So here rent is received. So or you can write rent expense account or rental income account. You can write. So rent received also you can write or rent paid account also you can write. But you have to specify because rent paid is separate and rent received is different. So this is an expense.
So from this we need to take out expenses.
Rent is an expense. Okay, whereas this is a revenue. So always we have to specify because we cannot.
What are the expenses?
So that is what is disclosure concept, which says that
carriage
we have
over
to disclose everything.
3, 4.
So paid bank interest received into the bank account. So what is happening? We are receiving money in bank, and we are receiving interest. So interest received we can write. Interest received. So again, interest can be received also and paid also. So that is why we have to specify whether it is received or paid. Okay, so that's why we have to specify whether it is received or paid. So business owner takes money out of the bank account for personal expenses. So what is happening? Drawings is happening.
D10 like
Drawings.
3765.
Money is going out from bank, right? But out of bank account. So bank. Loan received from your friend B. So what is happening? You are receiving loan from your friend. So all the transactions are assumed
Insurance
through bank.
4760.
So you write money is being received in bank account. So but who is giving it? It is Lee who is giving. So create the giver, create the account that gives. So it is the Lee who is giving. So Lee account, bank account. Lee.
Motor
So money is
expenses
coming in bank,
5269.
and Lee is the person. Lee is the account that is giving. Loan repayment made on loan from Lee. So what is happening? Lee, money is going out from bank, and who is receiving? Lee. Lee is receiving or giving. So Lee is receiving. When we repay the loan, Lee will receive. So Lee account will be debited because debit the account that receives. Okay. So B is specific. Be clear. Which account will be debited? You have to be very clear. So then purchases paid by debit card. So whether it is debit card or a check or whatever, always it is money will go out from bank.
So these are the
purchases
expenses.
upon debit.
Okay. So these are the only expenses, nothing else. So how many line items are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12,
debit card obviously money will go out from bank only.
15. Let us just
Unless you have money in bank, money cannot be debited by
1, 2, 3, 4, 5,
sold goods and bank the day.
7.
So what is happening here? Money is coming in bank. And what is happening? Sales. Sales is a revenue. Sales is a revenue. Sales is a credit. So credit all incomes and gains. Revenue.
12. 13, 14.
Return goods to supplier and bank the refund.
1, 2.
So you are returning the goods to supplier. So supplier is receiving. So you will
3,
debit
4, 5, 6, 7, 8.
And money will go out from bank because money is given away
9,
to bank.
10, 11, 12.
So refunded money to customer.
14 line items. Is it correct? 1, 2, 3, 4, 5.
Oh, sorry. So see, return goods to supplier and bank the refund. Return goods to supplier means what is happening?
14. So what we have left?
You are giving away the goods to supplier. Return goods to supplier. So you have purchased the goods and you are giving it away. So credit the receiver, debit the receiver, credit the receiver. Debit no? Yes, but return goods to supplier and bank the refund. And bank the refund. You are receiving the refund. So what we have to do? We have to receive. We are receiving. So bank account will be debited.
So let us cross check. So let us check line by line item.
And
so
we are returning goods to supplier. We have returned goods to supplier. So it is called
sales.
Purchase returns. It is called purchase returns. Correct? No, it is purchase return, not supplier.
Sales return.
It is not relevant. It is purchase returns.
Sales return. So you need to learn even how to cross check sometimes. Okay. So we have to cross check. Otherwise, simply just for a matter of 1 minute, you will lose a lot of marks. Even 1 mark is very is of high importance. So don't be in a hurry. Don't try to mess up. So wages and salaries we have taken 671090. Let us just wages and salaries.
Sales return. And we will credit bank because money will go.
See, we are not taken wages and salaries. Okay. So
carriage inward paid by check, whether it is carriage inward or carriage outward, money always go from bank account. So carriage inward, we have to specify.
So we don't have to. Now we don't have to. Okay. So now we don't have to verify because we have already done it.
So carriage
we found out wages and salaries. There are 15 line items, right? So we have got all the 15 line items. 67109. 67109. So we have taken all the 15 items. So that is how we have to check. Okay. So when we have to cross check, we have to put the ticks like that, and then we have to cross check.
So be careful. So 1, 2, 3, 4 plus 1 equal 8 plus.
So here it will be
7
refunded goods to supplier and bank debited. So they have received the money in bank account.
7
Will be debited and purchase returns will be paid. Purchase returns are opposite of purchases. Purchases are debit, right? So purchase returns are always paid. Okay, purchase returns are paid. So this is how it is. So this is activity 1.2.
98425.
So we'll continue in the next class.
4. So when we subtract this from this,
Students, welcome. So today we'll discuss practice questions
7, 8,
from
9, 6.
cash transactions.
7, 8, 9,
David Hopkins letter
profit. Okay, this is the answer.
So,
7, 8, 9, 6. This is how it is. So we have finished activity
complete
7.2. So you can
what
just
you
have a
do is
recap,
you can
like
just have a look at
statement of profit or
try
always
solving
write
this
the heading.
question.
So revenue, sales minus sales returns. So write the items like this: cost of sales, inventory.
So which of the
purchases,
following
purchase
financial
returns, carriage
transactions
invoice,
is most likely to
inventory at the end.
require a debit
So write
entry?
down everything, then you get one figure. So this minus
What is
this will
debit
get
entry in
gross
the bank
profit.
book?
To
What
that
is
you
being
add other
received?
income. You will
So
got
what you
one
will receive
value.
when you purchase, you
So
will not
from
receive.
that you subtract
When
all
you
the other
rent
expenses. All the
receivable, obviously you will
expenses.
receive.
So
So it will be
you take
debited.
out all the expenses,
Sales
add all
returns
this,
you don't receive.
here. So because this
Wages
is
you
minus,
don't
you
receive.
put it
So
in
this is
bracket.
the thing
This
you
minus this,
receive. So
then
this is
you
the answer.
profit. It's done. Okay. So this is how it is. So now we can.
Amir bought goods for resale and paid for the goods.
So this is the end of
Books record the
activity
delivery
questions
cost.
7.2. Activities 7.2.
Amir bought goods for
So we'll
resale
catch
and
up in
paid
the next class.
for the goods to be
Till
delivered.
then, have a good day.
Which entries in Amir's books record the delivery cost? So
Dear friends, welcome back to Shasha's virtual classroom. So activity 7.3. Produce a statement of profit loss for Samara
So then
that shows the gross
when you're
profit and
selling,
profit and loss for the year.
Amir got goods,
Samara, who
bought
is the
goods.
Samara? Just let us have a look.
You pay carriage
Must be
invoice.
somewhere here.
So this is the so see the a trader takes money from the business bank account for personal use. Which entries record this in his books? So money from business bank account for personal use. Which entries record this in his books? So
a trial balance has been prepared for Samara.
For personal use drawings. So money will go out.
So this is the one. So a seller of women's clothing at 30th April 2020.
So it cannot be we receive when we receive you debit bank. When we receive you debit bank. So obviously when this cannot be the entry. So
rent and rates is given. So here in the question they have given everything like this is an expense.
Practice
This is asset will go to statement of financial position. Revenue is given. This is other revenue, discount
So
received.
what you can do is
This is other income. So this will go to other income.
The next column.
So then
below the
carriage
financial
outwards,
transactions for business open is
sales
necessary.
revenue,
Ledger
inventory.
accounts and close the following financial
1st April 2019, 1st May 2019.
Mira commenced business by paying 20,000.
Is there anything new in this? So inventory at 1st May 2019, electricity, sales return, commission,
paid carriage in
purchase returns,
paid for hailing, heating and lighting, received rent, what more machinery, what more goods.
discount.
So what you can do is you can try working out this question on your
Drawings will not come.
and suppose
So
you have any doubt
statement of financial.
or if you are unable to do
more
it, so you can leave a comment in the
So no much unique items. So I think you can try this question on your own. So even then, let me be just quick. Let me just
finish it fast, so that you can cross check with the solutions. So this is very important topic, that's why I am doing this. So let us continue. Okay, so we'll start with income statement, statement of profit.
Dear friends, welcome to Shaja's virtual class. So today we'll discuss TT 2.1. So this is David Hopkins' latest book, the latest textbook. So we'll start. So below are the financial transactions for max business, personal transactions to the ledger accounts. All goods are bought and sold on credit. Okay, so all goods are bought and sold on credit. So basically, so no bank account is involved here. So other than cash transactions, how to record credit transactions. This is credit transactions. So where no money is being received or paid. So it was easier there to find out. So if you would have found one part, the other part would have been easy. But here, it looks somewhat somewhat complicated. So, but it's easy if you understand the main concept here. What is the main concept? So basically, we need to know
This one is this.
the personal account. The personal account. So whether this account is receiving or giving. So we need to know this. So purchase goods from Tina that cost 2000. So when we purchase goods from Tina is the account that gives, right? Tina is the account that gives. Tina is the account that gives.
Yes.
Tina gives. Okay, when we purchase, obviously Tina gives. So what you can do is you can try working out this question on your own. So then you can compare with the answer here. So first let us make a list of accounts that are necessary. So we need to prepare Tina's account. So we need to prepare Tina's account. We need to prepare purchase account. Because goods are purchased from Tina, right? So purchase account, Tina account.
See if there are purchase returns.
So then sold goods to Ali. So sales account.
Yes, purchase returns are also there.
Ali account. Return goods to Tina. So return goods to Tina means we return only those goods which we have purchased. So it is purchase returns. Purchase returns.
How much? Right.
Then purchase goods from Lim. So Lim account. Purchase account is already there. So Lim account. Sold goods to Omar account. Because sales account is already there. Omar account. Return goods to Tina. Return goods to Tina. Purchase returns again. So Ali sold. Ali, all goods sold to Ali have been returned. So have been returned means we have received back. So it is sales returns. Sales. So basically we need to prepare.
Carefully you have to see. Don't miss out any item.
3, 4, 5, 6, 7, 8 ledger accounts. Basically, we need to prepare 8 ledger accounts. So let us proceed. So let us start with purchase account.
Inventory at 30th April. Closing inventory we have to subtract. So 3760.
Purchase account. So always the ledger should be is to put the date and the currency, date and the currency. Always. Okay, write always the heading. So which account you are preparing? So purchase account. Purchase account is always an expense. So purchase account is always an expense. Always it will be debited. So see, this is how you have to remember, so that the logistics will be clear. So how much? What is the worth of goods you have purchased? And it is on October 1st, 2000. October 1st. So purchases. So purchases account debited with 2000. This is what it means. So a lot of students, what they get confused. So they write something here, no? So the thing if they have debited there, no, it is not like that. Purchase account debit means purchase account is debited. With whom? From whom you have purchased? You have purchased from Tina. So Tina account. So Tina. So you have purchased from Tina. See, purchase account has been debited and Tina's account has been credited. So this is the completion of the entry. So we have to prepare Tina account.
Commission received.
So how do we prepare Tina account?
Discount received. Discount received.
So this side is always debit. This side is always credit. Always date. You have to write always date. Always currency. So what is the amount? So Tina account will be credited. Tina account will be credited means you have to write here. So Tina account is credited. See, this is what. So a lot of students they get confused again. So Tina account credited means Tina account is credited with what? It is credited on October 1st because of purchase. So this is known as completion of double entry. This is known as completion of double entry. So here you have written 2000, here also you have written 2000. See, debit 2000 and credit 2000. Obviously, debit is equal to credit, and one account is debited, other account is credited. So this is what is the first thing you learn in accounts, like what should be debited, the other account will be credited. So this is very important. So next, coming to the next. Sold goods to Ali for $300. So sold goods to Ali. So now we have to prepare sales account and Ali account.
Gross profit plus other income. So there is no name for this particular line item. So forget it. Then next
sales account.
We have to take out expenses. What are the expenses?
And Ali account.
Write all the expenses one by one. From the beginning, rent and rate 480.
So how much? What is the value? What is the date? Always remember to put the date. October 2nd.
Average about 310.
300. October 2nd.
310.
So it is always credit. This side is always debit.
Left to see 1180.
How much? 300. See, sales is a revenue. Sales is always created. Credit on incomes and gains. Sale is always created. Sale account is created by Ali's account. So with a debit to Ali account. With a debit to Ali account. So this is what it means. So now Ali account will be debited. So what date? October 2nd. Ali account will be debited. So Ali account will be debited. So sales. So now one more thing. What is it? So now here we have to see what is Ali doing here. So what is Ali? When we sell goods to Ali, Ali is the account that receives. Ali receives, right? Ali receives. Ali receives. Debit the account that receives. That is what we learned in rules in accounts. So Ali receives. So that is why we have to debit. So debit the The account that receives, credit the account that gives. So this is the main thing you should understand. So very important. Yeah, very important. So a lot of students they get confused with personal accounts. Rest of the account they do easily. Say nominal accounts expenses they write off as an expense. Income account they write off. Revenue account they also write. Assets account debit what comes in, credit what goes out, that also they write. But in personal account they mess up. They get confused. They think from the point of view of max business, but they try to think what max is doing. What max is doing, whether max is giving, max is receiving or something like that. No, actually, you have to see what Tina, what position is in Tina. So Tina gives, Anik receives. So this is what, this is very, very important. Okay, now what has been clear to you. So now it is, everything is easy. So then the account, the entry is complete. Next.
Minus.
So sales account is done, Anis account is done. Now come to
1,830.
the next one. What is the next entry?
This is
Return to Tina that had cost 200. So now you have returned goods to Tina. So here what is happening to Tina? Tina is receiving. Here Tina receives. So Tina account will be debited.
So let us take a picture of the
Tina
profit
account
because
will
we
be
need it
debited.
in the next activity. They have asked for the
Tina
same
account will
activity.
be
They asked
debited
us to
with
prepare
200. On what date?
statement of
Tina
financial
account will be
position.
debited with 200 with on what date?
Break down
On
the number
4th.
9,830. You keep it securely, safely means just
Or
remember it.
Tina account is debited with
In
400.
a notebook.
So,
Then,
but why are we debiting Tina?
there.
Because
So
we have returned the goods to her.
check and
So,
you can
purchase returns.
okay. So this is how it is. So just let's once again you can just cross check with the solution. So before attempting any of the questions, so my request is that you try answering the question on your own, then you cross check with the solution. So the same way we will be even doing the question papers also, like you will have to try on your own and then you have to cross check. So possibly we may discuss a lot of concepts. We will you have a look at all of my
so purchase returns. So purchases is always a debit. So purchase returns is exactly universal. It is always a credit. So
discuss various topics including question papers, whether it is A levels, AS levels, even IGCSE also. So
this is how there are so many ways of removing things.
refer
So
my
why?
channel to your friends
Because it is on October 4th
whoever are studying in A levels
and
IGCSE, so that it will be helpful for you and
we have to credit purchase returns
motivation
with
for
a
me
debit
as
to
well.
Tina.
So
This is how you have to read and you have to understand.
so you can just
Understand accounts.
finish this just
Very
have a look.
important. So
let
that
me know if
the
you have any concerns,
logical
if you have
flow
any
of
doubts
concepts
or
is
anything like that in the
very,
comment
very
section of this
so very, very
so
clear.
that
Logical flow of concepts is very now
if
next.
there are any errors also please let me know, because even I am a human and there are
Purchase
chances
from
that
link that
human
cost
beings will commit
24. So
mistakes,
limit
so that I
another
can
person.
rectify
So
my
again,
mistakes
what is
and
the
let
limit?
you know other your
When you purchase from link, obviously link.
so this is my humble request to you all of my friends.
When you purchase from link,
students,
link gives. So that's why we have to credit link.
End of
We have to credit link. And purchases is an expense. We have to debit purchases.
So
purchases account is already there. So we have to just write there. Purchases account is already there. We have to write there 400. What date?
So see you.
Date is very important. 8.
Till then, have a good day. Good night. All the best. Dear friends, welcome back to Shasha's virtual classroom. So this is a statement of profit or loss. This is David Hopkins' latest book. So today we'll discuss.
So you are ready. So purchase account is debited with
the exam style questions.
Purchase account is
so
debited.
similar questions are asked in base level
and limit account will be credited.
MCQ
It is limit account.
paper. So exam style questions. Which of the following should not be recorded? So just let us just have a look. So which of the following should not be recorded as an expense? Not be recorded as an expense in the statement of profit or loss. Yeah, delivery cost is an expense, discount allowed is an expense, insurance is an expense, drawings is not an expense. So which of the following is included in the calculation of cost of sales? Carriage inwards is included, yes. Carriage outward is not included, discount allowed is not included, discount received is not included. So the initial profit for the year in the statement of profit and loss
This is how you have to understand
number of items have been omitted. So these all items have been omitted. So 1800 is carriage inward. So
then
discount
sold
received is
to Homer for
6200, sales
1100. Sold to Homer.
4100.
So when we sell,
Which are the
obviously
minus
Homer will
items?
receive. So Homer is the receiver. Account Homer receives.
The initial profit, okay. So initial
Homer
profit.
receives.
There is a profit. So
So
profit
Homer
is
receives. So
1700.
Homer account will be debited. Debit the account that receives, right? So Homer account will be debited and sales account will be credited. Sales account is already there. So we have to prepare Homer account and we have to write in sales.
Coming cost of sales
So
or
Homer account and
expense, it is
sales.
always an expense. So that will go to reduce the profit. So it will reduce the profit 1800.
Homer account.
So discount received. Discount received is other income. So which increases.
So Homer account will be debited. Why? Because he is receiving 1100. What date?
Sales return. Sales return is reverse
9th.
of revenue, that is
October 9th.
minus sales. So this will decrease
October
the
9th.
profit.
1100. Homer account is debited. Why? Because we have sold him.
So just
sales. Homer account is debited with sales 1100. So now Homer account is debited. Sales account is already there. So sales account we have to write now. We have to write it in sales. Homer account. October 8.
1800
Homer account.
plus
1100.
6200.
Is it clear? So this is how it is. Okay. So next.
So 17.
Return goods to Tina that had cost 100. So we have return goods to Tina. Okay, we have return goods to Tina. So return goods to Tina means
18,800.
Tina will receive.
This is the answer.
Account
So then
Tina
after
receives.
this, you have a trial balance. I mean, the trial balance extracted from.
So when she receives, her account will be debited. So Tina receives. Return goods to Tina. So it is again we have to return. So it is purchase returns. Purchase returns to Tina. So and it is on 10th. Purchase returns Tina.
What is it?
Purchase returns.
So during the home had taken goods costing 2775 for his own use. So this one you have to subtract from purchases.
Tina.
Minus this. This has not been recorded in the books. Okay, inventory at 31st March.
Purchase returns Tina.
830.
Tina. Where is Tina?
So this you have to subtract. Then let us see what are the other items. Bank, this will go to statement of financial position. Bank loan will go to statement of financial position. Capital will go to statement of financial position. Carriage inward. That is cost of sales. Carriage outwards expenses. Discount allowed expenses. Discount received other income.
All goods sold to Ali have been returned.
Drawings.
So all goods sold to Ali have been returned. So we have sold to him. So when we get back, so it is known as sales returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali has returned. So we have sold to Ali, Ali has returned. Ali is the giver here. So credit the giver. So we have to Ali gives. Ali gives us back. Ali gives. Ali gives us back. We had sold him. At that time we had given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali 11, sales returns and sales returns and
So this is nothing but revenue. So this should be subtracted from revenue.
so we have to credit it. So we have to credit Ali
Again,
because in the
inventory will go to cost of sales.
giver is the giver. Credit.
Now
they
you
give
can try this question on your own. So if you have any doubts, you can please let me know in the comment section.
Why
So
we are creating? Because of sales
because
returns.
we have to do a lot of other stuff. So I'm just
So
not
now
wasting time on doing this because it is a very simple question. I
one
think
more
you can
about
easily solve
sales
it.
returns.
Okay, so this is the end of lesson statement of profit or loss. So we will be continuing statement of financial position in the
Sales
next class.
returns.
Till then,
Sales is always a great.
good night.
Sales returns is exactly reverse of that. It is always a debit. So here the amount will be here and it is on 11.
O level, AS level, and A level.
What is the amount?
Clear understanding of the concepts. Remember, correlate application skills is a must. Proper practice and training is very prerequisite for scoring A+.
Sales returns 300. So there is no so sales returns So next, this is activity. So now what you can do, you can try activity 2.2. So below the financial evaluation business, only cost and calculations to the all books are not attached to the all books to the cost. I put on this trade is so it's only for 1,000. So return goods costing 500 less discounting. So purchase from B that cost 4800 accounting discount. Before the discount of 20%. Paid all money owed. Paid B for goods order 15 on the receive full payment from B. So what you can do, you can try working out this question on your own. And in the next class, you can cross check with the solution. So we will discuss this again in the next class. So till then, have a good day.
You can read the book and you can understand most of it. But let me just explain to you in layman terms, like how you need to understand.
Dear students, welcome back to Shastra's virtual classroom. So this is activity 2.2. Credit transactions from credit transactions, and this is David Hopkins' latest book. So below are the financial transactions for Peng's business. So these are the books of
Let me have a brief
Peng's business.
The need for rules. What is the need
Pen,
for rules?
your pen, whatever.
Rules must be followed because accounts are used everywhere in the world. So different people should be able to understand what one person
post the transactions to the ledger accounts. Okay, so post the transaction to the ledger accounts. All goods are bought and
everyone in the world should be able to understand.
No cash payments,
no bank payments again. Any part of the country or
all goods are bought and sold on credit. So date is number first. So let us make the list of ledger accounts that we may have
followed uniformly.
So bought goods from Ting. So purchases account and Ting account.
Accounting concepts. So accounting concepts are again the same thing. Like
purchases,
some
account
criteria is
Ting account
mandatory to be followed.
Ting account.
Preparation of books.
So cost 5,000 less trade discount.
What is duality?
Should we create trade discount?
To duality, every debit has a.
Should we create trade discount? No, never. Okay. So we should never create trade discount, and because trade discount is never shown
on the,
but the transaction is shown at the net of trade discount. So 5,000 minus 15%. 5,000 15% of 5,000 is 750. So 4,250. The transaction will be shown at 4,000.
So business entity concept. What is business entity concept? According to business entity
purchases account,
even though
sold
the owner of the business
to Lee for 1,000 is the so sales account
who is running the business is considered as an outsider.
Lee account.
So that is why the concept of capital and drawings come.
Sales account, leave account,
capital
1000.
and drawings.
So return goods costing 500 less trade discount to
capital and
10.
drawings come.
So again
So
you are
similarly,
returning the goods.
all
This
the
is
transactions
return
must be
goods.
recorded
So you are
from the
returning
business
to
point of view. So that is
Tinge.
what business
So
entity
who is
concept.
Tinge? So it is he's a supplier. So
Money
we are
measurement
returning
concept.
goods.
What is
So
money
returning
measurement
means
concept?
those
According to
goods
money
only
measurement concept,
which we have purchased will be
everything should
returned.
be
So these are
measurable in terms
purchase
of money.
returns.
All the business transactions
purchase
should be measurable
returns.
in terms of money. It cannot be recorded in kind. It cannot be
purchase
recorded. No
returns.
transaction can be recorded in quantity
Should be less
or
5% trade
terms.
discount.
It should be
So
always
515
measured
is
in
a
terms of
45.
money. So money means either in dollars or pounds
45.
or whatever. So historic cost.
45 means.
So normally the transactions are recorded at historic cost. So suppose one item has been purchased some 10 years back, it will be recorded at that price itself and that will be carried over. So we cannot assume and presume, we should not apply the current cost, the realizable value or whatever. So normally everything should be recorded at historic cost and that should be shown in the
55 or 55. Correct now?
What is realization concept? Say realization concept is
45.
as soon as
55.
a sale is made and when once the invoice is
So
raised,
purchase goods
it should be
from
recorded
B.
as revenue.
So again purchase
recorded as
purchase
revenue.
account is already there.
In case
so
of goods sold on approval,
so cost 4800
goods on
less trade discount of 20%. So this should be recorded at 4800.
So what happens is
minus 20%. So 4800 minus 20%.
It should be recorded as the goods must be recorded as
so
sale only when.
48.
So what is goods on sale or approval? What is goods on sale or approval? So what happens is a person sends goods to another person on the condition that if the customer agrees
3840. So
yes,
3000
the goods are of proper value,
so you have to record it at
then it becomes a sale. So what happens in case of goods on sale or approval? So the goods are sent to the customer.
All money
the
owed.
goods go
so
out,
whatever money you are owed,
and he will receive the goods.
You are paid to take.
Entries are made.
So paid way for goods bought on 15th.
But it will not
so you already
recorded
paid
as sale.
way also.
So it will be
which
should be
account will
recorded
be
as
there?
sale
Bank
only
account.
when
We have to write
the customer
bank account.
gives his consent.
Bank account also.
Approval.
Receive full payment from lay. So that will also be recorded in bank account. So
customer
how many accounts should we open? One.
Gives his consent.
1, 2,
or approval.
3.
So then only it will be considered
4,
as sale.
5.
Otherwise it will not be considered
6,
as sale. It will be considered as goods in transit.
We have to open 7
so it will not be
accounts.
considered as sale.
So
goods on
first,
sale or approval.
You bought goods from
What is
Tinge that cost 5,000.
See, there are certain rules, certain principles which the accountant follows. Suppose, let us say there are two methods of
first you
providing
prepare
depreciation.
purchase
One is straight
account.
line method, and in one is return down value method. So, what does the rule say? If one person follows, if the company follows straight line method, he should be following straight line method several years, throughout the years. He cannot shift from straight line method to return down value method, or from return down value method to straight line method. Or when you come to management and cost and management, there you will come with something across.
So purchases account. So this side is always debit. This side is always credit.
Method of valuation of material. So if one person is one company is following FIFO method, he should be following FIFO method. He cannot interchange.
Because purchases is an expense. So expense account is always debited 4,000 to 50.
So they should be consistent in following the accounting principles. If they are following FIFO method in valuing inventory, they should follow
what is the date? November 1.
Inventory. Suppose if they are following ALCO method, they will be following ALCO method of valuation of inventory. So it should be consistent. Consistently follow. The rules must be
see purchases account debit to Tinge.
Rules or methods.
Tinge. Okay, so
methods
we have to complete the entry by writing it to
So what is
Tinge
materiality? Materiality is dependent from person to person and from business to business. Suppose if it is a large company, small items may be written off as an expense. Small items may be written off. But because if it is a small company, then Small items are also can be recorded as assets.
So tinge account will be created. Why? Because is
So
the
based
giver
on
when you purchase.
what type of business it is and what is the magnitude of the importance of that particular item, the items are recorded. So that is why it's called material.
Why?
How material
Because
the
we have
particular item.
purchased from him.
Based on that, the transactions should be recorded. Matching principle. So this is also known as an accrual.
So this is how
accrual
we have to write. Next
principle. So matching principle means
the
all the assets
complete.
and liabilities,
So
all
the
incomes and
complete.
expenses
Purchases account will be
must
debited with
be
tinge account will
belonging
be
to one
created with
specific period.
purchases.
So you cannot postpone or prepone any expenses or incomes or assets or liabilities from one period to another period in recording anyone from one period to another period. They should match specific period. Specific period is very important. So periodicity. So a specific period. They should match all assets,
Sold goods to leave for
liabilities,
1,000.
expenses and incomes
Sold goods
should
to
match for the
sales
specific period.
and leave.
If they are not belonging to that period, they should be taken out. That's all. So that is what is matching principle. What does prudence principle say? Prudence principle says that all probable losses should be accounted. All probable or prospective. Prospective losses should be accounted, whereas all probable or prospective income should never be accounted unless you are
to leave for 1,000.
So prudence
And number
prudence concept. So it is also known as conservatism concept. So it is also known, as prudential concept. So according to that, all probable or prospective items, if there are expenses
1,000
or losses, they should be accounted.
Sales, because sales is
they
an
should be
income.
considered and
So
recorded
create all
in the
incomes
books
and
of
means.
accounts.
So fifth.
Whereas if the items are
because Lee is the receiver of goods.
all probable
So
incomes, they should never be recorded unless
this side is always
otherwise
debit.
realized.
This side is always credit. By
Going
default,
concern. What does going concern concept say? According to going concern concept,
this side is always
it is
credit.
normally assumed that
By
business
default,
will be continued
so
forever.
dollar November 5th.
Business will be considered
1,000.
as running forever.
Why are we debiting
Suppose
the
if you say
Lee?
you are
Because we have
running
sold
the business for only 1 year,
sales.
who will come and buy goods
So we
from
have
you? Who
sold
will
him.
sell goods to you?
So
No one
debit,
will trade with you.
credit. Sales
So
account
they
will
will
be created
hesitate.
because
What
it's
if
an
you
income.
run away
Lee
and
account
the
will be
other day?
debited
So
because
that is
it's
why
the receiver of the
it is
goods.
always assumed that all
then
all
comes
businesses are going concern, means they run, they are intended, they have been started with an intention to continue forever. Okay, very important concept. So often asked in the exam. So all these concepts are
Return goods
theory-based concepts, but they are often asked. So you have to understand in layman terms, because when they ask in strict
So
case
we are
studies or
returning the
MCQs,
goods
you should be able to tell the
worth 500, but after discount it
substance
is
over form.
455.
So what is
return
substance
to
over
goods
form?
means these are purchase
Like
returns.
where you
Tinge
can
account
say
is already
higher
there.
purchase.
Purchase returns, tinge. So
What
purchase
happens in
returns.
higher purchase?
So purchase returns account.
Unless you pay the last installment,
Purchase
the buyer will not become the owner.
returns.
But in our accounts, what we do, from the day one, we consider them as assets, and we record and we even charge the depreciation. So here, the legal form is that, legal substance is that the asset has not been transferred from the buyer to the seller.
So what is the value?
But
455.
in the form,
so purchase returns. Purchases is a debit. So it is always debit balance. Purchase returns is reverse of
seller. So
purchases. So
the
it's
seller
credit.
record them,
So
and they even charge
455.
depreciation, and they show
So
it
what
as an
date?
asset in their books of
When we
accounts.
have returned?
But
We have
substance is
returned
that, but form is actually something
10th.
else. So that is what
November
it is.
10.
So then
November 10
objectivity. What is objectivity?
November 10. So why? To whom we have returned?
All
we have returned to
transactions must be evidence.
We have
There
returned
should
to
not be
tinge.
any bias. There should not be any bias.
Tinge. So what we have to do? We have to debit tinge. Now we have credited purchase returns. Now we have to debit
for
tinge.
every business transaction. There should be evidence. Proof of
we have to debit.
for
So
evidence.
purchase returns. So November 10.
For every business
November
transaction.
10.
So it's very important.
November 10.
So that is how it is. So
Purchase
understand
returns.
So you can read the book. I mean, you can
We
read
have
the
to
text
debit
based
change.
on this. So try to understand in layman
Sure
terms how
enough.
it is, what it is.
Always
So-
write the dollars.
Lot of
Don't
questions
forget.
are often asked regularly on these
Purchase
concepts.
returns. So purchase
so that,
goods from V that cost 4800.
particularly
So
MCQs.
3840. So purchase and V, and it is on
Case studies.
15th. 15th.
So they are asked. So you should be
15th.
aware of this basic
November
concepts.
15th.
They are very important. Theory,
Purchases
but very
account will be
important.
debited.
Please go through.
3840.
So in the next class, we'll discuss exam style questions
3840.
from this lesson.
So purchase
So
account will be
the
debited.
concept will be
3840. We have
clear.
purchased from way.
So till then, have a good day.
So that's why we have to write V here. So we have purchased from V. So purchases account will be debited. Now we have to
Dear friends, exam style
write
questions
into
from
V account. We have to open, if it is not there, we have to open V account. So when we purchase, we would have given us the goods. So
let's discuss exam sales to questions from accounting concepts. The owner of a business paid for some
15th.
repairs made on his wife's car out of the
number 15th.
business bank
3,000.
account. The amount was
800.
debited to his drawings account.
So
Which
why
concept
we
was
are
applied?
creating
Obviously,
V? Because we have
business entity
purchased.
concept. So according to business entity
Because
concept, the owner is
we have
considered as a
purchased.
note setter. That's why whatever
Purchases
money
account,
is taken out from the business
We
is
have to
considered as
credit
drawing.
V with
It is
purchases
recorded from there.
3840.
So not matching, not present.
So
not
now
this.
coming
This is the
back
right
again,
answer. So
next
business
entry.
entity concept.
So always write the dates. Next
$700
entry.
for business insurance, but 100 out of
Paid
this
tinge
related to
all
first
money owed.
2 months
Paid V for goods bought on 15th
of next
November.
year.
So
Which
we have got
accounting
only
concept
once.
has been
So we
applied?
have to pay.
Obviously matching
We
concept.
have to
Why
pay
matching concept?
V.
Because we
And
have
we have to
to
receive from D. So received.
the
20th we have
expenses
paid
and
to
incomes
tinge and way.
of
20th
that
we have to
period
pay.
should
We have
match.
to
It should be
pay
related to
tinge
that
and
specific
way.
period.
So
So
bank account.
next year, 2 months of the next year should never be accounted. So you should account only the
Assume that all
expenses
entries
of
are
that
made in
particular
bank,
period. So
or you can
this
write
is
cash
correct. So
account
matching
also.
principle
So
has been applied. Matching concept. Matching concept has been applied. So next.
we have to pay to tinge and V. Tinge. How much we have to pay to tinge?
The balances in sales
Obviously the balance. When we have paid on November 20.
A customer who owes $1,500 is known to be in
November
severe
20,
financial difficulties and
we have
may go out of
paid.
business.
So bank.
The figure of trade receivable
paid
shown
how
in the
much?
statement of financial
40
position
to
is
50 minus 455. 40
So-
to 50 minus
You have
4
recorded
by
probable
5.
loss.
So it is
prospective loss.
3795.
So you have applied
So we have to pay
prudence concept
3, 7,
because you have
9,
prudential.
by
So
2.
you are conservative.
So we have
So
paid
you are prudential.
3795
You have
to
followed
tinge.
prudence concept.
Complete the entry. Complete the
So
entry.
a
How
trader
we
sends
complete
goods
the
on
entry?
sale or return
So
to
we
a
have
customer.
straight in
When the
bank
trader
account.
prepares her statement of
Bank
financial
account.
position,
So
the
November,
customer has still not indicated that she has accepted the goods. Which
November
concept should be a trader while she
20.
prepares her account?
So we have
So
paid to
realization
tinge.
concept. So realization
paid
concept is applicable because
3,795.
realization concept says that when the goods
So
are
we have
sent on
to pay
return
to
on approval,
another
it should
person
not
we
be
have to pay
recorded
to
as
V.
sales unless the
We have to
person
pay
to whom
V.
the goods
So
have
let
been
us
sent
see.
indicates his
We have
assent
to
to
pay to V.
buy. So assent.
We, how much we have purchased? We have purchased 3,840. So obviously we have to pay him
To buy.
3,840.
It is called realization
And
concept.
it is on
So
November
realization
20th.
concept is
November 20th.
so this is the end of
we have to pay him.
it's how so simple.
So
So easy concept,
3,840 we
but
have to
very
pay.
important. The questions
So
are often asked in AS
what
level.
account will be
So
debited?
very important topic.
Bank account
So
will
very
be
easy
debited.
also.
V account will be
So
debited. Why?
easily
Because
it's scoring.
V
So
is the
please
receiver. When we pay, he receives.
get a hold
So
of this.
now bank
Try
account will be
to
created. Why? Because
answer
money is
more
going
and more
out.
questions
So
and
we
get a hold of this. Okay. So
given away.
let's
Cash
catch
is
up in the
given
next
away.
class. Till
Money
then,
is
have a
given
good day.
away 3,840. So next, what is there? Next, received
So, dear
full
friends,
payment from Lee.
welcome back to Shasha's
Received
virtual
full
classroom.
payment from Lee.
So today we'll be
we have
discussing
received
exam
full
cell
payment from Lee. So let us see how much we have to receive from Lee. So we have to receive 1,000 from Lee.
From
so we have
statement
received
of financial position, David
we have
Hopkins.
received on November 25th. November 25th. We have received 1,000. So obviously
you can
we will
just
have received from
answer
bank,
yourself and then cross
bank
check with the
account. So you
solution
can
here.
write bank or cash also.
So the owner
So
of
by
the business
default
has
we are
taken goods
assuming
for
that
her
we have
own
received
use.
through bank. So that is assumption.
She has withdrawn, but no entry has been made in the books to record this. Which row will show the effect of this? Which row will show effect of
Bank.
this?
So now
On the statement of financial
25.
position. So
from
she has taken drawings. She has taken goods.
Lee, right?
But
Lee 1,000. 1,000.
It has not been entered.
We have received.
So what will happen?
Over. That's all.
So inventory will be showing
what
more.
else is required?
So it is not possible.
The
This cannot be.
financial transactions
This
for
cannot
Penn's
be.
business,
This
post the
cannot be.
transactions to the ledger accounts.
This can be.
All
and
goods
this
are
can be.
bought and sold.
So
on credit.
because
So
you have taken out the.
So this is the
inventory and you have not shown. So it will be showing more.
You can,
so what will happen on the credit
you can
side?
try answering yourself.
The other effect.
Then you can compare.
The capital should have credited the capital.
So you are confident.
It should have taken out from the.
Is right. So purchases account will be debited.
So it is impossible that it cannot have any effect on capital. It will be too large. So obviously yes, capital will be too large because it will be. It will not have been debited.
Sales
so
account
this
is
is the option. D is
so
the
then
answer.
Lee account is debited.
The following information has been extracted from a statement of financial position at 31st March 2020. So what was the balance on the capital account at 31st March 2020? So they are given non-current assets, current assets. So what is the total assets? Add up this.
That is the end. So
any other assets are there? Current liability is a liability, long-term loan is a liability, profit. So will come in the capital. So drawings also will come in the capital. Profit will obviously credit itself. Drawings will be obviously minus, right? So it will.
Welcome back to Shasha's virtual classroom.
So you add both.
This is activity 2.3.
Plus 54,000.
So let us discuss this problem. So complete the entries for the following table. What you can do, you can just try answering yourself and then you can compare with the solution here. Sold goods to Dia on credit. So complete the entries for the following table. Name of account to debit, name of account to credit.
So assets will be equal to liability.
Sell goods to Dia on credit. So sale account will be created. Sale account will be created.
Equal to liability
debited. Why? Because sale is an income, credit or incomes and gains, and Dia is the receiver of the goods.
So assets are 329,000. So 329,000.
Dia is the receiver of the goods. Dia account
is equal to liabilities plus
buy machinery for use by business on credit from
liabilities 28,000 plus.
So since you are buying business machinery for use by the business, so machinery account, machine is coming in, asset account. So real account, debit what comes in. So machine account, machine is coming in. And who is the giver? Who is the giver of the machine? Joint limited
capital. Capital is not given. So it is balancing figure.
Limited.
But they have given other items.
So then they have purchase goods on credit from Allen
is eliminated. Only these two are given. So 31,000.
Purchase goods on credit
minus
from Allen. So whether it is cash purchase or credit purchase, purchases are always purchases. So you can write purchases. And we have taken Allen is the giver of the goods. And
11,000.
So discount received will never be recorded because this is trade discount. Trade discount is never recorded. So net of amount will be
minus 11,000.
Return goods bought on credit to Allen. Return goods bought on credit to Allen. So whatever goods we had purchased, we are returning it back. So purchases, these are all purchase returns. So purchase returns are exactly reverse of purchases. So exactly reverse of purchases means purchase returns.
You take this side. So
when we return the goods, Allen will receive. So debit the receiver. Debit the account that receives, Allen receives. So bought goods on credit returned by Dia. So goods bought on credit returned by Dia. So what has happened? We have sold this goods to Dia on credit. So we are receiving that.
Take out this
so
also.
Sales.
This side.
Opposite of that is sales return.
This is already minus, so it will become plus.
So we have to credit Dia because Dia is the giver of the
already
goods.
Minus, no? Minus 11,000, right?
Dia has returned the goods.
Drawings.
Return goods to a supplier and bank refund. So what has happened?
This will become plus.
We have returned the goods and we have received
basic maths.
the money.
If you are bad in basic
bank
maths,
money will come in bank
I can
account.
just show you here.
Bank account. So return goods to supplier. So some supplier, so they have not mentioned the name. So we can just write
is equal to
return goods to a supplier. So it is purchase returns. Exactly reverse of purchases. So purchase returns.
So assets is 3,300,000.
So because of purchase returns we have received money. We have deposited in
is equal to liabilities.
So refund money to customer by check for goods return.
95,000.
So now we have to give the money back. Some customer has given us the money. So he has given us back the goods. So it is sales returns.
Plus capital. We don't know. So we can keep it as it is capital. We write it as capital itself. So now 3,329,000 minus 95,000 is equal to capital.
So now pay joint.
So 329,000 minus 95,000.
So money will go out.
234,000.
Money will go out. So who will receive? Joint limited will receive
capital. But in capital,
receive full payment from DIA less cash discount. So we have received
one figure. This is
payment from DIA. Receive full payment from DIA. So we have received
31,000 minus 42,000.
And we have given discount also. Discount allowed also.
Opening capital.
We have allowed discount. Discount allowed is a loss. So even that. So and we have to credit DIA because she is the giver of
profit.
So pay Alan for goods bought less cash discount. So here we have to pay Alan. Alan
this is what is capital, right?
The capital. So Alan account will be debited. So we are paying. So money will go to
capital
bank
plus profit
and
minus
discount received.
So now
is
you do one thing.
Discount
So
received.
you keep opening capital this side. You just take out profit also this side.
Because of discount.
You take out drawings also this side. So what will happen?
So these are the entries.
334,000.
So what you can do?
So plus profit will become minus profit.
This is the.
So you know this is basic maths.
This is
so
activity.
when plus comes this side, it becomes
David
minus.
Hopkins
So minus becomes plus. So minus drawings become plus drawings is equal to opening capital.
Dear
opening
friends,
capital.
welcome back to Shasha's
virtual
class. This is practice questions from
so now opening
David Hopkins lesson number 2, credit transactions. So which are the following transactions? So before attempting this, before having a look at these answers, you can try answering yourself and you can just cross check with the solutions.
What is drawings?
With the discussion. So
44,000, 42,000.
Always get back to me in case you have any
42,000.
doubts by way of comment in the below the.
Is equal to opening capital.
So which of the following transactions is most likely to require a credit entry in the bank account? So credit entry in the bank account is nothing but payment.
So now,
so which of the following transactions is most likely to require a credit entry in the bank account? Cash discount. Cash discount will not come because money doesn't go or come in. Cash sales, money
so
doesn't go or come in.
Let us see, calculate 234.
Payment to a customer. So when we pay,
plus
obviously money is paid. This money is credited.
It's 245.
So, bank account is credited because payment by a customer. See, this is payment by a customer. Payment by a customer means we will receive.
So this is what we want, right? So this is
payment to a supplier.
45,000.
Yes. Is the payment to a supplier.
So the answer
something we pay.
245.
So money goes out. This is the answer.
So it is simple.
So just bought goods on credit from Maria for rupees 200 less
complicated. But
discount of
understanding this, by doing
so
this,
Maria bought goods on credit from Maria.
You can.
So Joe's bought goods on credit from Maria. So Joe's bought goods.
So this is done.
Joe's bought goods on credit from Maria for 200 less trade discount of 30. So 170.
Which of the following is not correct?
So transaction will be recorded at
liabilities plus
170.
capital. This is correct.
Which entries record this transaction
Capital
in the
is equal
Joe's
to
books?
assets
So for Joe's,
minus liabilities.
Joe's has bought, right? So it is a purchase for Joe's.
This is also correct.
It is a purchase. So
Capital minus
we have to be
liabilities is
careful
equal to
in seeing, analyzing. So what
this
Joe's
is wrong.
bought, no? So is a purchase. It is a purchase for Joe's, and it is Joe's books means it is purchase.
This is
In Maria's books, it's a
liability
sale,
is
but in
equal to
Joe's books, it's a
liability is
purchase.
here.
So be careful.
Assets will
So
come here,
purchases.
or
So
if you
purchases
place
will be
this side,
debited
assets minus capital,
170.
this is correct.
So
So
Maria
this is
will
wrong.
be credited.
So this is the answer. Which of the
170.
following is not correct?
So discount is never
So
recorded.
C is
This
not
will never come.
Okay.
Next, it will never be recorded at gross 200. Never at
Fourth,
200.
the following trial balance have been
Never
expected
at
from
200.
Exxon
Never at 200.
books
So this is the only
at 31st December
correct entry.
2019.
So purchases
advertising,
account
bank,
170.
capital, all these things are
Maria
given.
account
So
170.
expenses
This is the right answer.
now is given.
Okay. So next.
So inventory at 31st December, profit for the year was 50,756. Okay. So prepare
next,
excess
Myra
excess
sold goods on
statement of
credit to
financial
Zara
position
on 1st
for
July.
the
Myra
year
sold goods.
December,
Okay, Myra
31st
sold.
December 2019.
Sold goods to
So
Zara
very
on
simple
credit
question.
to Zara
I
on
think
1st July. The goods are
you should
priced
be
at
able to do
1000,
it
but Myra allowed Zara
in a
credit
discrete
discount of
time.
10%. So they will be recorded
Let's
at 900.
have a competition. Let's check who can do it
And
faster.
offer a
So
cash
whether
discount
you
of
or me.
2%.
So
will be recorded at
and we will
900.
see who will be right. Okay.
So cash discount
So
of 2%.
we can just start working out.
Nothing but
And you can
18
just
bucks.
visit
this
this
will be recorded.
solution
This
once
will be
again after
recorded.
you have finished it. So,
She pays within 7
so
days.
let's start.
So now which entries record its transaction in Myra's books? So Myra has sold. So sales entry will be recorded. Myra has sold, sales entry will be recorded. Sales entry will be recorded. Okay. So
non
will be recorded at 900. Yes.
what are non-current assets?
Zara will receive. Zara will pay 882 and discount allowed is 18. So this is the entry. So it cannot be this, it cannot be this, it cannot be this. So this is the entry. So three things will be affected. So 882. So this is the entry, not this, not this, not this, not this. These are exam style questions, and this type of questions will come in AS level. Okay, so be careful. So try to understand, be clear in analyzing the question and write the correct answer. So below are financial transactions for Rachel's business. Post all the transactions to the ledger accounts. All goods were purchased on credit. So this is a ledger book.
Motor vehicle.
So you can try answering this. Suppose you have any doubts, you can get back to me. So as a comment in the below this video. So we'll catch up in the next class with a new lesson. So till then, have a good day.
That's all. So no other correct. So this is
Dear friends,
now come to
welcome back to Shaza's virtual classroom. This is activity 3.1 from
total this
subsidiary books. So
190
books of prime entry. Okay. So subsidiary books or books of prime entry. So these are known as books of prime entry. So
17459 17459 8
books of prime entry. So Junior had the following credit purchases. Junior is the name of the trader. So Junior had the following credit purchases and purchase returns. Credit purchases, purchase returns during the first 10 days of November. So first November purchase goods from Cora for 10,000 credit discount.
Balance is there. So first let us make a list. So what is required? Bank
so purchase goods from Cora for 10,000.
This is required. This is required.
Less trade discount of 20%.
Not required.
So this will be recorded at 8,000. So this will be recorded at 8,000. So Cora allowed a 5% cash discount for payment within 10 days. So 5% cash discount means, so 5% of this is 400.
What are the
So then purchase goods from Prem 14,000.
Inventory is given here.
Allowed 2% cash discount. So there is no trade discount, only cash discount is there. So it will be recorded at 14,000.
35331 inventory. Remember ITC?
And discount, cash discount will be allowed at the time of making payment. So 2% of this is
write it.
280.
ITC, remember ITC inventory should come first. Inventories 35331. 35331.
Return goods to Cora cost 400 less 10% less trade discount. So Cora, so you have sold to Cora at a discount of 20%. So you're receiving back 400. So 400 minus 20% is 4 to the 8. So 80, 320. So it will be recorded at 320. Purchase goods from Cora for 16,000 less trade discount of 20%. So this will be recorded at 16,000 minus 20%.
ITC cash
12,800.
no cash, bank balance is there.
It will be recorded 12,800.
8802.
So cash discount is 5%. 640.
Add and write.
Send checks in for settlement of their accounts to Cora and Brave.
Yes.
So payment has been made. So enter the transactions of for November in Junior's books of prime entry. So what are the books of prime entry in this instant case? The books of prime entry are purchase
176. Add. Yes.
Purchase journal.
88.
Record all purchases, individual purchases, and purchase returns journal. Purchase returns journal. Record all purchase returns and cash book. Cash book.
So now
to record
capital,
cash payments, cash payments and discount. So cash book for payments
capital. What is opening capital?
And discount, cash discount.
Capital is given here. 71,004.
So 3 books we have to write: purchase journal, purchase returns journal, cash book.
Drawings.
So these are the books of prime entry, 3 books of prime entry, and post them to the ledger.
1,500.
Ledger accounts. So how many ledger accounts are there? So purchase account. Remember, purchase account is different, purchase journal is different. So purchase return journal, purchase returns account.
What is the profit?
So then Cora account, Prem account,
507.
Prem account, discount received account.
So just calculate 71,400.
So these are the ledger accounts. We need to prepare 1, 2, 3, 4, 5, 6. So we have to prepare 6 ledger accounts.
Minus 51,500.
So the problem looks very small, but these are all procedural things which you need to know. So to learn comprehensive accounting practices so that everything is clear. So because see, future future lessons will be based out of this. So unless the understanding is clear on this, you will not understand the
minus
future concepts. So that is why you should never sort to shortcuts in. So what most of the students they try to adopt shortcuts. They try to score very high only by practicing near the exams. So which happens very rarely, and it is not advisable to do that. So it is always advisable for you to learn from day one, so that you are perfect in everything. Every understanding, each and every understanding should be clear.
non-current liabilities.
It should be very clear. Okay. So now we will start with this. So if you have already learned in school, you can try working out this question on your own, and then you can cross check with the solution here. So this is how we are going to proceed. Okay. So first we need to prepare purchase journal, purchase return journal. Okay. So let us first prepare purchase journal.
46006. So current liabilities. Current liabilities. What all is included in current liabilities? Current liabilities.
Purchase journal. So what all will come? Date will come. Name of the supplier, because we purchase from supplier. Name of the supplier.
Now we add
invoice number,
yes,
amount
yes,
in dollars. Okay. So first, what is the date?
9059.
So we have purchased on 1st November.
905.
November 1 we have purchased.
So this is total.
So we have purchased from Cora. We have purchased from Cora.
15905.
Invoice number is
So
given.
total assets.
Invoice number is not given, so don't write.
159,059.
So it should be recorded at 8,000. See, remember always, paid discount is never recorded, never shown anywhere. So it will always be recorded at net amount. So 8,000. It will be recorded at 8,000. Invoice number is not given, so it will be recorded at 8,000.
Total assets.
Next.
Capital.
Purchase goods from Prem.
Current liabilities. Total. 159,059.
Again, purchase goods from Prem.
So done.
So again, goods from Prem.
This is
That
the
is
end
on
of,
second November.
statement of financial position.
2nd November from Prem.
Lesson. So practice
So the amount
more and
is-
more questions, because questions are often asked from statement of financial position, and you have to be very fast. And
14,000.
along with this, you may have to do a lot of
Amount is
adjustment questions also.
14,000.
So which we will be continuing from the
Next.
next class. So next class is
Again, you have purchased
based on
goods from Cora
theory.
for
So
16,000.
very important.
So
So
rate
I
discount
have
of
observed a lot of
20%.
students,
Again
they
from Cora.
ignore theory, they focus only on practical questions.
What
thinking
date?
they are more important, and
It
theory
is on
is less
5th
important. So
November.
don't do
You have
that.
purchased
So
on 5th November.
everything is important.
Cora.
Everything is scoring. So please try to learn everything.
So how much?
Okay?
What
So
is the
don't
amount?
skip anything at all. So have a good day. Good night. Take care. Bye.
12,800.
Dear friends, welcome back to Shasha's virtual classroom. So today we'll be discussing statement of financial statements. Statement of financial position.
So what is the
okay?
total purchases?
So today,
So 8 plus 14, 22, 22, 34, 800. So these are the total purchases. This is purchase journal. Now we need to record, prepare
so this is David
purchase
Hopkins' latest book.
returns journal. Purchase.
We'll discuss activity 8.1. So
Returns.
before having looking into this class, I would request you to try answering the question on your
So
own.
what is the date again
So
here?
from whatever you have
We'll
learned in
write the
school,
date.
from your teacher, from wherever,
Right.
so then you can cross check with the solution so that you can confirm your
Name of the
understanding.
supplier.
Okay. So activity 8.1. Chennai Sole Trader had a capital account balance of
So
89,350 on 1st April 2019. During the year, Jana made drawings of 22,720. Prepare the capital account. Okay, so capital account.
so
If
what
the
date?
profit for their of
Return goods on 4th November.
$26,390 had been made.
So November 4.
So close
what
the
is the
closing capital. Next one, B. This is part A. This is part B. Calculate the closing capital
from
using the listing
whom
approach.
we have returned.
If a profit for the year of 26,390 has been made. So you can try on your own based on your understanding. So there are two ways. So what is one way? You have to learn how an account is prepared, what credit will, what will come on the credit side, what will come on the debit side, and list of items, what will be added, what will be subtracted in listing approach. So that way you can do, or
See,
you can
remember one thing.
understand and you can.
So when we are rating
So
the purchase
now
journal, we recording
let us
individually.
discuss
Okay,
the
so
solution.
we we are recording
So
individual
first,
entries.
prepare the capital account. Prepare the capital account. So
See, very important. Okay, so
capital account.
this way you will remember this again.
So capital
When
account
you will
is
remember when you are preparing
usually
control accounts,
in
when you are
format.
reconciling control accounts, at that time you may
So
need
this side is
this
always
knowledge.
debit.
So
This
at
side
that
is
time
always
you may need
credit
this knowledge
by default.
because this is the logistics you have to
So
understand. This is the logistics you have to
will come
understand, and this thing you have to keep in mind when you are doing control accounts, lesson of control accounts. So these are all
And a
interrelated.
capital balance.
Okay, so this is how it is.
Add a capital balance of 89,350.
Then next,
89,350.
what is the next?
So capital balance. Capital is a liability,
entry?
right? So always
Book
it
of
will have
entry, cash book.
credit balance. So remember,
cash
capital is a liability, and always it will have credit balance. Credit balance
So we have to prepare.
it will always come on
cash
the
book.
right
So cash
side.
book order will come.
89,350 by default. Okay, 89,350.
Discount column will come.
This is on what date? This is on 1st April 2019. So balance brought down 89,350. Okay. So then
Since we'll be paying
during their Jana made drawings of 22,720. So drawings are exactly reverse of capital. So where they come, drawings will always come here. So drawings.
So this side is always credit, this side is always debit.
How much? 22,000.
So this is discount column. This is discount.
22,007.
This is
now
cash. Cash column.
Profit of 26,390 has been made. Profit. So profit of 26,390. So profit means
so here
normally it is credit balance, right? Profit is always credit because credit on income and gains. No?
Cash transaction,
So
cash transaction,
incomes always show credit balance.
check.
So profit means
checks
it's
in
the credit
full
balance,
settlement
so
of
it will
the
always
account
come on the
to Cora
credit
and
side.
So we have paid to
390.
Cora and Frame.
26,390.
So we have paid to
So that is
Cora.
profit for the year.
Cora and Frame. But here we need to calculate. So we need to calculate because Cora, what are the transactions you have done with Cora?
So capital account. Done. So those are the items that have been
Cora
given.
you have purchased.
So now what you have to do?
You have
add
returned.
this side
Again you have purchased.
and this side. So
Purchased.
which side is heavier? Obviously this side, right side is heavier.
Purchased.
So if the right side is heavier, it's called excess credit. So excess credit means balance will come here. Balance carried on will come here. So this plus this minus this.
Plus.
So you add both and subtract this item. So 89,350,
12,800.
89,350 plus
Minus
26,390.
how much you have returned?
390.
You have returned is 320.
22,000.
What is the 320?
22,000.
So this gives
93,020. So 93,002
plus
0.
12,800.
This is the amount. So
Minus 320. You have to pay 20,480. You have to pay 20,480.
115,740.
But what is the discount? So discount.
So this is activity. .1. Yeah, this
So
is
discount 400.
So now come to B.
But you have already you have returned goods worth.
So very simple.
320.
So you can.
So what is the discount you will receive here in this case?
1.1A, 8.1.
In this case,
debit this side, drawings and balance, and credit
the
side, balance
discount is
brought down and profit. That's all. Okay. So then we have to add. This is the balancing figure. So this is balancing figure.
So the discount is, cash discount is on the net purchases. So 8,000
So we need to add
is the purchase.
Simple, we have to just plug in
8,000 is the first purchase.
Simple capital account.
Then second purchase is
now prepare it in the form of a statement. So when you are preparing in the form of
4,800,
you have to add these
and there is a
items
return
and
of
you have to supply
320.
these
So
items. So to start
purchase,
with the opening
purchase,
balance,
return. So net
to calculate
purchase is
the closing capital
20,480 and discount is
part
5%.
B, section B.
So be careful.
So
You have to see sometimes the rate of trade cash discount will be different. So in this case, here also it's 5% cash discount. Here also it's 5% cash discount. So there is no variance and it is the same. That's why you can take 5% cash discount on this capital. So you will have to pay 20,480. On that 5% will be 1024. 1024.
So this is,
so how much you have to pay? You have to pay 19,456. 19,456. So to frame, how much you have to pay?
What is the capital?
Frame, so the entire amount you have to pay. So frame is 14,000. Discount is 280. Discount is
So to that we need to add profit 26,390.
14,000. Frame 14,000. Minus 280.
And when we add this and this, how much do we get?
89 less 13,720. So you have to pay 13,15740.
Yes, same. It is the same question again, but you have
so this is the amount you have paid to frame. So what date you have paid?
Yeah.
So date is very important. Don't forget to write the date. The payment is made on 9th November.
Drawings is 22,720.
November 9th. So you have made the payment of November 9th. So this is the cash book. This is how you have to receive record. So discount column 1024, frame 280. So cash and this. So this is done. So cash account is done. So now we have to prepare the ledger accounts. Okay. So now we have to prepare
93,000
ledger accounts.
Same answer you get.
So what are the various ledger accounts you need to prepare?
93,020. So it's very simple. So you have to add whatever is there this side you have to add, and whatever is there this side you have to subtract. You will get the answer.
Now we have to prepare ledger accounts. So purchase account is the first. So first we prepare purchase account. So we have to post all the transactions at 10th November. So what we have to do 10th November. So November 10. So what is the date? What is the amount of purchases? Total purchases. We have already done purchases, right? So what is the total purchase? We have already prepared purchase register. Purchase journal we have prepared. So 34,800. So we have to prepare 34,800. So you have to write 34,800. So purchase journal. See, this logistics is very important. So when you are doing control accounts at this time, you will come to know. So you have to reconcile so many. It's a very important topic, often asked in the exam. So you have to be very careful. You have to be 100% clear on this concept. So when we prepare purchase journal, we record individual entries, but when we enter it in purchases account, we record the total of that. Okay. Similarly, purchase returns. Purchase returns is exactly reverse of that. So November 10. Purchase returns journal. So what is it? $320.
So now we have to prepare other accounts like Cora account. So we have purchased from Cora, so Cora's account will be credited. So always write the amount. Always write the amount. Cora account. So Cora account will be credited. So what date when we have purchased? So you can see from here itself. Cora we have purchased on 1st and 5th. 1st and 5th. First and 5th. So on 1st it is 8,000. On 5th it is 12,800. 12,800. So this is purchases. Purchase. This is purchase. Remember, you are writing purchase here, not purchase journal. Okay. Purchase. 8,000. Purchase 12,800. So here this side. So it will be. So this is number 1. Because purchase journal, it is a journal. Okay. So purchase journal. So this is Cora ledger account. So now next, what is it? So what date you are written? You are written on 4th November. So how much? 320? Yes, 320. So next, frame account. So how much is frame account? So frame account is 14,000. So frame account is 14,000. So this is on what date? This is on 2nd November. Purchases 14,000. Okay. So now come to discount received. So again discount received is again. So discount received is again. So it will be credited. So individually you have to write. Or you can write the total. So discount received is 1304, 13,004. So we have to record that discount received 13,004. So November 10th. So cash book. Dear friends, right here, that's all. So welcome back to Shasha's 13,304. So today we will discuss activity 8.2. This is that's also discount of financial position. So what else is there? This is latest book of David Hopkins. So we'll discuss activity 8.2 here. So let's start. So Raza is a sole trader. The items. So I told 6 ledger accounts. So the last ledger account is cash book. So remember, cash book is book of both the book of prime entry and bank loan ledger also. So cash book is both bank loan book of prime entry and ledger. So no more, it is not required since we have already prepared. So that's all. So that's the end of this.
particular question. See, such a small question, but it took considerable amount of time for you to understand. So prepare, post it to the ledger, understand the various concepts. So understanding various concepts is very, very important. Prerequisite for you to score good marks.
1,27,600. 127,600. So trade receivables 36,085.
Welcome back, dear friends. Welcome back to Shasha's virtual classroom. So today we'll discuss exercise activity 3.2. So enter the following transaction in the books of in lease cash book. So we'll learn how to prepare cash book. So I think you might have understood this. This is very easy topic.
Okay.
But some students may be
before starting this,
confused,
let's
a bit
understand,
confused. So let us discuss.
which
So
are
what you can do
very
is before trying, having a look at my looking at this particular session, you can just try working out the problem on your own, so that your understanding is clear. So always try to work out on your own and then compare the answers, so that the understanding is clear. Okay. So basically I will I would like to let you know that this is a format. Particularly you have to write this in a particular format, or particular, what do you say, in a particular style. So you cannot write it as however you want. So that style is this. So you have to write it in this way. So cash book. So this side is debit and this side is credit. So this side you have to write date, whatever details are there. Then discount. This is one column. So this is one column. So this is another column, and this is another column, and between.
So what are the? So there are 5 line items. Okay. So there are 5 line items, 5 steps.
So again, similarly, this side also there is one column, another column, date, one column. So this is date, one column, date.
Office
So details, particulars, then discount received, one column, cash, one column, bank, one column, and the currency, of course, whether dollars or pounds or whatever. So we have to write here. Okay. So this is how it is. So we have to write this in this particular format. First you write the format. So this side cash book. So this side is debit. This side is credit.
Particularly
so
item amount wise, whichever is
the
available,
date,
we can write that.
whatever your particulars. So first you write this
period of life.
till here. So
you have to follow a specific order.
copy. You have to write
it is
as it is. This way you have to write.
The next one is
Then
current
we will start working out this question. Okay. So this is the question. So enter the following transaction in lease cash book. April 1st, cash sales
important.
1000.
Like whichever are
April 1st. April 1st.
On the basis of realization. So first inventories. Because inventories cannot be easily realized.
One more thing.
Then
so whatever we receive, we have to write here. So all
then
that is received
and bank balances.
We have to write here.
So like this.
And whatever we
then
pay,
we have to write the total of this. So this is the asset side.
Okay, so in other words, if it is debit, so cash book is a real account, cash account is a real account, debit what comes in. So when we sell, cash comes in. When we sell, cash comes in and it is cash. And it is cash. Cash sales 1000, cash is coming in. So cash column 1000, cash is coming in, debit cash. This is cash account. Okay, so cash book, this is cash account, this is bank account, this is discount account. So this is discount account. So this is discount allowed. So this is discount allowed, discount.
From that we need to add.
So this is discount received. Sorry, this is received.
We need to add.
So it's credit. No, it is received. So this is discount allowed.
So that will give closing balance.
So allowed
we
discount.
need to write the capital.
So remember, this is allowed. Okay, so this side, because when we pay at the time
non-current
we receive discount. No, we receive. So it's a credit. So but when we receive at that time we allow discount. So it's a loss. So we write
liabilities which are payable for more than
cash account
after 12
sales
months.
1000.
After 12 months.
Sales amount 1000. So we write
the outstanding.
So we received.
So on the
cash
balance sheet,
upon sale we write.
balance sheet.
So all whatever we receive we have to write here. Whatever we pay you have to write here.
Example,
This is just for you to remember.
This is 31st
This is just for you to remember. So don't write like this.
2020.
So
if
let us see
any
if they are
liability
writing
is
this way.
payable after 31st,
No, see, they are not writing whether it is receipt or paid. So here they are also
2021.
discount received they
After
are written. Okay. So
this is
discount
31st
allowed.
May,
So here
after 1
they
year,
are not
lapse
written
of
whether it is
1
received.
year.
So this is just for you to remember.
It is non-current. It should
So
be recorded
just
as
for you
non-current
so that
liability.
you understand
So
it is
what
easy
are
for you. Okay.
liabilities,
So
right?
don't write
liabilities are
this.
something we
So don't write. This is for you just you
liabilities. What is
for you
current
to
liabilities?
remember. So don't
Current
write.
liabilities
Okay. So don't write.
are
So
the liabilities that are
receive
payable
cash
within a
when we
period
sell
of
we
before 12
receive.
months.
So then what is the
if
next one?
there is any amount outstanding
So
on
electricity
31st May,
charges, electricity paid in cash, payment.
2020.
So we are paying. So credit what
between
goes
this
out.
period
So credit what
and
goes out.
this
Cash
period.
account is a cash account credit. Credit
And
what goes out. So what date?
between
So it is on second.
this period. If
Second,
any
April
liability is
2nd.
payable between
So
this
second.
period and this period,
So credit what
it is
goes out.
current liability.
Electricity.
So basically it is equal less than or equal
How
to
much?
12 months.
100.
So less than or equal to
Cash.
12 months. If any liability is there which is payable
Credit what goes out. Cash has gone out.
months.
Credit what goes out. So next.
Called current. Current means we have to pay immediately. If not immediately,
so we
within
received
12 months.
We have paid and then
Non-current
so
after 12
credit
months.
cash.
After
Cash account will be created
So
and
very
electricity
important.
charges will be
So
debited.
again,
So next.
these things. So
Cash
statement of
sales
financial
800.
position is
So we are receiving cash again. So what date it is?
So
It is on 3rd. 800.
This you have to understand. Just understand what are the line items and where to plug in the figures. And following the particular format is also very
we are
important.
receiving. When we sell, we receive. No, so receive
format.
So it is
very important.
Next.
So now
banked cash. So what do you mean by banked cash? We are taking out cash and putting into bank.
Financial.
So what is the entry when we bank cash? So very important. Okay, so this students often get confused with this entry. Students often get confused with this entry. For that, what you do, you just remember the entry first. Okay. So this is the easy way. Bank cash. Banked cash means you are depositing money in bank. So bank account will be debited.
First we have
bank
to
account will be debited. Cash account will be credited. Cash account will be credited. So banked cash means we are depositing cash into bank. Cash is going out.
Premises.
Cash is going out, and
what is
money
the value
is coming
of
in bank.
Value of premises is
Banked cash. So money is coming in bank.
Which is the
banked
item which is a bit
so money is coming in bank.
Furnitures and fixtures.
Money is coming in bank. So this is bank. So money is coming in
fixtures and fittings.
So how much? 1400. 1400. So money is coming in.
How much is the amount?
Banked cash. So but cash is going out. Cash will go out. So cash will go out. What date?
125. Any other assets are there? Any other fixed assets are there? No, only two fixed assets. So very good. So
banked cash. So remember, always you have to write like this. Okay. So my banked cash. So remember, don't get confused. So bank account will be debited. Bank account will be debited. Banked cash and cash account will be credited because cash is going out, money is coming in bank. So against this, what you have to do here, you have to write bank.
7 to 5.
Against this, you have to write bank, and against this, you have to write cash.
7 to.
And this is called contra. So you have to write it as C here. Contra. Contra means it is affecting both the cash account and bank account on the opposite sides. So this entry will go nowhere, but only affected in the cash book and bank book. So the cash account and bank account, that's why it's called contra entry. Contra entry means money is going out from cash and coming into bank. So remember, when you're writing in bank column, here it should be cash. So see here, bank column.
What is the inventory on this date?
Here it is cash.
51340.
So similarly here also, here it is cash column.
340. So then,
but here it is
receivables.
bank. So So be careful, okay? So a lot of students, they commit mistake, they get confused with this. So the concept should be clear. So understand this. So what is happening? So cash is going out and money is coming in back. Simple, that's all, okay? So then
cash and cash equivalent. See, cash and cash equivalent. Trade receivable.
Stationary paid in cash. So stationary paid in cash means you are making the payment stationary. What date?
36085.
It is on 5th. Stationary.
So then next one, cash balance. Cash balance is there, bank balance is there. Yes, cash and bank balance. So bank
20 bucks.
Cash.
So 20.
So what is the bank balance? Bank balance 3245. What is cash balance? Cash balance is 510.
So we drew 900 from bank for cash flow. So we are taking out money from bank. Okay, we drew 900 from bank. Be careful.
We have taken this.
So now money is going out from bank and money is coming in cash.
Two fixed assets.
This is exactly opposite of this. So we drew 900 from bank. So money is going out from bank and coming in cash. So the entry is exactly reverse of this. So what is happening? Money is going out from
Now
bank
we add together and write. That's all.
Bank
51340
and coming in cash.
Yes.
Cash. Cash is increasing. Money is decreasing in bank account. So remember, okay, cash account will be debited. Cash account will be debited and bank account will be credited. So understand, this is very important. Lot of students commit mistake here also. So they get confused. Understand this. This is very, very important. Withdrew 900 from bank for cash float. Cash float means to keep in office. To keep
62905
in office. For
this is total assets.
Cash.
Your total assets.
Expenses. So that is the meaning. Okay, to keep in office for cash expenses. So we have to
find out total
rupees withdrew 900 from bank for cash. So money will go out from bank and come in cash. So money will go out from
capital
bank. Okay, how much?
The capital
900.
first at the beginning.
What date? 6th. On
Capital at the
6th.
beginning is 169945.
What is happening? Money is coming in cash and going out from bank.
1699.
First you write in bank column. Okay, then you write in cash column. Or you write in cash column and then you write in bank column. First you write this.
What are the drawings?
Then you write the date.
Drawings are here.
Date is very important. So then against this. So what is happening? Money has gone out from bank. So this is payment rate. So money has gone out from bank. So against this here you have to write cash.
So it says there is a loss.
And this is called contra again. So against this is value here. Here you have written in cash column. So here you have to write
145. So put it in bracket.
So this is in cash column.
You just calculate 169945. 169945 minus
cash column.
45.
But you are here against this you have to write back. So be careful. So against this you have to write again contra. Why? Because it is hitting cash on account and bank on another account. Same. So very careful. Okay. So a lot of students commit mistake here. So this is very important. So this is very important. This is very important. Contra entries are very important because lot of students commit mistake here. And cash book problem is very important in AS level. So because it's very important, often asked. Okay. So very important.
So bank loan, which is
So at least in tests, internal tests and all, it is often asked. So a lot of questions are based out of this. So even bank reconciliation statement is based on this. So that's why the concept should be very crystal clear for you. Okay. So the concept should be very clear. So this is the end. So they are not asked to balance. So if you want to balance,
you can write
how we balance?
Yes.
So you add here
2020. So that is current liability. This is non-current liability. Now you
so
write current
we are total
liability.
here. So we total here. So whatever balance is there, balance
bank
carried on.
2020.
So this side here cash
28,330.
bank. So balance carried on. So
330.
what is the balance? So
Then
here this side 1400. Here it is 900. So 1400 minus 900 is 500.
Trade payables 330.
So we write here 500. So here 1800. 1800 plus 900. So 19 plus 8, 27. 27 minus 27 minus 1500.
Add this.
2700 minus
Plus
1500 will be. Okay, so this will be
6140.
1800.
Now you add
2000, so it will be 1180. So here it will be 1180. So now the total on this side, total this side, total this side, total this side, total this side should be same. So here it is 1400. So here it is 2700. This is 1180. 2700. So here it is 1400. So here it is 2700.
332,905.
Crystal clear. Okay. So this is how it is.
Yes. Total assets is 262,905.
So 1
So where is the difference?
minus 1180. If you add all this,
70,000
it should be 10,700. So in other words, when you're balancing, so both the sides should be same. Okay. So here balance brought down. So balance brought down. Whatever is carried down here, it will be brought down here. So 1180. So this will be 500. So this is how it is.
Let us cross.
So end. So this is the end of this activity 3.2.
What are the assets?
Okay. So let's catch up in the next class. Till then, have a good day.
Correct.
So dear friends, welcome back to Shasha's virtual classroom, activity 3.3. So let's discuss activity 3.3. Prepare journal entries for each of the following items. Okay.
150.
So what you can do is you can before having a look at this solution, you can just try working out the question on your own, and then you can compare with the solution. So if you have any doubts, if you have any concerns, you can just leave a message in the comment section. So
total is.
I will be glad to help you. Okay. So prepare journal entries for each of the following items. So first one, purchase motor vehicle for use in the business from Paul, which cost 14,000. This is very simple journal entry. So what is there in this? So first one.
So these are credit balances.
So we'll just write here. So first one.
245 plus.
First one.
510 plus.
So what is happening here? We are purchasing motor vehicle for use in the business. Okay. So very important thing, we are purchasing motor vehicle for use. Suppose we purchase motor vehicle for sale, for use as merchandise in the business, then it becomes purchases. But when we use motor vehicle, it will be recorded as an asset. So why it has come in journal entries here? Because
so
this entry will not go to
so it is 1976.
any of the subsidiary books. Any of the subsidiary books or books of prime entry. So these entries, either of these entries will not go to books of prime entry. It will not go to books of
00. So that is what 70,000. So 197600 means this is not 160
prime entry. So they will not go to books of prime entry. Why? Purchase motor vehicle for use in the business. Suppose if it was purchased motor vehicle for
41725
as a merchandise, as a merchandise means for sale, then this would have gone to purchase book. It would have gone to purchase register or purchase journal. Okay, it would have gone to purchase journal. But since it is motor vehicle for use in the business, okay, for use in the business, it will be recorded in general journal. So it will be recorded in general journal.
The same value.
So what are the various journals? Purchase journal, sales journal, purchase return journal, sales return journal. So those are all different journals. So whatever doesn't come there will come in general journal. So what is the entry here? So motor vehicle account debit to PAL account. So we will debit motor vehicle
332,905. So okay. So now it is matching. See,
credit.
what do I advise to you is in the exams, whenever you get a difference, don't try to find out the
What comes
mistake.
in
Try to
debit,
finish the
asset is
paper
coming
first.
in, asset is coming
So
in.
in fact,
So
what I used to
all
do is I never
all
used
is
to
the giver. So all is the
calculate the
giver of
totals.
motor
I
vehicle.
used to do everything
So that is why this
and
will be
lay out
debit and
this
this will
part.
be credit.
I used to lay out this part. I would not total it.
So they have not mentioned about narratives.
Not total this.
So you can, if you want, you can write the narrative.
Why? Because
so
if in anxiety, what we try to do is we will try to figure out the mistake.
Purchase of motor vehicle.
To figure out the mistake, we'll try to look at the entire problem once again, just trying to check where the difference is. So because of that, we'll be losing almost, we'll be wasting almost 30 minutes, 30 to 40 minutes. Ultimately, whatever we get is just 1 mark. So it is not worthwhile. In the meantime, we would have got around 6 to 8 marks.
Purchase
in
of
other
office
problem.
furniture
So
for business costing.
it is not worth. The opportunity
Purchase
cost
of
is
office
very high.
furniture.
So never try to find out the mistake. Even if you do the total, if you get any mistake, leave it as it is and try to finish the paper first. Please try
Office
and finish
furniture
the
for
paper
the business
first.
costing had
Once
been
you finish
debited
the
to
paper, you come
purchases
back
account.
again and you can cross check.
So office furniture,
office
furniture
will
are
not be losing
normally
because,
purchased
you have
to
finished
keep
all
it
the
in the
paper
office.
and then
So,
obviously if you discover
it
the
has been
mistake,
debited to
then
purchases
you get,
account.
whatever 1 mark.
So what to do? We have to reverse
so
the
just
entry.
because
We have
for
to
1 mark, don't
ask the
try to
rectification entry instead
so
of
it is a
furniture
very
account
important
instead of
advice. It is
furniture
very
account.
important practice.
So what is the right entry? What is the wrong entry?
We have to follow.
So
That
what is
never
the
try
right
to
entry? First, you to understand
never try
this,
to
you should
figure
know
out
what
the
is the right
difference.
entry
Never
and
try
what is
to
the wrong
tally.
entry.
No, that is the
Then
usual.
we
That
have
is
to
the
understand
problem
what
in
is the
most of the
rectification
students.
entry.
What
Okay.
they do is they
So
try
what
to
is the right
tally the
entry?
balance sheet. So they tally the statement of financial
the right
position.
entry?
So
Right
thinking
entry is
that
debit.
they will lose marks, otherwise they may lose out marks. No, nothing like that.
Furniture.
So finish the paper first. Finish the paper. So even if there is
Should be
any
debit
difference, you
furniture.
finish the paper
What is
first.
the wrong entry?
Then you come back. So maybe there are some easier questions which you can do, which you do easily
debit,
without any mistake.
purchase.
So ultimately, you would have got more marks. You would have realized that also. So never do that. Please.
So the right entry is
don't
debit
do
furniture
that.
and
So,
wrong entry is
take
debit
Take
purchase.
this as
So
well
how
as
to do
very
it?
important and
What to do? We have to cancel out this
follow from
and
now
we have
on.
to bring
So,
in this. So we have to
all
cancel
the
this
best. So
and we have to bring
continue in
this.
the next class.
We have to
Till then,
cancel
have a good day.
this. We have to credit and to bring this we have to debit. So what is the entry? Furniture account debit.
Dear friends, welcome back to Shasha's
Debit
virtual
furniture.
classroom. So today we will discuss activity 8.3.
Debit furniture account.
So
Credit.
produce a statement of financial position for Samara
Purchase.
using the information in verb example.
So what happens when we credit purchase? The purchase which has been debited will cancel out. So it will go off. So there should be a debit for credit. So when we have to debit furniture because that is the right entry. So we have to debit furniture and credit purchase. So the entry will be rectified automatically. So, okay, this is the.
So this is Samara.
So next.
So we need to prepare statement of financial position. Statement of
A
financial.
new business opens with 6,000 of equipment, 3,000 of furniture, 1,000 of stationery. It is paid for with 10,000 capital.
Have a look at the
so
items.
6,000 equipment, 3,000 furniture,
in this question.
stationery.
So
Equipment,
as of
furniture,
30th April
stationery.
2020. So statement of financial position at
Debit.
30th April 2020.
Equipment. Debit. Furniture. debit stationery. How much? So this is 6,000, 3,000, 1,000. Okay. So 6,000.
Rent and rate,
3,000.
motor vehicle. So motor vehicle is an asset.
1,000.
So
we have to credit what? Credit capital. Credit capital 10,000.
So we need.
So because
we need
owner
item,
is the giver of all
this
these
item.
So we have to credit
this item
the
in
capital debit because
statement of
these
financial
are things
position.
are coming into the business. These are the things that are coming into the
We don't
business.
need this.
And who is the giver? Owner is the giver. So capital is the giver. So capital, this is the investment, 10,000.
Don't need this.
So that is why this will be credited.
So commission received not required, not required, not required, not required.
Next.
Receivable says, drawing says.
Credit note number 34 for 170 received from B Jones, a supplier, has been posted to C Jones account in error.
So these are the items.
So what is the right entry? Received from B Jones.
So these are the items which we need. So other than this,
we have received credit note.
Items. So 1, 2, 3, 4, 5, 6.
So we have to debit B Jones.
7, 8, 9.
A supplier. Okay. So we have to debit B Jones. So what is the right entry? We have to debit.
Please try working out the solution on your own.
So to understand this again, you have to analyze the transaction properly. What is the wrong entry? What is the right entry? Then what is the rectification entry?
So try
what is the wrong
out on
entry?
your own. So
wrong
the
entry
pace should increase. Actually, your speed should increase automatically. So by doing this way only,
received from B Jones.
Get a hold of.
Okay. Received from B Jones.
Okay.
So we have to credit B Jones.
First we have to write non-current assets, motor vehicle and furniture, fixtures and fittings.
We have to credit B Jones or debit B Jones. We have received, no? So we have received means we have to debit B Jones. We have to debit B Jones.
Non-current assets.
Debit.
So here dollar.
Jones. So this is the right entry.
Don't forget to write the currency, non-current assets.
See, understand the thing. Credit note number 24 for 170 received from B Jones. You have received from B Jones. So you have received a credit note. So credit note means you are getting credit means you have to debit B Jones. Understood? You are getting credit. So you have to debit B Jones. So what is the right entry? You have to debit B Jones. So that is the right entry. So what is the wrong entry? What you have done?
2930.
Instead of debiting B Jones, you have debited
now current assets.
C Jones.
So current assets
you have debited C Jones.
I told you, please remember the concept. Just remember it as ITC.
So how do you rectify this? Obviously, you have to cancel this and you have to bring in this. So what you have to do? You have to debit
given at the end.
B Jones.
Always you have to take inventory will be given here.
So the entry has come in. So to cancel this out, you have to credit. So credit
trade
C Jones. So when you pass this entry will be offset. We already debited C Jones as a wrong entry. So when we credit C Jones, this entry will offset. And to give credit, you have to debit. So we have to debit from B Jones. So this is actually transfer entry, we can say. Okay. Transfer entry. We are transferring from C to B. That's all simple. Okay. So this is also transfer. Which one? This is also transfer entry. This is also transfer entry.
So that there is no double counting or laying out any item.
Because we are transferring from furniture purchases to furniture. Okay. That's all. So this is first one is error of principal. Second is also error of principal.
4 line items we have taken.
So this one is opening journal entry.
Next, current assets.
And this is again error of principal. Instead of debiting one person, we have debited some other person. That's all. So this is activity 3.4. This is the end. So it looks very simple, but understanding should be very clear, very important. So similar questions can come in the examination. So be careful, try to understand. So you need to take a lot of time to understand the concepts. Then only your concept will be clear. Then only you can score better marks. Okay. So don't adopt for shortcut. Please practice, understand, remember, apply,
cash and cash equivalent. So
do
there
lot
is
of
one
hard
bank
work.
balance.
So never try
So
to
bank balance is
resort for
620. Let
any
us check if there is
shortcuts.
cash
Never
balance.
do that.
Let us check if there is cash balance.
So dear friends, welcome back. So this is practice questions from books of prime entry. So the books of prime entry, okay. So books of prime entry, practice questions.
Not there.
So this is David Hopkins' latest book. So then we can just discuss
This
this.
will increase. This will become 0, 8.
So practice questions.
780.
So before having a look at this, you can try working out the problems, questions on your own, and then you can just cross-check with this, and you can compare, you can confirm yourself whether you understood the concept or not. If you have any doubts, you can please let me know as a comment in the comment section. So if you have any doubts, please let me know, we can discuss it. So, and we can try to sort it out, okay? So practice questions. Gina sold goods on credit for 950 less 20% trade discount. So we know we have to record always at a net of, so 950 minus 20% trade discount is 760. So this is the amount we have to record. She allowed a cash discount of 2%. That will be recorded only upon the payment, not in the time of sales. So what amount should be entered in her sales journal? So our sales journal will not be recording this. We will be recording net of trade discount 950 minus 20%. So 950 minus 20%. So 950 minus 20% is 760. So this is the answer. Okay.
Let's drawings.
Then Sai received an invoice from Jaya for 2000 less 10% trade discount. So we have to record this transaction at 1800.
Bank balance also.
So what will be debited? Sai received an invoice means Sai received an invoice means Sai has purchased. So Sai has purchased. Okay. So Sai has purchased goods from Jaya. So Sai has forgotten to enter the invoice in her purchase journal. See,
we had done in the previous class.
So what effect will it have on Sai's account? So what is the entry? What is the entry for purchase? Purchase account debit to Sai account.
Profit or loss.
Purchase account debit.
Profit for their of
purchase account debit.
9,830.
Jaya's account. Purchase account debit to Jaya's account. So you have to debit purchase and credit
get the capital.
Jaya. Why? Because purchases is an expense. So Jaya is creditor. So supplier. So it should be credited. So we have not done this. So it is under added. So this is the correct answer. So simple it is. So if you understood the concept, it's very simple. Otherwise, it's complicated. So don't try to mess up. Take some time to understand the question. So then very concept is very clear. Then let us have a look. What is this? Deepak's transactions for May were as follows: bought goods, sold goods, bought goods, purchased,
repurchased. So bank loan repayable on 2022.
So basically, this is a books of question on books of prime entry. So you have to write various books of prime entry like purchase. Purchase journal, sales journal, purchase return journal, sales return journal, and you have to write cash book also. Then you have to do the posting. So it will take considerable amount of time. So you can try working out this problem on your own. So if you have any doubts, you please let me know in the comment section. So I will definitely
next
discuss this
current liability
question once you let me know. Okay. So till then, have a good day.
So what are the current liabilities? What are the various current liabilities? So we just have a look. Trade payables 1900. What else? What else is there? Let us check.
Dear friends,
so
Welcome back to Shasha's virtual classroom. So this is the practice questions from balancing accounts. Balancing accounts. So we will discuss this. So before this, you can just try answering yourself and you can cross check the answer. Which of the following account is most likely to have a credit balance?
Current liabilities or something?
So a capital account will have credit balance. Obviously, it is capital. Discount allowed is always a debit balance because it is an expense. Office equipment is an asset. So it is a debit balance. Service rent is also
7-1.
an expense.
So you can cross check. So here asset side also.
So again, the question is whether the rent is payable or receivable. Since here it is not mentioned anything, on assumption that this is rent receivable.
710. Okay. So
if it is assumed that rent receivable, then it is a credit balance. If it is assumed as payable,
finished activity 8.
if it is assumed as payable, then it is debit balance. So since it is not clear, we will assume. So we have to choose between these two, capital and rent. So mostly it will be capital, which is always normally likely to be a credit balance.
Dear friends,
so when must the balance of each account be known? Each day, each week, when a bookkeeper is available, when a trial balance is prepared. So obviously when a trial balance is prepared.
Profit or loss. Statement of.
So balance the following account at the end of September. So this is a nominal account, discount allowed. So discount allowed. So
remember
balance. So we have to add it.
It's not
234.
So statement means.
So that is balance.
Side and credit side. So it's not in T column. Statement we can write.
See, balance is 234. So it will be carried out.
And statement of financial.
But it will be carried forward straight away. It can be straight away carried forward to trial balance.
International
so
accounting.
we have to just put the total and carry forward to trial balance.
About presentation, you have to follow the format.
Discount received account. So 110 plus 130, 130.
Specific steps. You have to follow certain rules.
So balance carried out.
Not the rules.
So this also can be straight away carried forward to
credit, but
trial balance.
It is a statement.
So
there are no sections like debit and credit, but we have to follow the rules. We have to present it in such a way that anyone in the world can understand it. So that is why we are following the particular format.
Next one. JNP limited accounts.
Produce a statement of profit
JNP limited account. Purchase returns, bank
or loss. Okay.
So
see each and every word.
This side there is total of 1340, and this side there is total of 740. So what we have to do? So
and profit. Okay, not net profit.
1340.
Okay. So gross profit and profit.
So this side to make it 1340. So it is 740.
Word is important. So how they write?
700.
So when we
put 700 here.
So when we write,
so that will be balance.
You remember?
Character.
First, we have to write
balance character.
Statement
of profit. So both the sides, the always total will match. So 1340.
Statement of profit or loss for Shola.
So if we write 700 here, so this will match. So it will become 700. So it will be
statement
1340. Next. A and B limited. A and B limited account sales
or loss.
So total sales. So we have sold to A and B limited, and we have not received any money from them. So
for
just
the year. For Shola.
So 700
for the year, which one?
Plus 450 is 1150. So 1000
March
150. So it will be balance
for the year.
Carried on.
March 2020.
So 1150 will be the balance carried on. So both the sides it should be 1150.
What students do a lot of I have observed. lot of students, they just write everything and they will not write the heading. Obviously, yes, the answer sheet, the question paper itself will have so many things. So,
So then this one, George account. So what is George account? So George account,
is not there,
we have sold for 2,300 and we have received it, we have settled.
So if it's
So
not there, then you have to
he has paid. So everything is clear. So 2,300 this side,
starting this
2,300 this side. So there is no question of
answering
balance
this.
motor vehicle.
Discuss certain
So
points.
balance character, zero.
I will ask you, okay,
So that both the
remember
sides
it in 5
is the
steps.
same.
Okay, remember in 5 steps.
Cash account. So
Number
normally it will have debit balance. Debit balance means debit side will be heavier. So 800 plus 100 is 900.
Number 3O.
So 900. This side it is 220, 45, 265. So 900 minus 265. 635.
Number 4 and number 5. So first we have to start with number 1. Then we have to subtract
balance
number 2. That will give number 3.
Is 635.
So that we have to
So
add
total, if you put balance
3O. From that again you have to subtract 4. That will give you 5.
So to actually practically do the problem how to balance, you can see cash book problem. So the previous
Cost of
question 4.1, activity 4.1, there I have clearly discussed how to balance, how to write the total, everything I have discussed. So here bank account again. So here credit balance is heavier. Since credit balance is heavier, see 5,300 and this side it is 3,500. So since it is credit balance is heavier, so it will be here this side balance.
So
balance carried on will be this side. So
this plus this
5,300 minus.
So I will discuss what is this. So then
1,800
minus 1 is expenses.
So balance carried on will be 1,800.
This will give.
So this side total it is 5,300. So this side also it becomes 5,300.
So now let us discuss each and every point. So I will ask you certain questions also in the meantime. So
explain why trade receivables account have debit balances, why trade payables have credit balances. So trade receivables is normally an asset. So from which accounts are receivable. So they are always show debit balances because they have received. They owe us money, so whole business money. So whereas trade payable are liabilities.
What is net sales? Net sales is nothing but sales minus sales returns.
Dear friends, welcome back to Shelter Social Class. Today we will discuss activity 5.1. So before having a look at this solution, you can try working out the solution on your own. And you can cross check with the solution here so that you are confident whether you understood the concept or not. Complete the table ticking the boxes and discuss the given the concept and discuss. The first one is completed for you. Daily vehicles is an asset. So before this, let us discuss what it means with revenue, what is expense. So asset is something you have. So it is a resource controlled by an enterprise from which future benefits are expected to go. Something you own and you something that is owed to you is an asset. Okay. So what is liability? Liability is something you owe to some other person. So you have to pay to some other person. So that is known as liability. Revenue or the income is that part of those items which you keep getting and which you can use for your business, running the business operation. So it is income for you. So you can generate it regularly or it is the main source of your operation. So expenses which you incur like salary, rent, all those things.
So always when they
rent is normally
no concept like net revenue. Never. Net revenue is never used. Okay. So always revenue should be used.
So rent is
important.
let's assume it's an expense because
basic things, but lot
since
of
they are not
students they don't
specified.
focus on
So
small
if
small
you,
things,
if
but
you
when they
see
are
other line
attempting
item here, rent
the question
receivable,
paper,
here
they
rent
get
receivable
confused
is
with
there. So
small
this is
small
a
things.
income.
So
So let us
they
assume
confuse
on
when
present
it is
things.
given
So
revenue,
this
given
is
revenue purchase,
rent
they may take one
paid
or the
or
other
payable.
value out.
So this is an
That
expense.
even sales return is already included
Since
there.
nothing is
All
specified,
these
you
things
see the amount here.
there may be
So
a lot of
if
confusion.
this
So always
was not specified,
the
you would have
concept should
written
be
it as
very
expense
clear. That is why
also
you have to
and
learn
income
the
also. So it is
subject
doesn't make any
in
difference.
depth.
But
In
normally it
A-levels,
is
you have
taken as
to learn the subject
expense.
in depth to crack,
So when nothing is
to get the
specified, when it
best
says
score.
rent,
To get the
it is
best score,
expense.
you have to
So loan is a liability, something which you have
understand
to pay
each and
back.
everything,
So loan you have
whether
given
for
from
each and
someone, you
every
have to pay
term,
back.
whatever
So
it is,
interest
you have to
received. Interest
understand.
received is
Unless the
something
concepts are
which you
very
get on
clear,
your deposit.
you
So
do
when you have
not
kept some money
excel
in
in
bank,
A-levels.
so you have
You
earned
cannot
interest on
excel
that,
for
so that you can use it for your
don't even
purpose.
think
It is
about it.
interest received.
Lot
Interest
of
paid.
students what
Interest
they do
paid is an
near
expense,
the
so it is an
exams,
expense. So we
they
require
try to
it
work
here.
out, they
So
try to
trade
do lot of
receivables.
things,
Trade
but
receivable
because
is
of
an
the
asset. Why?
stress,
Because we
because of
have
the
rolled out
anxiety,
credit and
because
that
of the
person has
stress,
to pay. So these are
they forget
customers'
most of it.
accounts. So
Unnecessarily
trade
they
receivables is
lag
also known as
behind, and their
trade
performance
debtors,
comes down very high.
receivables,
So never do that. So
goods
start
receivables
preparing
all
from the
together
day one.
is known as trade receivables. Trade
From the day
receivables
one,
is something
understand each and
which is
everything. Try
owed to
to
you.
work out
So
more and more
which you
problems.
which is
Then
owed to you.
that will
Okay,
be
so it is
best
an
idea.
asset.
That is the best idea to get
So
A-levels
inventory is also an asset because it is something you have held
first
in your hand. So it has got value, you can sell and you can get money. So it is an asset again.
sales.
So discount alone. Discount alone is an expense because it's a loss. So once you allow a discount, you will not
So they may
you
give
have to
sales also,
your
and
money
sales
will
return
be
also, they may give
not be
revenue also,
getting
sales
any
return also.
thing. So that is
It's
an
not
amount.
like
It
that.
is an expense.
Always it is
Postage is
revenue.
also an
So
expense
remember
because
this is the first question.
postage is the money spent on
So in this
sending
also a lot of students they get confused and
postage
they
to courier or
commit lot of
those things.
errors. I have
So then next
the second
postage is done. Bank account is an asset. So
cost of sales.
normally bank means it is bank balance. So normally bank means it is bank balance.
So what is cost of
So
sales?
it is an asset.
To get this, to make this
So rent receivable. So what is rent receivable? Rent receivable is a revenue. So it is an income
make this revenue.
which you keep getting.
That is
Trade payables.
cost
So
of
trade payable is a
what all
liability
is
because
included here?
it has to be paid. So trade payables are liabilities. So they include creditors. They include bills payable.
So you have
So all those money which are owed by you. So you have got on credit, you have to pay them back. So that is liability.
That is goods only, okay?
Computers is an asset because it is something you have which you
purchased
can use in business, which you are using in business. Wages is an expense.
to get the goods inside the
Discount received is a
company
revenue
or
other income.
factory or whatever. You might have incurred carriage.
So interest received is normally other income. So discount allowed is discount received is also other income.
So remember,
Because
carriage
interest received is not main revenue from operations. Whatever is not from main revenue operations is considered as other income.
So we incur carriage.
So rent receivable also can be considered as other income. So all these are other income. So what are revenue, main revenue? So if it is a finance company, then interest is a revenue. So if it is a trading company, then sales, whatever sales you are making. So that is all revenue. So you have to be very careful with the revenue or other
previous
income.
year, previous month or whatever.
So that is the end of this is the exercise 5.1.
So
Activity 5.1. I hope you have understood the concepts.
that is known as.
So we can proceed
So
further.
to this, we need to add opening.
So welcome back, dear friends. Let us discuss activity 5.2.
What is opening
So
inventory?
and
Opening
we can
inventory
okay,
at the
so
beginning.
activity 5.2. In which ledger would you expect the following accounts? The first one is completed to use. In which ledger?
Before the purchase,
So which
before we
ledger?
have sold all the
So what are the different ledgers? So there is general ledger. So there is customers ledger. There is suppliers ledger.
Whatever we have. So that need to be added.
Okay, so those are the various ledgers. So let us have a look at the various
At the end
ledgers
of the
that are
accounting period,
possible.
some inventory might be remaining. So that is
See, these are the list of ledgers, division of the ledgers. Ledgers can be divided into sales ledger, purchase ledger, general for nominal ledger, private ledger for confidential amounts which are personal in nature
for the year. So this is 31st
and cash
March.
book for the bank and cash funds.
So
we use cash.
in this
So,
case, opening
sales
inventory
ledger
is on
to record
first
sales,
April
purchase ledger to record purchases,
2019.
general, other items other than
There may be
cash
some
and bank.
items lying.
So private ledger, so other than which is not recorded normally, which is a
So
confidential
closing
nature,
inventory will be
and cash book.
31st
Cash
March.
book is for the bank and cash accounts, that is whatever is received, whatever is paid, all those are bank accounts.
So maybe this is, we can
So-
call it 31st March 2019 also we can.
So capital is general ledger again.
This opening will become
So customer who buys goods on credit,
normally we take first
customer who buys goods on credit. So it is
March
we are selling and who is even buying.
because
So
there is
the
a
customer
difference
who
of
buys goods on credit. So when you are selling, the other person is buying. So these are credit sales ledger.
Remember, cost of sales is nothing but purchases plus carriage inward plus opening inventory.
Supplier of office equipment. So whatever it is, whether he is a supplier of goods or supplier of office equipment, whoever it is purchase ledger. So but
Very
since
important.
it is not merchandise, okay, so it is office equipment, it is asset. So we have to be careful, we have to ask ourselves whether it is asset or merchandise. So what is merchandise? Merchandise is those things which you buy to resell. So when you are purchasing office equipment, it is not a merchandise, it is not a merchandise. You are buying it as an asset. So it will be recorded in general ledger.
Whatever you have purchased, if they are of not a good quality, you might return them. So
it will not be recorded in purchases ledger because it is not purchase of merchandise.
So these are called net
So
purchases.
bank account will be recorded in bank ledger itself. Bank or cash book, we can say. Okay, so bank or cash book.
So you can use the word purchases.
The wages is general ledger because it is an expense.
Purchases only, even if there is purchase.
Sales
we not
will be recorded
purchases. We use purchase minus purchase returns. So
in nominal ledger. So
opening inventory plus purchase minus purchase returns plus carriage inward minus closing inventory. So cost of sales is equal to this one. So this will give you cost of sales. This will give you cost of sales.
okay, once again, sales ledger for the accounts of customers that buy on credit only.
So revenue minus cost of sales will give gross profit.
So these are customers that buy for the accounts of customers. Okay, it is not for sale.
So to
Sales, even though you mentioned sales ledger, it is not for sale, but it is for the accounts of customers that buy on credit because customers and sales are related. So purchase ledger. So even though it is purchase ledger,
Gross profit.
it is for the accounts of suppliers. It is not for the account of purchases. It is for suppliers.
Other income is
So general or nominal ledger for assets, liabilities, revenue, other incomes. So revenue is what? Sales, right? Sales. Revenue is nothing but sales. So sales are recorded in other income. So other income is like interest, all those things and expenses. Expenses are again
Other means
purchases.
other than sales, whatever the income, like discount received.
Okay, so all these things are recorded here.
So
Private, so that is the cash book for the bank and cash accounts. So cash book for bank and cash accounts. So very important. So again, often MCQs and all. So keep a note of this. So very important.
Interest receivable or interest received. So all these are
Okay,
known as
so
other income. So all
sales
these
is
are known as other
general
income.
ledger.
So
Okay, so general or
why did I call this as
nominal.
nameless? Why did I call it as nameless?
So
Because
general or nominal.
there is no name
Why?
for
Because it
gross
is-
profit plus other income. You have to just calculate and leave it and write and leave it of that. So there is no name.
Wages is an expense.
So why did I write 3 plus
Okay,
3O?
so be careful. So this is how we have to understand the concepts and so the concepts of basic as you proceed for A levels. If the concepts are not very clear, you will get hiccups. So you will struggle. So you will struggle in A levels to secure very good marks. So there is no shortcut. Please remember there is no shortcut processes. You have to put in lot of efforts. So you have to practice a lot. Try to understand the concept.
That is why you
It's
have to be
very
very
important.
careful. You have to plan accordingly. You have to
Understanding the concept is
calculate in your
very,
mind.
very
You
important.
should know all the steps in your mind.
This is the end of
There
activity
should be
5.2.
logical flow.
So now
Logical,
let us
smooth
continue
flow
with
of numbers
activity
and
5.3.
whatever the words, whatever. So there should be logical flow. So you get
So
something.
activity
So that is named
5.3.
the question mark. Then to that, from that.
So activity 5.3, complete the following sentences by inserting the correct word from the following list. So simple it is. So dash ledger contains the amounts of suppliers from whom the business based on credit.
So these are all the other expenses
Dash ledger contains the amounts of suppliers
for the purpose of after the sale. Okay.
Suppliers.
So see, what is cost of sales? Cost of sales is to make the
Purchase
goods
ledger,
saleable.
purchase ledger.
But after the goods become saleable,
Purchase
there are
is
so many
related
other
to
expenses. Like you have to
suppliers.
pay salaries to the staff.
Suppliers means those who supply material to you. Suppliers
So
means
you may have to pay rent.
those
You may have to pay rent.
who
So you may have to pay
supply
wages. You may have to pay wages to the workers.
or
So you might have to spend on postage and stationery.
merchandise.
Similarly,
Those who supply, okay, those who give
carriage outwards also. Carriage outwards
on
means
credit,
when
okay,
we
so
sell,
on
at that
credit.
time we incur expenses. It is related to sales.
So very important. So
After
don't get
the
confused with
sales have been
suppliers.
paid. So
Suppliers
that's why
means
carriage
you
outwards.
purchase, from whom you purchase.
After the sale has
From
been
whom you
made. So that is
purchase.
why carriage outward. So carriage outward also. Discount allowed.
Purchase.
So discount received is
On
part of other income. Discount allowed is
okay.
coming here.
So the heating and lighting account is stored in the dash ledger and is an example of dash. So heating and account is stored in the general ledger.
After you deduct what you
General ledger or nominal ledger and is an example of nominal account
or loss. So
expense account. Okay. So
what are
expense
the
account
steps?
is
Let us revise once again. Revenue. So that is net revenue.
So goods bought on credit are recorded in the
cost of sales.
goods bought on credit.
That will give you gross profit.
Goods bought on credit are recorded in the again.
So that we need to add other income.
Where do you record? It is non-current expense, purchase, general sales.
One figure. From that we
So we have to choose from this, right? So
what we get is profit or loss. That's good. So remember 5 line items.
purchase ledger contain the accounts of suppliers from whom the business buys correct. So the heating and lighting account is stored in general ledger, correct.
Because why?
Example of
3O. Because
expense account.
lot of
This was
students
correct.
normally
This is
forget.
over.
3O.
This is over.
4. That will give 5. 5 steps. Simple. That's
Then again here.
so 5th step is not a step at all. So
What is
immediate
it?
answer is profit or loss. So this is how you have to do it. So now let us go and work out. Suppose. So if you remember this particular aspect is very important. So if you remember this, questions on income statement, profit or loss are often asked in A levels, AS level, both in AS level and A level. Often they are asked with a lot of adjustments. So first, these are the steps you should know.
Okay, so when they say ledger,
one of the
ledger,
item is not
okay.
there. For example, if opening inventory is not
So
there, you can
then
just leave it.
goods bought on credit are recorded in the
Inventory is not there, you can leave it. So if there is no other income, you can leave it. So opening inventory is not there, you can leave it. You can write 0 or you can just leave it. You don't have to take. So
then
the answer
the dash
depends
is
on
the
whatever the
set
details
what
given.
use in the business for
The
a long
line
use
items,
or
the
not.
items are as per the question. Okay, items are as per the question.
So we have chosen this, nothing is related to sales. You just see the dash ledger contains the accounts of suppliers from whom the business buys on credit. So purchase ledger. The heating and lighting account is stored in the general ledger and is an example of expense account.
It is a big ocean.
So goods bought on credit are recorded in the general ledger.
Too many things are there. But normally these are
So then
the mostly used,
dash in non-current.
commonly, almost 80
So
to
this is
90%.
again purchase ledger whatever. So general
that
ledger.
is why this
So
is just
a
so the items
non-current asset is bought for
right
use in the business
as
for a
per
long
the
period of time.
question
So it is
or
non-current
info
asset.
part. But the steps are almost same. So you have to always follow these 5 steps. 1, 2, 3.
So this is the end of activity 5.3. So very simple thing.
That's all. Okay. So you need
So if I get confused, see again
now come
the
to
concept should be very clear.
having learned all this, then now you can attempt the question. So now delivery cost. When is this incurred? This is incurred to deliver the goods. So they are expenses. Office
So dear
expenses.
friends,
Purchase.
welcome back to Shasha's virtual class. So classification and division of ledger.
Rent and rate.
So let us have a look at the practice questions today. So which amount is most likely to be kept in private ledger? So drawings, interest received, rents, it's always very private. So obviously drawings is very private. So how should the cash discount be classified? So how should cash discount be classified?
Now having understood this, you can solve any number of questions.
Discount allowed is an asset.
Are clear?
No, it is not an asset. It is an expense.
Are clear.
So it is income. No, it is liability. No.
Statement
discount received. Discount received is a liability. No. Discount received is an income. Yes. Expense. No. Asset. No. So D. Explain why it can be useful to group accounts into different categories for the purpose of classification and presentation, and the accounts becomes easier. So discuss why a business may use more than one ledger. So again, for specialization, so we can have a group of people maintaining a specialized in particular group, and it will become easier also to verify and cross check and to keep mathematical accuracy. So this is the end of
what is
practical questions. So let us continue with the next class.
1, 3, 4, 5, 2, 0 minus.
Dear friends, welcome back to Shasha's virtual class. So today we will be discussing activity 6.0. So prepare a trial balance from the following balances that have been extracted from the books of small online retailer at 31st December.
Remember, this is revenue, okay? So you have to write the details like this in a
assets, liabilities,
and the amount whatever you get is revenue.
So based on this,
if only revenue
you
is
have
there,
to
you can
prepare
just write like this. If there is sales return, you can write that. If it is not there, you can just leave it. So revenue
before having a look at this
now
session, I request you to try this problem on your own. So basically, it's very easy and very simple topic. So I think you will be able to do
cost
it.
of sales.
So you can then cross check with the situation.
Purchases.
So prepare a trial balance from the following balances. Okay. So how do we do it?
Let's purchase return. What are purchases? Purchases are 57210.
Subtracted.
Purchase returns are 1605. So when you subtract this from this, 57210 minus 55605.
31st December. Small 100 letter 31st December.
605. So this minus this will give you.
So 31st. So we have to write it in a specific format. So basically,
this is known as.
We will have to write particulars or names of accounts.
So gross profit. So then to that you have to add other income.
So here.
So by default you just write this and leave it. So
debit.
It doesn't. You lose no. You don't lose any marks for writing this. So because normally you forget to write this. So when you are practicing, at least at the time you write. In the exam, if you don't write,
so
but when you are practicing, you just write and leave it. So that in the exam you don't forget. A lot of students make this mistake. So I am telling you this seriously again and again. So a lot of students they forget this. Then again they try to insert because
so let us start.
Time will be wasted.
So
gross profit is the same.
Before starting,
so from that you need to take out expenses like
property.
So what are the expenses?
Property. What is property? Property is an asset. Asset always show debit balance. Property always show debit balance. Motor vehicles. Motor vehicles is an asset. Always ensures debit balance. So office furniture. So remember one thing. What is that? So when you are learning trial balance at that time, you have to remember assets and expenses have
Rent and
debit
rates
balances.
12870.
Normally have debit balances. Assets and expenses normally have debit balances. Similarly, liabilities,
Wages
and
and salaries 53985. Wages
income or revenue have
5398.
credit balances. By default, okay, by default,
You add all this.
they are always assets and expenses.
4 5.
Assets and expenses are always debit balances. Liabilities and incomes are always credit balances by default. Okay. So office furniture is an asset debit balance. So computer is an asset debit balance. Sales is a revenue income credit balance. Sales written exactly reverse of sales, it is debit balance. Purchases is an expense debit balance. Purchase returns is exactly reverse of purchase returns, it is credit balance. Motor vehicle expense is debit balance because it is an expense. Advertising is an expense debit balance. Office expenses is an expense debit balance. Stationery is an expense debit balance. Cash is an asset debit balance. Bank credit. So it means it's a liability. So credit balance. So capital always a credit balance because it's a liability to the business. So drawings always debit balance because it is exactly reverse of capital. So now we can prepare the trial balance.
2 8 0.
So write down all
So that is
the names
the
of the accounts,
you have to
property,
write this
motor
in a
vehicle,
specific
office
way in this
furniture.
particular format. It's very important. Okay, so you have to use follow these rules. You have to practice this. Often you have to practice. You have to remember. You have to use it. So income statement, statement of profit or loss is very important question.
Office furniture.
Often asked in the exam. Often asked in the exam. So lot of questions are often again in the A levels also, AS levels also. They are very important. So
Property
now
100,000.
so
So motor vehicle 18,000.
end of this
Office furniture 14,000.
Continue in the next class. Till then,
Office furniture 14,000. Computer 2,000. Sales 40,000. Computer 2,000. Sales 40,000. Sales return 600. Purchases 6,000. Returns 500. Purchases 6,000. Return 500. Motor vehicle expenses 4,000. Advertising 1,600. Advertising 1,600. Office expenses 1,000. Office expenses 1,000. Stationery 400. Stationery 400. Cash 200. Cash 200. Bank 300 credit. Capital 110,000. Capital 110,000. Drawings 3,000. Drawings 3,000. Dear self, the total is classroom. Today we will be discussing activities. If you add both the sides, comprehensive problem on posting the 150,800, 130,000, and so it will match. Balancing the account. So this is activity. Jonas business has 6.1. So this is done. Opening balances. Okay. So 1st October, dollar is over. Cash. So let's catch up in the next class. Bank account. There are no balances on any other accounts. Okay, there are no balances on any other. Friends, welcome back to the following classroom. So let us discuss activity 6.2 today. October 1st. State which of the type of errors into the following represents. A customer's invoice has been omitted from the sales channel. So we need to mention the type of error. So we need to write the type of error here. So before this, let us have a recap of what type of errors. Paid cash into bank account. And what are the different types of errors? 25%.
So basically, there are 6 types of errors that are when debit and credit totals in the
necessary accounts
and they are records. So type of error of
alleged accounts.
what is error of omission? A financial transaction omitted completely from the omission is nothing but
make out list of ledger accounts. Okay.
Omission is nothing but
let us prepare a list of ledger accounts. So Jana could also cash account. So obviously opening balance.
So the name itself suggests okay. So omit
bank account.
So omission. So
this will come in
omitting means leaving out. So financial transaction omitted completely from the books result in there being neither a debit nor a credit entry for the transaction. This could happen if a transaction is not entered, not at all entered. Okay. So not entered in the book of prime entry. So the entry itself is not recorded. You have purchased, but you are not recorded. You are not recorded. So expensive income you are not recorded. So that is what example is $100 of equipment is bought for cash. The transaction is forgotten and not entered for the statement of the cash account. It is not recorded at all. So there is no debit and there is no credit. Okay. So the next one,
debit card, rent account.
Error of commission. Error of commission means you are giving something more. So commit. Okay, you are giving something extra. So here it is omit. You are leaving out.
Put cash into bank account contrast, so that will go to cash itself. Paid money amount which is skipping 25% cash discount. So you have paid. So you have received.
So here it is. You are giving some extra. If financial transaction is posted with the correct amount to the correct side of the wrong account. Okay. So what you have done, you have posted, but you have corrected. You have posted it to the correct side of the wrong account. Account is wrong, but the account is in the same class. Account is in the same class. So the payment for stationery is posted to the advertising account. Instead of treating it as a stationery expense, you have treated it as advertising. So both are expenses. Stationery and advertising are both classed as expenses. So same class. Okay, so this is very important. Same class. So expense or revenue or asset or liability account, whatever. So it is the same class, but instead of posting to one account, you have posted to some other account. So that is extra you have put in. Error of principle. What is error of principle? So you can so you don't know the account. Suppose someone doesn't know the accounting principles problem. Doesn't know the accounting principles.
You know any of the earlier classes which is based on posting of
he doesn't know the accounting principles. So what he does, instead of recording it as an expense, he may record it as an asset. For example, a financial transaction is posted with the correct amount to the correct side of a wrong class. For example, they have done payment for fuel for a vehicle has been debited to the motor vehicle. So fuel for vehicle is a nominal account debited to the motor vehicle. So it is an asset account. So basically, revenue has been treated as capital expenditure, and capital expenditure might have been treated as revenue expenditure. Instead of the motor vehicles running expense account, motor vehicle expenses are classed as expenses, while the motor vehicles are non-current assets. Okay, so it is wrong class. Ignore it. So what has happened? The person doesn't know where to record. Instead of recording it, fuel for vehicle, he has recorded as motor vehicle itself. So that is wrong. So ignore it. Means he is not followed the accounting principle. Has not followed the accounting rules. Rules are not followed. This is same class.
Okay, next money into the business bank account.
Error of original entry. So what is error of original entry? Original entry. So at the time of recording, the first time. So wrong amount is entered in the book of prime entry. So what is book of prime entry? You record it for the first time. So there itself you have written it wrong. So wrong amount is entered in the book of prime entry for a financial transaction. A purchase invoice is entered on the purchase journal as step. See, yes, it has been entered, but the amount itself is wrong. At the time of entering the amount is wrong. So original entry means book of prime entry. So first recording, first time.
First time recording itself is wrong. So complete the entry. We have right here October 1. So next, complete reversal. Complete reversal of entries. Complete reversal means instead of debiting, they have created. Instead of creating, they have created something like that. Okay. An account that should have been debited has been created, and the account that should have been created has been debited. So a payment made to Sam is debited to the bank account and credited to Sam. So a payment made to Sam is debited. Actually, it should be credited to the bank account and credited to Sam account. It should be debited to Sam account because it is paid. See here the accounting principles. So whatever we have learned in first lesson. So cash transactions and credit transactions you have to apply here. So if you are not understood there, here also you are not you will not understand. So be careful. Okay. So your concept should be logical flow of concepts. It should be logical flow of concepts. So if you have understood everything before this, then even this you will understand. Otherwise, you will not understand this. So please don't try to try shortcuts in learning. Never learn shortcuts. So a payment made to Sam is debited to the bank account and exactly reverse, complete reversal. It is complete reversal. So it is complete. Next, instead of debiting, paid instead of crediting, you have debited. So compensating errors. So what happens sometimes? Errors will off the bank account. So and then so the compensating errors. So compensating means one will offset the other, so that there is no proof at all. So compensate. They compensate one another. What date it is? Second. So two or more accounts that cancel each other out. An invoice of 1200 in sales journal is posted to the customer account as 1000, and the same amount, the sales journal is underwritten to low by 200. The debit balance on the customer's account and the credit balance on sales account will both be underwritten by 200. See what has happened? 1000 and he has gone out from that. Instead of adding 1000, instead of writing 1200, they have written as 1000. And what has happened? One place they have written as 200, and the other place they have not written. So because of that, they cancel out, and the net effect is nil. So the debit will be equal to credit. So ultimately, what it is told here is they cancel out. Simply they cancel out. Okay, so they cancel out, and the error is not at all important. Okay, error is not disclosed. Error not disclosed. Sales on credit to Yash. Sales and Yash. They offset each other. One error offsets another. One error offsets another. So two or more errors that cancel each other. So this is what you need to know. So first you need to understand this. Then only you should do that problem. So now having understood that, now we will discuss here. Okay, customer's invoice has been omitted from the sales journal. Omitted. So error of omission. Opposite side, simple. A purchase of goods for 100 has been entered in the purchase journal. So, purchase journal, original entry. Because first, as soon as we purchase, we are recording purchase journal. So, original entry. Purchase of goods has been entered in the purchase journal. So, it is error of original entry because we have sold goods to you. Because this is the receiver account. Next, discount received from Mari has been debited to Maya's account. So what has happened? They have received the discount, and it should be credited or debited. Yes, it should be debited. Discount received will be debited to one person. What has happened? Instead of debiting one person, it has been debited to another person. What date? 4th. So it is error of commission. 4th and 6th. Because you have given credit, you have given debit to Maya instead of Mari. So you have debited. So it is correct. You have debited to, instead of one person, you have debited to another person. You have just given more. Whatever, whether it is debit or credit, you have credited to one person instead of the other person. So it is error of commission. Payment or advertising I added to the bank account and credited to the advertising account. So what will happen? Payment of advertisement account has been debited. So it should be debited or credited. It should be credited. It should not be debited. Correct, no? So because money will go from bank and credited to the advertising account, so it should be debited to advertising account. So it is complete reverse. Error of complete reverse. Fifth, paid cash into bank. So cash into bank. Cash is coming in bank. Entries were 100 too high overhead on both the heating and lighting and the sales account. Okay, see, heat and heating and lighting is expense. So expense has increased. Expense overhead means expense has increased. So sales account, income also sales account. So income also has increased. Overhead. Okay, both are overhead. So expense is debit. Sales is credit. So what will happen in this case? This is overhead. This is also. So debit is also increased. Credit is also increased. So it will offset. So it is compensating error. So against this, so money is going out. Compensating error. So next, entries 250 were too high. Bank overhead on the heating and lighting. So expense. Against this, you have to write cash. So overhead to the heating and lighting. So expense has increased. Debit. Paid the money owed by check after. And 50 too low under added. So whatever. So expense again it is expense. You have to pay to them. So we have what? It has been under added. So it has under added and it is credit. That is also debit. Discount of 5%. So that is also debit. So this is also debit. That is also debit. Instead of increasing, instead of adding into heating and lighting, it has been added to rent payable account. Both are expenses. So instead of adding one dollar, it has happened. So it is compensated because both are compensating. There is net effect is nil. Expense will increase. Expense will come down. Instead of adding this account, it has been added to this account. So the purchase of office furniture has been debited. So error of principal. Okay, office expense. The purchase of office furniture has been debited to office expense account. So if it has been debited to from bank office furniture, but has been debited to office expense. So principal error of principal. We have paid to. So the rule has not been followed. The person is ignorant about the rule. So rule has not been followed. It is error of principal. That's all. So this is end of activity 6.8. So this is a very important topic. So you have to be very thorough in this concept because this concept again we will discuss in suspense accounts. So where you will have to pass journal entries and suspense account to nullify, to rectify the suspense account and all those things. So this is very important lesson. It will actually break your head if you don't understand this concept. So try to understand this concept very clearly. Be thorough in this lesson. It's very important, particularly errors and how they are passed. So unless you know how to move forward, you don't know how to move back. So moving forward is first thing you have to know, then moving backward. So that is why a lot of students, they struggle near the exams. They struggle because nothing will enter into their head. So students should start learning from the day one so that they don't struggle near the exams. They have to struggle from the beginning, not near the exams. So ultimately the end result will be zero. So never do that. So next, paid for stationery by cash. Dear friends, let's continue with stationery by cash. What? Activity 6.3. It is on 6. See, an inexperienced bookkeeper has extracted the trial balance on 31st December 2021. It does not balance. Rewrite the trial balance. And correct the errors. So basically, we need to rewrite the trial balance. If there is any mistake, we have to do it. So you know, all expenses, all assets and expenses. 6. You have paid stationery are debits by cash. So all incomes, all liabilities, stationery, and revenue or incomes are stationery. Money will go. So their credit expenses. Okay, remember? So this is the basic rule here for trial balance. Remember this.
So through cash,
All expenses and all assets and expenses are debits by default. All liabilities and revenue incomes are credit by default. Okay, by default. Normally,
stationery with 30, cash.
normally by default.
So now we have to balance.
Very important rule. So before learn this, I had this whatever. So before starting this question, so try to answer yourself and then we can have it. So plant and machinery is a debit balance. So this is correct. Loan from David. Loan from David is a liability. So it is a liability. It should not come here. It should come here.
So 2500 plus 8000 plus 500 is.
So office equipment is an asset. So it is debit. Wages is an expense.
1000.
It is debit. So rent and rates. Rent and rates are expenses. They are not credit. This is wrong. So 3000. Rent and rates.
You write down in pencil here. Write down.
So cash is normally a debit balance. It is an asset. So it is normally debit balance. It is never a credit balance because cash can never be overdraft.
You write down in pencil here. You write down in pencil.
General expenses debit because they are expenses. Normally they are debit balances.
So if you write down, you will get
Sales.
5000.
Yes, they are always credit because
So 10,000
purchases expenses correctly. Discount allowed. And discount allowed is always a debit balance because it is an expense. It's a loss. So not here. So it should come here.
minus 5,000.
And discount received. Discount received is a revenue. It is again other income. So it should not come here. It should come here.
4,250. You have to write.
So bank debit balance. Normally you have to write. Trade receivables. Asset always
Total
total
on both
balance.
the sides become same. So this side is also 10,000.
Trade payables. Yes, trade balance is a liability. Purchase returns. Purchase returns are exactly reverse of purchases. So purchases are debit. So purchase returns are always credits. So sales returns. Sales returns. Sales is always a credit. Sales returns is exactly reverse of that. It is always a debit.
So 1,700. This side is heavier. You write down here 1,700.
So rent receivable. Rent receivable is an income. It is revenue. It's a gain. So it is always credit. It is not a debit.
1,700 minus 570.
Capital is always a liability. Always it is correct. And drawings is exactly reverse of capital.
1,000.
Exactly reverse of capital. Drawings will always come
So that the total on both the sides become equal.
So now you redraw the trial balance, cross check, so it should be perfect and it should be matching. So that's all. So this is a very simple question. So unless you have understood the concepts, if you understood the concept, it's very simple, very simple, very simple. So just do it. And the next one, that's it. So this is activity 6.3. Let's continue in the next class. Till then, have a good day. Dear friends,
So this will be
Welcome
carried
back.
down, two balance carried down.
so this is
will become by balance brought down.
practical questions from
By balance brought down.
trial balance, lesson of trial
So
balance.
only the dates will change. So here it will be October 7th. Here it will be October 8th.
So
Or October
let us discuss. So before logging into this session, you can please try answering the questions on your own, and you can cross check with the solutions here.
So purchase
And invoice has been recorded in J. Smith's account instead of A. Smith's account. What type of error has occurred? So obviously it is
go to the trial balance. So they were here also 5,000.
commission, because instead of giving to one person, it has been given to another person. So it cannot be compensating error.
Here. Because
So it cannot be original entry, error of principal. So it is commission, error of commission. So discounts received $100 for January has been posted to the debit of the discounts allowed
Straight
account.
away go to trial balance.
Which effect this has on the trial balance? Discount received
3,000.
discount received
account
has been posted to the discount allowed,
trial balance.
has been posted to the debit of the discount allowed account instead.
So if you want, you can just.
So discount received is income. So discount received is income. But so it is credit balance.
So this will go to trial balance.
So what has happened?
So it has been debited.
Yes,
Has been posted to the
So
debit
balance
of
credit.
discounts allowed.
Balance carried down is 3000.
Debit of discounts allowed.
So this will be brought down again. Balance
Discount allowed.
brought down.
So what effect has this on the?
So discount received is 250. This will straight away go to trial balance.
So 2 little
Stationery is
debit.
330. 30 is will straight away go to trial balance.
No, this is wrong.
So this is
And 100 too much credit. This is wrong.
over.
100 too much debit.
This
Correct. So it can be 100
balance
too much
accounts
debit.
at first.
Let us see 100 too much debit and 100 too little credit. Correct. So this can be the effect. No effect on the travel customer. This is the right
This
answer.
balancing.
Because a credit has been affected as debit, so it will have too much
Okay. So
too much debit because you have debited. Discount received is a credit, so you have debited. So it is debited, and you are not credited to discount received. So you have not done this. So it is too less credit. So this is correct. Next. Which of the following is not a reason to prepare a trial balance? To check that the total of debit balances is equal to total of credit balances. To help find errors in the accounts, which is not a reason. Okay. So this is the reason. This is the reason to increase the sales of a business. That's also. It's not a reason. Okay. To prepare monthly reports for managers. So this is not a reason to increase sales. That has nothing to do. Trial balance cannot help increase the sales of a business. So the following balances have been extracted from these books. So you can try working out this question on your own. So since you have learned all the lessons till now, so prepare trial balance. So capital is the balancing figure. So you have to put properly debit and credit, and then so let us just cross check once. So sales is the credit, so it will go to credit column. Sales return is debit because it is reverse of sales. Purchases is debit. Purchase returns is credit, exactly reverse of purchases. Wages and salaries is debit. Heating and lighting is debit because it is an expense. Rent payable is a debit because it is an expense. Rent receivable is a credit because it is revenue. Traveling expenses is debit. So telephone expenses is debit. Discount allowed is again debit. Discount received is credit. So plant and machinery is debit. Cash is debit. Bank is also debit. Anyways, it says debit balance itself, so it is debit. So trade receivables, again it is an asset, debit. So trade payables, liability, credit. Loan from Ting, liability, credit. Drawings is a debit. So balancing figure is, so capital, so basically it should be credit, but it can be debit also. So cross check, just check and put the balancing figure. It should be the balancing figure or difference. Okay, so difference between debit and credit. So that's all. This is the end of accounting system itself. So we have to continue from the next lesson. From the next session, we have to continue with final accounts, financial accounting. Okay. Have a good day. Till then, bye.
Dear friends, welcome back to Shasha's virtual classroom. So today we'll be doing practice exercises from credit transactions. This is from David Hopkins. Suppose the following transactions in the books of Gerard. Okay, so if it helps, write down the names of accounts. So if it helps, write down the names. These are tips. Okay, so these are the tips. So write down the names of accounts you should debit or credit before you start posting the transactions to them. Work out the amounts of trade and cash discounts before you post them to their correct accounts. So first let us calculate the amounts. So trade discount, purchase goods from car which cost $3,000 less trade discount of 10%. So 3,000 minus 10% is $2,700. So then sold goods to lie $600, it will be like that only. So return goods which had cost by rod 200 less discount to car. So 200 less discount. So it was you had sold here, right? So car. So you had sold here. Now so it is being returned. So 20,000 less 200 less 10% is dollar 180. 200 minus 10% is 180. So purchase goods on which cost 200 before trade discount of 10%. So before trade discount of 10% means so again it will be dollar 2800 minus 10%. 2800 minus 10% is minus 280. 2800 minus 10%, 2520. So it's 2520. So trade discount is never recorded. Remember that. So trade discount is never recorded. So it is 2520. Sold goods switch in for 1300. So no discount here. Large return goods which had cost him $200 less. So this is lie. We are sold for 600. Lie return goods which cost him $200 less discount. We didn't give lie any discount. So have we given any discount to lie? No. So then this will be as it is. So $200. So there is no discount. It was not given. So it will not be given again. So it will never be given. So even though the question says like that, but we are not supposed to suppose, because here they are not mentioned whether we have given them any discount. Or it may be that there is a mistake. There is a mistake, printing mistake. So if that is the case, then yes, because everywhere it's 10% trade discount. So let us consider it's 10% trade discount. It will be $540. So here it will be lie return which it cost 200. So minus 10% will be $180. Then Gerard paid car and link the amounts due to them after deducting 5% cash discount. See, so many big calculations are there. Lai and Chin paid Gerard the amount they owed him after deducting 5% cash discount. So again you have to calculate. So how do you calculate? So wait, let us see how to calculate. So this is here. So write down. So Gerard. Okay, so Gerard. These are the books of Gerard, right? These are the books of Gerard. Gerard paid call. So we are paying to call. So remember, whose books? Gerard books. Gerard will never come. So car and look. Okay, car. Car, how much we have to pay? Car we have sold 2,700 minus we have returned. He has returned 2,780. So 2,700 minus 180 is equal to 2520.
So why? Because of that.
2520 we have to pay minus 5% cash discount. So this will be recorded. So this is cash discount.
So finally, the books of account, ledger account will appear.
We recorded. So that will be how much?
Capital account, ledger account.
Five.
Whatever we receive, we have written here.
Wait,
Whatever
2394.
so capital account is always credited. Capital account is credited.
What is cash discount?
So
Cash
because
discount
ledger
is
account, we have given loan, so our account is credited. Equipment ledger account, it is
2520 5%.
so we have paid by that. So complete
Plus
complete.
126.
So rent ledger account, so rent is an expense. Wages ledger is so wages and ledger account.
Now 4 is over.
Similarly,
So now lie.
purchase ledger account,
Sold goods to lie 600.
ledger account is credited with $1,000.
Sold goods to lie. Foreign limb. So limb. Again here limb. Foreign limb you are paying. So limb you write here. Lie you write here. With the other one. Lie 600. How much has been returned?
So that you don't commit mistake.
200. So 540 minus 180 minus yes. It's 360 minus 5%. 5% is cash discount again. Cash.
So, dear friends, let's continue with activity 1.2. So, this is David Hopkins' latest book.
So
This is from David
it
Hopkins'
is equal
latest
to
book. Okay. This is
360 minus 18.
David Hopkins' latest book. So, complete the
18
entries
is
for the
cash
following
discount.
table with information taken from the accounts of
So the net amount
So,
payable will be
name of accounts to debit,
300.
name of accounts to credit. So, what you do basically, you start with your own.
Okay, then
You see the question and
for
answer yourself.
lie and chin
Then you
paid
can
their
compare
own.
with the answers.
Lie and chin. Okay, so now
Okay, paid rent budget. So what is happening? Paid rent budget. Money is going out. So money is going out means credit what goes out. So credit what is given away. So it is bank. So money is given. So
where is
bank
limb?
account. So bank. So we have right here.
For over, lie over, for over, limb. Limb is 2800. That is 2520. So are we returning anything?
Paid rent. So rent is an expense, right? So rent is an
returning
expense.
anything?
Debit all expenses and losses. Rent account.
Are we returning anything to limb? No, we are not returning. So 2520 minus 5%. So that is equal to
So postage and stationery paid. Again, money is going out of bank.
into 5
So postage and stationery is an expense.
126
So debit. Postage and stationery only you can do. Postage.
minus 126, which is cash
So
discount.
here, why? Because money is given.
Cash discount.
Credit what goes. Telephone bill paid from the bank account by standing order.
So whatever it is, whether it is standing order or whether it is given, whatever. So money will go out from the bank. So here it will be telephone.
So now Chin. Where is Chin? Chin is here. Sold goods to Chin.
So heating and lighting will paid from the bank account by
Chin has not returned any goods.
So heating and lighting. So heating and lighting expense.
Okay. Chin has not returned any goods. Only Lai returned. Only there are purchases.
We have returned. So what is happening? Wages.
Mr. Gerard has returned to
wages account.
CI.
By bank.
Return goods.
Because money is going out to bank. Rent received directly into the bank account. So what is happening? Your money is being
returned goods which
so
are cost.
Gerard
rupees. Gerard dollar
rent received. So rent.
Lai returned goods
received.
Which had cost.
So you specify because rent can be paid. So rent is paid. So it is rent is received. So or you can write rent expense account or rent and income account. So rent received also you can write or rent paid account also you can write. But you have to specify because rent paid is subtract and rent received is subtract. So this is an expense.
Minus
rent paid rent is an expense.
So that is nothing but 1300.
Okay. Whereas this is a revenue. So always we have to specify because we cannot mess up. So that is what is disclosure concept, which says that we have to disclose everything in detail. So paid bank interest received into the bank account. So what is happening? We are receiving money in bank and we are receiving interest. So interest received we can write.
65.
Again, interest can be received also and paid also. So that is why we have to specify whether it is received or paid. Okay, so that's why we have to specify whether it is received or paid. So business owner takes money out
so
of the
that's
bank
why
account
it is advised
for
that
personal expenses.
first your account, the trade and cash discounts before you post them
out of bank
to their correct
account.
amounts. So first these are so many calculations. See so many different calculations
from
there.
friend,
Though this looks simple, some students make mistakes even in calculating this. So be careful.
To bank.
So then now we'll come to the main part. So which account will be debited by how much and which account will be debited by how much.
So it is the Lee who is
debit.
Lee account. Bank account, Lee account. So money is coming in bank and Lee is the person. Lee is the account that is dealing. Loan repayment made on loan.
Okay, so purchase goods from car.
Lee. Money is going out
which cost 300 less trade discount. So
and who is
we are purchasing from car.
Lee is receiving or giving.
So Gerard is purchasing from car. So purchases account will be debited.
Debited because debit the account that receives. Okay. So be specific, be clear which account will be debited.
Car account
will be very clear. So then purchases paid by debit card. So whether it is debit card.
So why car account will be created? Because car is giving the goods.
So purchases account debit.
He is the person who is giving. Okay. So when we purchase, when Gerard purchased, car gave the goods. He is the person who is giving. This is the account that is giving the goods. Okay. So that's why
you have money in bank.
So amount will be 27. Amount will be 27.
Sold goods and bank that taking. So what is happening here? Money is
so now
bank.
Sold goods to Lai.
And what is happening?
For $600 less in 10%.
Revenue. Sales is a credit. Credit on incomes and gains. Revenue. Return goods to supplier and bank.
So sold goods. So sales account. Sales is an income always.
So supplier is receiving.
And who is receiving the goods? Lai is receiving the goods. So Lai account
and money will go out from bank
because he is receiving. Lai account will be receiving. So that is why his account will be debited and sales account will be credited.
Oh, sorry. So return goods to supplier.
Return goods which had cost Gerard 200 less discount to her. So return goods which had cost Gerard. So this is who is returning.
Giving away the goods to
Gerard is returning. So it is purchase return. So obviously when he returns it will be purchase return. So purchase returns will be exactly reverse of purchases.
So
So purchase returns.
credit the receiver, debit the receiver, credit the receiver. Debit no. Yes, but return goods to supplier and bank the refund. And bank the
Purchase
refund. We are
returns.
receiving the refund.
So how much?
So what we have to do?
It is returned to car. So car is receiving the goods.
We are receiving. So
When you are returning back the goods, car is receiving the goods. So he is receiving.
And we are returning goods
Car
to
account should be
supplier.
debited.
We have returned goods.
So then
So
purchase goods from link which had cost 2,800 before trade discount of 10%. So purchase goods from link. So purchase goods from link means purchase. Again, purchases is always
it is called purchase returns. Correct? No, it is purchase return, not supplier. Okay, so this is not relevant. It is purchase return.
Purchases are always purchases. So purchase account. Goods from link.
So refund money to customer by check for goods return.
Giving the goods.
So it is,
So lim is giving.
This is sales return.
So lim account
when we
is created because lim is giving
we
the
have
goods.
sold the goods,
Okay.
but
Sold
we have
goods to
received
Chin
back. So
for
it is exactly reverse of
$13.
sales.
Sold goods to Chin
Return.
for $13. Sold
Sales return. And we
Chin.
will credit bank because
So
money
Chin
will
is
go.
receiving the goods. Chin is receiving the goods.
So carriage inward paid by check, whether it is carriage inward or carriage outward.
Sales
it always
account.
go from bank account.
Credit.
So carriage inward. We have to specify whether it is
So
carriage
lie
inward
returned
or not.
goods which had cost him $200 less
Carriage outward. Carriage outward is also an
discount. Lie returned means
whether
lie
it is
returned.
carriage
This is
inward or
you have
outward,
sold to
it is
lie.
always considered.
Just here it
So
you
money
have
will
sold to
always
lie
go
and is
from
returning the goods. Maybe they are defective. That's why lie is returned. So lie is giving. So you have to give, you have to credit whoever gives, right? So lie account will be credited. And it is sales return. Sales return is reverse of sales. So it is debit. Sales return account.
So here it will be
So then this is also
refunded
done.
goods to supplier and bank the
Then
receipt.
now
Refund the money bank account.
we,
Debited. And
so
purchase
this is
returns
also
will
over.
be
So
purchase
this
returns are
is
opposite of
Gerard paid car and link the amount due to them after deducting 5% cash discount.
Okay.
So when you are making when Gerard is making the
So
payment,
this is
who will receive?
activity
Car
1.2.
will receive. So car will receive car account and lim also will receive
We'll continue in
lim
the next
account,
class.
car account, debit and credit toward bank account.
Dear students,
Bank account. But one more thing is there. What is that? Discount account is also there.
today we
Gerard paid car. So when Gerard is paying car, he is not paying certain amount. So which is cash discount. So it is discount received. So it's an income.
So before
So discount received will be credited. For car it will be 126.
what you can do is you can just
Okay.
have a look at
Car it will be
try
126.
solving this
And lim it will be again here also discount will come. Discount received will come.
So which of the following financial transactions is most likely to require a debit
So here also it's 126. Both for car and lim,
in the bank book?
discount received is 126.
So what you will receive when you purchase, you will not receive. When you rent,
So bank account will be how much?
well, obviously you
Bank account will be
so it will be debited.
2394.
You don't receive. Wages you don't receive. So this is the thing where you receive. So this is the answer.
What will be the amount? 2520. Right? 20 here also.
Amir bought goods for resale and paid for the goods to be
Right.
delivered, which entries in our
Zero,
books
zero.
record the delivery.
Car and lim.
Amir bought goods for resale and paid for the goods to be delivered, which entries in Amir's books record the delivery cost. So money will go out. Obviously, money will go out. A bank account will be created.
Or how much
Money
will
will not come in. So money will go out.
Or you have to debit 2700. Putting the discount.
Amir got goods, bought goods. When you
This
buy,
is straight
you
discount.
pay carriage inwards.
Trade discount will have in the word, so it will be recorded in this. This will be recorded in this.
A trader takes money from the business bank account for personal use. Which entries record this in his books? So, money from business bank account for personal use.
Then,
which entries
lion chin paid. So, lion chin paid means obviously money will come into bank account will be debited.
So, money will go out.
Bank account will be debited.
So, it cannot be.
So, lie.
When we receive, you debit bank.
Lie pays how much? Lie pays 342.
This cannot be the
Lie pays 342. We receive 342.
So these are
so
practice questions.
Lie.
For David Hopkins, latest book. So what you can do is,
and when we pay, when we are receiving lesser the amount.
So below are the financial transactions for Mira's new business. Open is necessary.
So here there is no discount for
all the following financial transaction to them. All transactions use the bank account. Mira commenced business by paying 20,000. Mira then had the following transactions: purchase machinery, bought goods, so paid carriage inwards, sold goods, paid for hailing, heating and lighting, received, bought more machinery, bought more goods. So what you can do is you can try your own. Suppose you have any doubt, or if you are unable to do it, so you can leave a comment
and discount receipt
in the description, in the comment section of the video. So you can
discount receipt is it's not discount receipt, discount allowance. So when you pay short, it is expensive.
Have a good day.
Discount allowed is so here it is 360.
Dear friends, welcome to Shasha's lecture.
So bank account.
So
here in this case it is
82.1. So this is David Hopkins' latest
discount allowed is
latest textbook. So
65.
We'll start. So below are the financial transactions for max business, personal transactions to the venture accounts. All goods are bought and sold on credit. Okay, so all goods are bought and sold on credit. So basically, so no bank account is involved here. So
chin will be created
other than
this
other than cash, cash transactions. How to record?
So now you have to prepare
credit transactions.
ledger accounts.
So where no money is being received or paid. So it was easier there to find out.
So start doing this.
So it was on one part, the other part would have been easy, but
so
here it is somewhat.
So it required.
It is somewhat complicated. So, but it's easy if you understand the main concept here. What is the main concept?
So dear friends,
so
last class I had
basically we need to know
this is
the personal account.
So this is very challenging because this your concept of
this amount is receiving or
accounts of particular person is very.
So we need to know this. So purchase goods from Tina that cost 2,000. So when we purchase goods from Tina,
suppose the foreign transaction.
Tina is the account that gives. Right?
See what is
the account?
Brian.
Tina
for
is
Brian,
the account that gives.
the transactions will be different. For Ken, the transactions will be different. Because he is buyer, he is the seller, and he is the seller.
Obviously, Tina gives.
So here it has been asked name of accounts to be debited, name of accounts to be credited. So you should not get confused. You should not get wrong. Get it wrong.
So
you are not
you can write.
So your question is
so
your
then you can
both the
transaction
both Brian and Ken.
So first let us
here you ask me to write name
so
of account
we need to prepare Tina's account.
But whose books? Is this
Tina's account?
Whatever you are writing here, are these related to
purchase
Brian
account
or are these related to Ken? So
What is the best value?
Purchased from Tina, right?
Let us
So
for the
purchase amount,
for the time
Tina
being,
account.
we consider this as the books of credit.